Finance Ministry, particularly Mr. Rajaraman, for extending the support as the esteemed partners to this event, and of course BCG to be the knowledge partner as well for putting together a good knowledge paper along with with inputs from all our members. And very happy to share that the conference and the expo has shaped up extremely well. Being the first one, we weren't very sure, but we have 65 fintechs who are showcasing their products and technologies across segments. We have visitors from over 20 countries, including Japan, UK, Germany, Netherlands, Italy, Sri Lanka, Bhutan, Nepal, Bangladesh, Singapore, Philippines, Thailand, UAE, Oman. So I think we can take good advantage of all of this, and a very strong institutional partnership that we have built with the fintech ecosystem across the globe. So we have associations from Sri Lanka, Singapore, Japan, Netherlands, Germany, UK, and Philippines who are there as the support partners to the event. And there are 4 country sessions during the day with UK, Germany, Singapore, and Philippines at very senior levels. And the exposition is obviously, towards the export orientation, as we're looking at promoting the export of fintech services from India. And no better than having Mr. Srinivas, you from the International Financial Center, who are looking to make it as a hub and the possible export opportunity for there. So your presence really makes it, very meaningful out here. And there's a detailed knowledge paper that we have done, wherein we have surveyed about 50 fintech companies through the qualitative and quantitative interviews as well. And we've assimilated that in the form of knowledge paper, which will be shortly releasing, and hopefully will be a good input for all of you. And we've been working a lot with, Mr. Rajaraman, with RBI, METI, etc., to kind of create a facilitative environment for the fintechs over the years. So I think this has kind of helped shape up, a good ecosystem which we're trying to support. And with presence of IBA also today, with whom we do a significant event. Otherwise, also, I think it's a complete ecosystem which is present out here. So very welcome to all of you once again. And I may now invite Mr. Rashesh Shah, the past president FICCI and chairman and CEO Edelweiss Group, for the welcome remarks, please. Over to you, Mr. Shah.
Thank you, Jyoti, and a very good morning, warm good morning to all of you. Great to be here on this very interesting Fintech Expo and Conference for 2021. I think all of us are getting used to this new online world, so I'm very happy that we are continuing to do exciting events like this in spite of COVID and in spite of not being able to be there physically. But this virtual conference and the expo that we have is a very exciting place to be in. So I'm truly glad I'm here and truly very happy to see all of you out here. Fintech is a big word now, and I think almost for the last few years, every time you talk about anything, whether it's insurance, whether it's finance, whether it's banking, and now it's in everything, marketing, I think there is the tech word is attached to it. So financial services has now gone into fintech because we have attached technology to financial services. And it is the same thing that we are seeing in almost every other industry, that technology is becoming center space. In fact, earlier it was almost like, the world, before we realized a few hundred years ago, everybody thought that the earth is the center of the world and everything revolves around it. That is how we all in financial services is to think that the financial services is a center and technology revolves around it. Now we are all coming to the conclusion that technology is the center and financial services revolves around it. And increasingly, I think what we call fintech will increasingly become even tech fin, that there'll be technology companies who do financial services. And very exciting that India is going through this digital makeover and this embracing this opportunity with both hands, because I think India as a country is young. Our financial services industry is young. Our entire ecosystem is relatively young, and I think that is helping us in this entire digital makeover, acceptance of technology as a driving force. The government and the Prime Minister has also been very very supportive of that. So when we look at fintech, we should see it in that context that it is rapidly getting embraced by all of us, especially in financial services. It is transforming how we pay, how we borrow, how we invest, how we insure. Because the large part of problem of financial services in India is not about demand, it's not about supply, it's about the cost of supply, because the intermediation cost, as we call it, because India has a lot of savings, we have a lot of domestic capital available, we have a population that is young, aspirational. We have a growing middle class. We have growing urbanization. So people are saving money. They want to invest money. They want to borrow money. They want to insure themselves. All these are there. But historically, the intermediation cost has been fairly high. And that has actually stopped the market from getting expanded. And now technology is allowing us to rapidly bring the cost down. We can bring this cost down by improving customer service, improving customer origination cost, improving underwriting process, automating a lot of processes, speeding them up. So now I think a home loan approval in 3 hours or 5 hours is becoming a reality. Earlier, I remember about even 10 years ago, a home loan was at least a week to 2 week process for an approval for a client. So imagine somebody wants to buy a home and has to wait for 1 or 2 weeks to know whether his loan is getting approved or not. Now you can know it in a day or two. Competition is there, but competition along with technology is changing the financial landscape in India very rapidly. We all know the numbers over the last 5 years. Indian fintechs have raised approximately $10 billion, and today the valuation of the sector is already $50 to $60 billion, which itself is almost 2% of the GDP of India. And India has also become the fifth largest fintech investment destination in 2020. And we have quite a few, unicorns out here. But more than just startups, I don't think fintechs is only about startups. Fintech is also existing financial services players adopting this in a big way, where banks, insurance companies, and slowly and steadily we are hearing all the leading banking players, insurance players say that we are going to be a technology company which does banking. We are going to be a technology company which does insurance. So I think this adoption and the open-mindedness of the existing players to adopt technology has also been a very gratifying and a very good thing to watch. Of course, this has all been helped by bandwidth availability, mobile data growth, smartphone, the India stack, the Aadhaar, UPI, all those developments. So last 5 years, it's almost like been a perfect storm in a good way, that almost all the good things have started falling in place, and there is a virtuous cycle in play for fintech to grow. And everything from demonetization to GST, all of this are only driving this. And we have seen this. I saw this about 25 years ago in equity markets, where online trading, SEBI formation, futures and option, dematerialization, one by one, everything fell in place for really creating a right environment for the growth of equity markets in India. I think last 5 years we have seen the same in fintech in India. And being a financial services company, we are also realizing that we constantly need to catch up. We need to get ahead of the curve because there's so much happening. And part of this is the most important thing that is India's fintech is doing is ushering in innovation. Because we are all using technology. We can use technology for reducing cost, for enhancing customer experience, for doing better underwriting, for having better risk analytics. But more important, it is also allowing us innovation. And the amount of innovation we have seen via fintech in the last few years, whether it's mobile wallet, P2P, money management app, your portfolio trackers, all of that, the kind of innovation that is going on, and a lot of startups are leading the innovation, though there are a lot of larger banks, including public sector bank like State Bank of India, has a fabulous service called Yono, which has been one big innovation using technology to provide banking and banking related services. So I think there is innovation going on at startup level, at established player level. And the most exciting part is innovation, because I think we now live in a world that we have to reduce cost, we have to improve customer experience, we have to do all of that. But more importantly, we have to innovate. In fact, more and more companies are adopting the slogan innovate or die, because the world is changing fast, customer needs are evolving very fast. So unless we evolve, unless we innovate and keep ahead of the customer needs, companies will struggle to build scale, build profitability, create value for the customers. And in India, we have seen that. We have seen that in payment services. I think there's a lot of innovation. Insurance, we are seeing a lot of innovation. In investing, broking, and money management, a lot of innovation is going on. And it's been amazing, the mobile based apps and all, how fast they are getting adopted. And getting a 500,000, 1 million users of a good mobile app for a broking service or a wealth management service has become fairly easy compared to add 500,000 customers in the old world of broking and in wealth management was a lot of work and a lot of time went into that. Now I think adoption by customers is much faster. Customer feedback is coming back very fast. I think we all track, what is the Google Play Store rating of our apps, and customer feedbacks are coming, and hence I think there is almost the apps and the products are getting updated every day. Now all this was unheard of about 10 years ago, but there is a newer and better experience every day for the customer. Also, a lot of the technology is being used for credit rating, digitizing transactions, risk management, where traditional old ways of risk management, because one of the biggest thing about digital also is that data latency has gone down. All of us in financial services have learned that data is very important. But you close your month, your month on 31st, and then it used to take you 8 or 9 days to realize what sales you achieved in the last month, because the data latency, data updation was so high. Now you can know it almost on a minute by minute basis. You are able to monitor your customers' portfolios on a minute by minute basis. So this is the data latency that has gone down, has also been another big part of what we call financial technology, fintech adoption that has gone in. And the other one has been API. I think APIs have become par for the course. I remember I heard first time the word API about 10 years ago. And at that time, API looked like something very exotic and something that you have to work very hard to do. Now, almost every interaction within the organization and for any organization with the customer as an API interface. An API is almost like a language that translates different languages into a common language. So it allows multiple system to talk to each other, and it has really ushered in one of the biggest changes that have happened, because one of the problems in financial services was legacy systems. And if a particular system had to talk to another system, the legacy was a big problem. Now with API coming in, I think a lot of this interactions have become a lot more easy. And lastly, I must say the biggest role fintech played was in COVID time. We all know that COVID was not a game changer, but it has been a massive accelerator. A lot of trends were underway. The trend of fintech was underway, but COVID ushered it in. I think as we had to work from home and remote location working, and it was amazing how much fintech played a role for all organizations in the financial services, whether it's managing customer payment, to managing customer interaction, information sharing, query handling, new applications being accessed from customers, uh, mobile data, online played a big role in that. So I think COVID was the biggest endorsement that the time for fintech has come. It helped individual customers, it helped the MSME sector, it helped even the financial services players to reach out to their customers in far-flung rural areas. And we are not saying that, basically mobile is also replacing an ATM, because ATM has only so many ATMs can be there. But I think, we can have a billion mobile phones, smartphones in India. And that is where the opportunity is, that we can actually really democratize financial services via technology. And the biggest role fintech plays is really ushering in the democracy. India got our political democracy about 77 years ago, when India became independent, is when about 70 odd years ago, we got independence, we got political freedom. I think technology is giving financial freedom to Indians in a very fast way. And I think this democratization of financial services is the biggest upside why all of us should not only embrace technology, but actually rejoice in that, explore, experiment with that. Whether you are a bank, you are an insurance company, NBFC, brokerage firm, asset management firm, fintech is an essential part of your future. Being nimble, being new age is going to be almost imperative for us for various reasons, for reducing costs, for improving customer experience, for expanding the market, for exploring new products for new customers, for new products for existing customers. All that is technology, and technology uh, and data, because I think data is, we have a lot of people have said data is the new oil, but it's not just the oil that is important. It's the ability to refine the oil is very important, and then ability to use a refined oil is very important. So I think more and more companies are going to embrace fintech. Maybe a few years down the line, there won't be anything called pure financial services. Everybody will be a technology-led financial services. And in that context, today's conference is very, very interesting. I think going global brings questions because it all over the world, financial services is fairly local because of its very existence and the physical nature of the business. But once you use technology, maybe India can be one of the leaders in financial services. Using technology, India can be a fintech leader in the world. And we have some great companies, large, small, startups, existing companies who are doing some great work. So when you look at that, and today I'm sure we'll explore a lot of those activities, those things which are happening. We'll discuss, we'll interact about those. But one of the biggest upsides we have is the way India has been a leader in software services, the way India has been a leader in pharmaceuticals. Like when COVID happened, India's ability to manufacture the vaccine has been a game changer for the world as a whole. In the same way, maybe India will be one day a leader in financial services using technology. We can be the fintech leader in the world and use all the things we have learned via software, via pharmaceuticals and others to aspire to not just improve the Indian financial services, but be a global leader in that. So with that, once again, I thank you all of you for being for this conference and welcome you to a very exciting conference today. Thank you very much.
Thank you so much, Mr. Shah. Indeed, I think FinTech is set out to make the financial sector smarter, nimbler, more efficient, and that's the reason why we want to promote it. Welcome, Mr. Mehta. You joined in just now, so we started off. And so now I move to Sudhakar, who is the advisor and has also been chairing the FinTech activities of FICCI, and he's been a kind of pillar of support. So over to you, Sudhakar, for your remarks, please.
Yeah. Hi, everybody. Good morning, ladies and gentlemen. A warm welcome from India to everyone here from India and to those who have joined us from across the world. It's good to see participants coming from all over the world to look at what we have done in India and showcase what you are doing here, as well as taking Indian fintechs to the globe. And very happy to address you all in this FICCI's conference and Expo on showcasing the Indian fintechs. Like Rashesh mentioned, Indian fintechs have really come of age in the recent years, and I guess it's the right time for FICCI. I must compliment FICCI and team for conceptualizing and executing this Expo at this time. India today is home to 2,000 plus fintech companies and startups. As you all know, we have 1.4 billion people who are being serviced. But more importantly, we have 1.25 billion digital identities in India through Aadhaar, thanks to Aadhaar. We have 800 million bank accounts thanks to Jandan. We have over 600 million smartphones and almost as many internet connections thanks to Digital India and other initiatives. All of this has really helped us in making our fintechs work successfully. And we also have close to 60 million merchants, of whom 10 million today are digitally enabled. for payments at least. So we've always been a country with huge potential, but a low penetration. And what the fintechs have been able to do in the last few years is to kind of bridge this gap every year, and have done so very successfully. And I'll share with you some of these examples. I'm sure BCG has got a whole data set that they are presenting. I don't want to steal their thunder, but let me just articulate a few of my points. What has really helped are four things: strong government and regulatory vision, and the initiatives that have come about as a result of that vision. A very digitally friendly marketplace, a strong STEM talent base in India, and a great institutional and investor support. All of these have really worked together, like Rashish said, is a perfect storm that's really made fintech successful in the last few years. Starting with the celebrated India stack. I'm not going to get into details. I'm sure everybody is aware, and those from outside India will also possibly be aware of the India stack. To developing open APIs for accessing tax records, initiating special category licenses for various sets of fintech players, and to create an environment for developing, concepts like open credit networks. The regulator and policymakers have really shown the way on how to balance out reforms with scale, and at the same time with security, data protection, fraud prevention, and risk management, etc. And we really, as a country, we are seeing the benefit of all of these initiatives now. We've always had a strong coding capability, thanks to Y2K and before. And now with our numbers capability, I think we have a huge STEM talent pool. And that is really helping all of us in creating fintech entrepreneurs, and like large companies embracing fintech in a large way to deliver very successful propositions in India. And much of the studies have said that Indian consumers are having very high digital adoption, almost 80% plus digital adoption by various surveys, and I think amongst the largest in the world. And that's really helped us. And a great support by institutions in partnering with these fintechs, as well as investing in these fintechs. And today, the result is for all of us to see we've got 8 unicorns and several more following along the lines. And as a result, we have a very, very thriving fintech industry. Just a couple of data points. India has possibly the fastest growing digital payment system in the world today, accounting for over 2 billion transactions every month, and it's grown at around 70% plus on a year-on-year basis. And on the other side, the fintech brokers, they account for over 50% of the markets, but not just the markets. And what has happened is the trading in India has grown 10x in volume in the last 6 years by value, and 4x by volume. And the fintech brokers have really contributed to this scale. And what is important to note in both these examples are that the fintech players have not cannibalized the market of the established players. They've really broadened the market and increased the market volumes for everybody and created market shares for themselves. And that's what really what we are seeing. For instance, the security market volumes in India. Rashish talked about the initial set of broking industry volume growth. I'm talking about the last 5 years of volume growth in derivatives. We now see about 30 to 40 million contracts a day, and is possibly the largest index derivative traded anywhere in the world. Not New York Stock Exchange, not Hong Kong, not anywhere, but it's the Indian Stock Exchange that sees the maximum amount of contracts that are traded, thanks to all these fintechs, brokers that have come and helped us. So it has transformed. All of them have transformed the way BFSI industry works in India. Our fintechs have successfully disintermediated the financial services industry, going directly to customers, like we've seen in examples in Policy Bazaar, Bank Bazaar, etc. In the consumer side, our Khatha Book and OK Credit, etc. for the business consumers. We've partnered with banks and created networks like the BillDesk and JustPay, Razorpay, etc. We've been value-added partners with banks and helped us add value to their services to their customers, like what Perfios has done, like what CreditWatch is doing in the EWS side. We've added customer-centric propositions like open banking, like Open and Neo, We've been technology providers to banks and financial institutions like Jakarta, like M1 Exchange, etc. And we've also done deep tech blockchain implementations to revolutionize agricultural finance like Whirl and few others. And the institutions have supported us. Several banks have, like RBL, S Bank, have cells that works with these fintechs to develop the propositions further, take it to their customers and expand their markets, etc. And it's really worked very well. And the time is right. The Indian industry has come off a particular level where we are ready to take these concepts, take these problem solving initiatives, take the innovation to the world. We worked on our core. There are several fintechs that have developed that core substantially to a particular segment. Now it is right time to take these core, take these to the same customer segments in a new geography. And that's what this conference is intending to do. And we have seen that most of the fintechs are ready to start on this journey. We also know that the Indian market is fairly large, and some of the fintechs do look at India as a primary source of opportunity and focus on them. But for them, I think maybe we will find far better value in another country, maybe a lesser set of regulations. And we are today going to hear from some of the members who will talk about, some of those who are speaking in the session will talk about how it is easier to do business in other parts of the world. I really hope to see that with all the G2G initiatives, with all the support that the governments are providing, many of the fintechs can go abroad and start showcasing their success stories to the other parts of the world as well. And FICCI Fintech Committee is happy to organize this expo. I think it's a very timely expo. We've always worked on three principles as foundations to our fintech committee. One is to engage with the regulators and policymakers to expand the market opportunities for the fintechs, to work with banks and large institutions and partner the fintechs with those large banks and institutions. And three, to work across the world with fintech ecosystems across the world and enabling a partnering environment for our fintechs. And I think this session is really helping in the third element of that. And thank you so much for everybody to come here and participate in this. All the best, and hope to have a good session. Thank you so much. I'd like to thank the government and the regulatory participants who are there in this session, and a special thanks to Mr. Rajaraman and the DEA for being present here and for encouraging us to have this session. Thank you, sir. Thank you, everybody.
Thank you, Sudhakar, for talking about the strength of the Indian fintech sector and how really we can make it, a showcase industry for us. So before I invite Ruchin from BCG to deliver the presentation on the knowledge report that we have done, we would like to formally launch it in the presence of Mr. Srinivas as well as Mr. Rajaraman and other guests present here. So may we have the knowledge paper on screen, please? So the knowledge paper, as I mentioned earlier, we had done some surveys, etc., and those inputs have been collated into the report. We'll be sharing the report with all of you shortly, and we're happy to get inputs from everybody if any improvements are required. And also, if there are policy issues, we will write to you separately highlighting those as well. Thank you so much. And Ruchin, over to you for the presentation, please.
Thank you, Jyoti. Good morning, everyone. It's an absolute honor and privilege for me to be speaking amongst such an illustrious set of people. It was also a pleasure to partner with FICCI, being the knowledge partners and coming up with the report that Jyoti just kind of flashed in front of us. I'll take the next 10-15 minutes to just talk through the key findings, and I'll try and share my screen to share the presentation. Is this visible, Jyoti?
Yes, it is. Yes, it is. Go on.
So I think both Rashesh and Sudhakar already touched about the vibrant fintech ecosystem that we have in India. We're just putting some numbers here. We have over 2,000 fintechs in India, and uh, the total combined valuation of these 2,000 fintechs is about 50 to 60 billion dollars, with almost 8 companies in the unicorn and the decacorn stage. And just to put in perspective these numbers, when I see there are 8 companies that have more than $1 billion of valuation, and 5 of them are unicorns, this touching the $1 billion of valuation. If you take the entire stock market of India and you take all the listed companies, there are only 330 listed companies across all sectors that have a valuation of more than $1 billion. Right? So 330 companies, many of them have been in existence for many decades, sometimes even over 100 years. And then we have these fintechs that have come in. 67% of them have been set up in only the last 5 years. This is a remarkable achievement in terms of what they've been able to do and the kind of valuations they're getting. But what we are projecting going forward is that the fintech industry in India could achieve a total valuations of around 150, 160 billion dollars. Now these are projections, and these are directional numbers. But we're very positive just in terms of the momentum that we've seen over the last 5 years, that this is a very real possibility. That we could have almost 20 companies, 20 fintechs, which would have a valuation of more than $1 billion. And then many more companies in the unicorn, the Century Club, which are essentially, people that have 100 million, plus valuations. It's a very vibrant and a thriving industry. But for this to really come to life, the fintech industry will require about $20-25 billion of additional investments over the next 5 years. Now, this number, if you look at the last 5 years, the fintech industry already attracted $10 billion of investments. So this doesn't look off to us. I think what will be different going forward is, in the past, you see 2 bars here on this page. The first bar is the investments that were made in the last 5 years across different sectors. And what you will see here is the fintechs that were focused on payments got bulk of the funding, right? And you will see that being evident in the payments industry. That is almost the best in class in the world. So a lot of fintechs have been focused on payments in the past, and payments will continue to be the single largest sector even going forward. But there would be other sectors like digital lending, digital insurance, software as a service, wealth management. Increasingly, many of these other sectors will also start attracting a lot of investments. And we say this because if you look at the pyramid, if I go back a couple of slides, if I look at the pyramid in terms of early stage fintechs, now these companies today, which are early stage, will start attracting the new investments and start becoming the unicorns and unicorns. Many of them are in industries outside of payments, right? So we have a very vibrant fintech industry that is not just focused on payments, but across the entire spectrum of financial services. Now, what would it take for the fintechs to really succeed in the market? And we've put on 3 themes here, and there are many more, but just the broad 3 themes. Point number 1, I think it's very important for fintechs to really master the core. So fintechs are, for example, there were discussions on fintechs focus on the broking space. And we're seeing amazing numbers. If you look at the last 1 year, the number of new broking accounts in India that are being opened are at a record high, and they are being fueled by more than 50% of these accounts are being opened by the new age fintech brokers, right? And these companies are really ensuring that the entire onboarding process is very seamless, very easy. The kind of interface that they provide to the end customer is actually quite intuitive, and they have a lot of functionalities and features that are being provided online. That's what we call as mastering the core. The second play really is to say, look, there could be some large fintechs who will start creating ecosystems in India. And we have examples of both Ant Financials and Ping An doing that in China. And 5 years back, I know many of us felt India is not China, and it's very difficult to create an ecosystem. But we are now at a stage where we believe these ecosystems will also come to India. Now, these ecosystems obviously cannot be created only by a fintech, and that's where we'll talk about collaboration between fintechs and other large institutions. But the time is very ripe in India for these ecosystems to come up in many different sectors. And finally, we will see increasingly fintechs that are originating out of India are going international, because the problem that they're solving is not India's specific problem. The technology that they have is not relevant only in India. And many of the functionalities, features that they have developed in India could be very applicable to many markets around the world. It gives them scale. We have seen many examples of fintechs doing that from other markets. I think the time is ripe for the Indian fintechs to also explore the world. If I take these themes one by one, and I'll not spend too much time, it's there in our report in a lot of detail. But mastering the core essentially has three broad pillars. Looking at product innovation, ultimately fintechs are there to innovate on products and come up with new variants or completely new products. We are looking at, for example, in insurance, bite-sized products that are coming out. You can actually insure today for 1 day or for 1 week, which was not possible in the past. Embracing deep technology, again, a very important pillar here. That a lot of innovation earlier was happening in terms of front-end digital. I think the time has now come for India to also embrace deep technology. So deep analytics, AI, ML, voice recognition. Fintechs cannot just remain in the periphery of providing the front-end digital, but also need to embrace deep technology to really innovate the end-to-end customer experience. And finally, the user experience elevation, that the customer is able to, for example, what's happening in insurance is that, there's an accident that happens and I can click my pictures of my car, and the end-to-end journey of the claims can be completely seamless and digital. So those would be the three broad pillars of mastering the core. If you look at the ecosystem play, this is what has happened in China. I think all of us are familiar with it. I'll not spend more time. But if you look at the top, the ecosystems that are being created in the health ecosystem, the housing ecosystem, travel ecosystem, we believe a lot of fintechs, even though they are financial services based, can start creating ecosystems that go beyond just serving the financial needs. To give a simple example, if I'm looking for a housing loan, then the need is not just to take a loan, the actual need is to buy a house, right? And that's where we call it the boundary-less organizations, that they start looking at the customer need, not just in terms of financial services, but to say, look, if I want to find a house, I can go to a mobile, app or a website in which I can search a house. I can take a loan. I can take an insurance. I can also refurbish my house. There's an entire ecosystem that gets created around the housing needs. We believe many of these kind of ecosystems will start getting created also in India, and fintechs will play a very important role in these ecosystems. And the last theme is around going international. The examples on this page are all fintechs outside of India, and you will see, they've been very successful. For example, TransferWise started off in UK, providing, services around currency exchange, right? And then they, rapidly expanded from UK to Europe and then to Asia. And there are many other examples. I'll not take, in the interest of time, other examples here. But we believe the time is right for the Indian fintechs to also go international. What we did as part of our research, along with FICCI, is we went and spoke to many fintechs, and we specifically focused on the theme of going international. What was actually quite heartening to know was that 40% of the respondents said they already either have a presence, right, or clients outside India. Right? That's a sizable number. 40% of fintechs already have some international presence, or at least clients outside India. But even more important was 73% of them were actively thinking of going international. However, many of the fintechs also came up with a large number of challenges. Right? Many of them felt that going international means access to customers, access to financial institutions outside of India, and that is not easy for them. And the cost of a mistake outside India is very high. So in India, they can experiment, they can go wrong and they can change their services, but if they have to go outside India, then they need to be sure that what they are providing will actually succeed. Otherwise, there's a lot of cost to go outside. So if the Indian fintechs have to really succeed in going international, they'll need some support. They need support from regulators, from the government. And we've seen that happening around the world, that the government and the regulators, but also the financial institutions, have been very supportive of the fintechs from their markets to actually gain a global scale. In summary, when we put down the path forward in terms of what should different entities do for the fintechs to really achieve their full potential, we put down our recommendations or our thoughts around three broad pillars: around innovation, collaboration, and around going international. And the themes were, what should fintechs do, what should the large financial institutions do, and finally, very importantly, what should the policymakers do. In a summary, in terms of fintechs, starting from conquering the core, and I spoke about it, to also commit bandwidth for co-creation. This is a very important theme, that how can fintechs collaborate with financial institutions. In many places, they will compete with the large financial institutions, like the example we spoke about in terms of fintech brokers actually compete with the full stack brokers. But in many other places, they can collaborate with a large PSU bank, or a large insurance company, or a private bank, and this collaboration can work in a manner that is beneficial to both the large financial institution and to the fintech. And finally, how can they prepare for international foray? In terms of the financial institutions, in our report, we've laid out various models of collaboration. So collaboration could be, for example, there are many large institutions around the world that are actually setting aside some capital that they can go and invest in fintechs, right? They can incubate some fintechs on their own. They can partner with fintechs, right? But they can also collaborate. So there are many, many different collaborative models. We've laid out in our reports, 5 or 6 different models, and for different financial institutions and for different fintechs, different models of work. But also very important to prioritize some quick wins, so that their institution can see the benefit, right, and their customers can see the benefit. And when I come to policymakers, how can they fuel the innovation? I think India has already done quite a lot. We've seen, for example, the sandbox license regulatory norms that have come out. They've been quite supportive, but the fintechs, at least many of the fintechs, felt that the regulators could do even more. And sometimes, because there are different regulations in different industries, there is an IRDA, there is a SEBI, there is a there's an RBI, but fintechs sometimes kind of play in the boundaries of these different regulators. I could be selling insurance, but I could also be a broker. How can the regulators also come together to promote the fintechs in a manner that these sandbox regulations can become more expansive, which more fintechs can come and participate, but also the financial institutions can participate. I spoke about how can the policymakers and the government promote international expansion of fintechs. I think we've some thoughts around those. So those are in summary, the thoughts that we had in our report. Thank you everyone for providing these valuable inputs. And as Jyoti said, we will be very to any feedback, inputs, and refine our thoughts going forward.
Thank you, Richard, and presenting the paper which talks about strengthening the entire ecosystem around fintechs. So we will share the report shortly with everybody. We now turn to a banker, a career banker, who is also the chief executive of IBA, and without the presence of a senior banker like you, talk about fintech would be incomplete. So over to you, sir, for your address, please.
Thank you, Jyoti. I am really thankful to FICCI for organizing this very important conference, that is FinTech 2022-21. And the topic chosen is really very relevant because fintechs are really playing a very important role in the entire financial sector. Mr. Rashish and Mr. Sudhakar has already set the context. Mr. Ruchin has already given a data presentation about the international landscape. I'll confine my discussions to the how we bankers look at the collaborations to the fintech, and what do you think that going way forward. So you are all aware that the banking is basically undergoing transformation. And the journey started initially, the banking system was totally on the brick and mortar system, the physical branches, physical customers, everything happened on a physical mode. Now we are at an intermediate stage where it is phygital, so a part of the physical system is also working and the digital systems. And the future bankers can foresee will be maybe a virtual banks going forward, because that is the way we think that the industry is going to transform. So the entire banking industry is adopting technology. It started from the manual operations to the CVS platforms to the now digital platforms, and they going forward to the virtual platforms. That's an expectation for the entire banking industry. We all agree that yes, a lot of innovation has already happened into the payment space. The digital payment, say, proportion have gone up in almost every banking system, with the various incentives being provided by the government and with the Digital India mission. If you see the adoption of the technology by the banking system, nearly more than 70% banking transactions are happening in the digital mode. That means the relevance of technology, and for which the fintechs have a very lean and a very efficient structure, then this is already on the cards. So long as payment space is concerned, I think fintechs have already demonstrated their capabilities, and they transform the entire payment space. Now, a majority of the people, maybe even in the downstream, you will find people are using the different options, Paytm, payphones, and they may be using for different payment options. So the digital payment system has already taken its roots and now has been accepted by the masses. Going forward, there is a need for intervention into and innovation into the areas where the still physical activities are happening. And one of the area is basically lending, because that is one of the major business beside accepting deposits and payments. The important area where the banking system is looking for is lending. Bankers have already started experimenting with fintechs. Maybe 59minutes.com was one example where MSMEs were onboarded for sanctions, in principle sanctions in 59 minutes, but that was just an experiment. Going forward, the entire banking system was thinking of digitalizing their entire journey of loan life cycle for a customer, right from customer onboarding to its analysis, its underwriting, then its documentation, its monitoring, and including the collections and the closures of this. The journey has already started. Banking system has already started tying up. There is a company that's NESL. NESL has been mandated to go for digital documentation, so that the onboarding has already started, and now the processing has already started in some of the product, and now the underwriting can be done. A lot of information infrastructure that is available in the form of CIBIL, in the form of other that can be onboarded, and then the digital journey can go to the next stage, that is digital documentation, where the customer need not come to the bank and can execute the document sitting there in the comfort of his home, and can do this as well. And post this documentation, the disbursement and can be taken care of by the payment infrastructure, and its collection mechanism can also happen through the same digital infrastructure. So the bankers are now looking at the digitalizing the each stage of loan life cycle for the digital journey, and every fintech can play a very important role into it. The way I gave you one example, the same way the banks are looking for adoption and collaborations with the fintech. I think you will appreciate that banking industry has adopted these changes very fast. During last 5 years, most of the banks have already created a separate vertical, which was not there earlier, regarding collaborations with the fintech. Now, every bank is looking at a collaboration with a fintech, not only for payment system, but for the data analysis, for the early warning systems, maybe for, because you know the bankers are a repository of the large volume of data. Because they have a past track record of the customers, they have a large volume of data about the behaviors of the customer, their payment track record, how many times their payment system, payments bounces. So all this is everything provides a very rich source of the data with the banking system. So now banking system has already started warehousing the data. Now they have started creating the data analytical capabilities so that the what's data is available, how it can be analyzed. They are using artificial intelligence for a predictive analysis. So the predictive analysis can give them the benefit of giving a pre-approved loans, because once they know that this is the customer dealing with me for the last 10 years, they have got very good payment track record. Every 3 years he or she changes a car, or every 5 years they go for a change or renovate their house and all that. So that can be known from the payment history. And of course, the customized products can be prepared as segment wise. It can be prepared based on the data analytics, based on the artificial intelligence systems, and all the entire fintechs have got a great role to play in designing these enablements which will facilitate the customers. Going forward, I think the banking system is not going to be the only banking companies. They are going to be IT companies, and a combination of the two, where they will need a greater collaborations with the fintech, and the bankers are already started appreciating the requirement. They also already started getting this one. You will observe that during last 1 year itself, during post-pandemic, many of the banks have already started the digital journey for customer onboarding. Some have already started in the area of home loans. Some banks have already done in the area of consumer loans as well as the car loans. And going forward, it will expand to the MSME. It will may expand to the mid segment. Then it may go forward for all type of digital loan services that can be provided online. So the fintechs have a very great scope to play. Now here comes besides potential, here comes enablers. One of the major enablers which is expected by the entire banking system from the fintech is, because you know the country is now getting very serious about the data privacies, and a law is being tabled where the Data Privacy Act is going to be enacted in the country, and that the customer bankers are repository of the data, and they think that data, yes, the data is a power, it can use the analytical tool, but let it not be misused, because every customer has a right to privacy, and then that things. So while designing our digital architecture, we need to be conscious about the rights of a customer of its privacy. Yes, we know the data, we have the data, but how to use it, where to use it, and how much to bring it on the table, that lies a challenge for the fintech as well as the banking system. I feel that the today's deliberation will facilitate the entire fintech player in showing their demonstrating their thought processes and the capabilities, which will be a good platform for the all the stakeholders to know that what we have in store for our use, and the potentials are enormous, as already been narrated by BCG in terms of the financial numbers. I say the numbers may be just indicative; it can multiply, provided we know the explore the areas, because this pandemic has really worked as a catalyst in boosting the digital innovation in the entire financial space. Now the bankers are started thinking that how should we provide a doorstep banking, how can we provide the digital banking, and they have started taking initiatives in this area. Doorstep banking they have already started, and digital initiatives are already on. Even in the marketplace, when you find people, instead of going to the grocery stores, have started using the e-commerce platform for placing orders for the groceries for day-to-day needs, because everybody has now felt and they realize the necessity and the convenience of doing the transactions through digital mode, maybe their day-to-day grocery requirement, maybe to their banking requirement, maybe their travel requirement, maybe their booking requirement, it may be with their bills payment requirement. Everything can be done digitally, and that's why a greater scope for the entire financial sector as well as the fintech companies to collaborate, innovate, and create a value for all the stakeholders. I think it's a very good initiative by FICCI, and all the stakeholders are chosen. Maybe I'm happy that the government, the additional secretary from government, Mr. Rajaraman, is also there, so he'll be giving his address. Then Mr. Injati Srinivas from FICCI will also be there. So they have a rich experience in giving the support to the entire ecosystem and helping the digitalization of the entire thing, because the ease of doing banking and ease of customer convenience will facilitate the ease of doing business in the country, because that will facilitate the customers of doing the word used by Rishishji's democratization of the financial sector will definitely be giving them a more power in the hands of the consumer to utilize evaluate and compare the various banking facilities available, various products available, and a lot of scope is there. It's just the beginning of a journey, not end of it. We need to do more innovation, we need to do more collaboration, but then we have to, of course, take care of the cyber securities, we have to take care of the data privacies, we have to take care of the other ethical issues, so that going forward, because the banking system work in the matter of trust. So going forward, the trust of customer is not breached in any of these areas, and there is a need for a greater collaboration by all the stakeholders. With this, I thank you all for your this opportunity to interact with you, and especially to FICCI for organizing the event. Thanks.
Thank you so much, sir. It's always encouraging to see how the banks are really adopting fintechs fast, and I think some of the very valid policy issues you brought up. Thanks for that. So before we move to the next segment, I would request that we have a short video on the Fintech exposition. So we would like to launch it in front of all of you, Mr. Rajaraman, Mr. Srinivas, Mr. Njati Srinivas, Mr. Rajaraman, as well as Mr. Mehta and others. So can we have the video of the exhibition, please? This is being hosted on the FICCI Byte platform. This is our own platform. And as you see, there are several features out there. These are the stalls of various companies. You can actually do live chat, you can do video calls, you can do networking, you can do a card exchange. So a lot of features out there to facilitate, the real business with the fintechs. So we do hope some of your team members could actually visit that and see, the work which is being done by the Indian fintechs. I think will be very useful experience for everybody, and I think the feedback would also be very useful. So may I now turn to Mr. Rajaraman. Mr. Rajaraman, as everybody knows, is Additional Secretary, Department of Economic Affairs, Ministry of Finance, and has been quite supportive of everything that we have done in the space of fintech. And thanks also, sir, for having Ministry of Finance, Department of Economic Affairs as a very valuable partner to this particular event. It's been a great partnership with you. So over to you for your keynote address, sir.
Thank you, Jodi, and good morning to all the participants and the distinguished dignitaries on the on this inaugural of the Expo. So I would like to first of all congratulate FICCI and the FinTech Committee of FICCI. Being proactive in spurring fintech in this country, facilitating fintech companies, goading government policymakers like us, and creating a positive environment for rapid and development and deployment of fintech. I used to also salute the 65 startup mountaineers who have embarked on this arduous journey of morphing raw ideas into commercial market products. So my best wishes to them in this difficult journey, and wish to say that the government of India is solidly behind them in the form of evolving positive facilitative policies and financial assistance under various programs. So we look forward to your successful presence in the market. As you all aware, the COVID times have been a testimony to the resilience and intrinsic strength of the fundamentals of Indian society, the economy, and government in its various parts, including the central government, state government, etc. The year 2020 threw the world into a spiral, I think threatening all that was taken for granted, normal life, business, travel, and so on and so forth. So, for the first time, public health became the center of all activities, and it helped to actually to review what was in position. And I think for a developing country like India, it was a great challenge and an opportunity too. So, incidentally, India's fintech-based digital infrastructure came in very handy by enabling transfer of nearly $10 billion effortlessly to nearly about 400 million beneficiaries, and especially the 200 million women Jan Dhan account holders. So this was actually a test of the high quality infrastructure that's been built up by our banks and by NPCI and the other stakeholders. The governments and central banks across the world deployed a range of policy tools to support their economies, such as lowering key policy rates, quantitative easing, loan guarantees, cash transfers, fiscal stimulus, cashless transfers, and digitalization of the economy. And finally, reforms that focused on a variety of things, including Atmanirbharta or self-reliance. Now, I see the self-reliance or Atmanirbharta in the startups who have assembled here. I mean, I think I hope that all of you build up solid businesses that enable Indian financial sector to really become a even better global model. I would also like to state that about a decade ago, when India entered the fintech market, we were just, there were a number of very challenging opportunities for us. So, despite the challenges, I think we have grown very fast, and India has attracted investments of nearly $2.7 billion in 2020, the highest amount ever, next to the 2019 peak of 3.5 billion. As we have seen, what Mr. Rashesh and the BCG report also say, that the valuations exceeding $50 billion is something which is very, very remarkable and something to be really proud of. So, with the Aadhaar as a foundation layer, India stack combined with the into a digital identity, the Aadhaar-enabled payments system, unified payments interface, and now the account aggregator framework, all have actually contributed in different ways to the growth of fintech in this country. So, the Inclusive Finance India Report 2020 highlights the phenomenal rise of ICT-based transactions from about 827 million transactions worth rupees 1.6 trillion in 2016 to about 3.2 trillion worth about 8.7 trillion in 2020. So the journey of financial inclusion, which is the core of Government of India's financial sector policy, started with the launch of Pradhan Mantri Jan Dhan Yojana in 2014. Powered by the India Stack and the Jan Dhan Aadhaar mobile trinity. Today we have nearly about 420 million people who are account holders, and of which 63% are rural and 55% are women. UPI has been one of our biggest success stories and has been really growing more than exponentially. And UPI-led innovations are clocking an astounding 2 billion transactions a month. So we also have other digital infrastructures like the DigiLocker. I think, in fact, DigiLocker has been integrated with a number of government infrastructure platforms like Aadhaar and the road transport systems, with the financial sector, including insurance, banks, etc. I request the fintech companies and the financial sector institutions to even place greater reliance on the DigiLocker to enable it to reach more citizens, because it's something like a single point of where all your documentation and your certificates are available. So currently we have about 365 million citizens who are on this. So I request that this needs to be strengthened by all your collective efforts. Now, India has also added a critical fourth layer to the India stack called the consent layer, which is used to manage consent electronically across the stack, and is expected to boost digital lending significantly. The account aggregator system is a key example. With the data empowerment and protection architecture, India will be taking a historical step towards empowering individuals by controlling their personal data for use in accessing financial products. There are two exciting platforms, one of which I just mentioned, which have added to the vibrancy of the India Stack digital ecosystem. One is, of course, the account aggregator framework, and the other one is the Open Credit Enablement Network, the OCEN, which Ramasubramanian also spoke about. So the AA framework acts like a provider of financial data from across different sources, and like mutual funds, insurance providers, tax platforms, etc., based on consumer consent. The Open Credit Enablement Network has all the prerequisites to become a perfect fintech disruption using artificial intelligence, machine learning, or data analytics. The entire idea is to democratize access to credit, insurance, and pension, especially for farmers, self-help groups, and micro and small and medium enterprises. So I welcome fintechs to work with the RBI, SEBI, and other regulators to build products using these frameworks. Now, India's digital infrastructure, I mean, has been a very important foundation for supporting the handholding of poor people across this COVID pandemic. Last year, ILO estimated that nearly 400 million workers are likely to be pushed deeper into poverty. Incidentally, India's EPFO, the Provident Fund organization, electronically provided 60 lakh workers with COVID withdrawals from their Provident Fund savings account and disbursed nearly about 15,000 crores to subscribers during the pandemic till January 31, all completely electronically. So the direct benefits, if you look at the direct benefit transfer, that is a major platform which has actually helped and worked very silently, rather, I would say. So it has helped the center to disburse nearly about 31,000 crores as financial assistance to 332 million people within a couple of weeks of the lockdown under the Prime Minister's Garib Kalyan Yojana. Taking all the 317 schemes under DBT from 53 central ministries, the DBT platform has transferred nearly US dollars 192 billion since inception in 2014-15. Two new initiatives that are being explored by the government are Project Kashi and the KYC Setu. The first seeks to build a platform for providing small ticket loans to farmers, laborers, and other low-income families using the DBT infrastructure. Kashi or the Cash Over Internet will create a network of top lenders on the Jandan framework to create a direct benefits transfer-based digital lending service. KYC Setu is an integrated KYC data sharing protocol through which customers need not verify their KYC credentials. Now, you are all aware that the RBI has also put its best step forward by making NEFT and IMPS available round the clock. RBI has also eased the process of QR code-based transactions by making QR codes interoperable and prohibiting the use of proprietary QR codes. Now, the government has also taken significant steps in the recent budget, including a scheme to develop, promote, and accelerate digital payments through a financial assistance scheme to NPCI and the banks who are involved in the process. Now, the budget has also made out a very clear statement saying that we intend to launch a Fintech hub in the International Financial Services Center, about which the chairman, I'm sure, will talk about in greater detail. It also brings me great pleasure to mention that joint working groups on Fintech with Singapore, UK, and Philippines are on the way. And these are acting as a facilitative bridge between India and the rest of the world. And we would be very happy to support Fintechs and the Fintech associations like the FICCI Fintech Committee to associate itself with this committee and take the best use of this opportunity to reach out to regulators across the border. So, ladies and gentlemen, I take this opportunity to congratulate all of you because fundamentally it's the collective vision and the vision of the Honorable Prime Minister which has enabled us to actually forge forward, especially in the areas of financial inclusion. So, I only request that Fintechs must work with larger financial sector institutions, as has been eloquently stated by BCG in its report, through integrating their products and taking it to scale. I would also exhort Fintechs to work on areas like regulation technology, RegTech, and supervisory technology, SupTech, which are very important, and I request Fintechs to work with large financial institutions and the regulators in developing these. Taking forward Mr. Rashesh's thought on APIs, we must have our own financial sector API exchange like the Singapore's APEX. So we would be very happy to support and facilitate the industry in enabling this to emerge. Several countries across the world are facing challenges of governance, and providing services to citizens is accentuated by lack of digital infrastructure. India can be a lead model in kind of reaching out to countries who need our support and guidance in launching their own platforms. DA's joint working group, as I already mentioned, is willing to work with all of you to enable us to reach out to the other countries who are willing to make use of our abilities. They could also work with NPCI Global, that is the newly formed platform of NPCI in expanding this initiative. BCG's timely models of international business is also very useful, according to me. One thought that I leave with startups and FICCI is to go for financial inclusion 2.0, where poor people will be able to seamlessly access savings, microcredit, investment, micro insurance, and micro pension services via applications, mobile applications. Taking the cue from the BCG presentation of building ecosystems to scale, startups must design and create products that cut across regulatory domains if this can add value, using the sandboxes of RBI, SEBI, IRDA, and PFRDA, and the International Financial Services Center Authority. We have an interministerial financial fintech committee and an interregulatory coordination mechanism of FSDC that can enable regulatory coordination. So we look forward to inputs from you in this regard. So my advice to startups is to create products that are assure consumer trust, user convenience, cyber security, and value for money. Keeping the consumer at the center of design will enable world-class products. I'm sure that the deliberations in this conference will definitely enable us to make better policies, and also enable the startups who are here in this expo to actually build business to scale. Thank you very much.
Thank you so much, sir, for reaffirming government support to the fintech ecosystem, and indeed asking us to take benefit of the joint working group. I think it's an excellent idea, and we shall definitely take benefit of that for the good of our membership. We now move to Mr. Rinjeti Srinivas for his inaugural address. Sir, as the chairman of IFSCA, your guidance is extremely crucial in making India a hub for financial services in general and fintech in particular. And we know the importance that you personally attach to the sector. And now with the Honorable Finance Minister announcing the Fintech hub in the Gift City, we're all very anxiously looking forward to this new initiative at the Gift City, sir, and the passion with which you drive everything we've seen in the past, and I'm sure you will provide the same to this particular project as well. So very keenly looking forward to your address, sir. Over to you, sir, for your inaugural address.
Thank you very much, madam. My colleague, Shri Rajaraman, Shri Rashesh Shah, Shri Sudhakar Ramasubramaniam, Shri Ruchin Goyal, my friend Shri Sunil Mehta, Shri Dilip Shenoy, and Ms. Jyoti Vej. International participants who are participating in this conference from over 20 countries, fintech companies. I'm very happy to note from Jyoti's introduction that over 60 fintech companies are showcasing their products, and all others who are participating in this virtual conference. I wish you a very good morning. And I think FICCI is doing a great job and organizing this conference at such an opportune time with special focus on the export potential of fintech services is commendable. I think the speakers have covered every aspect of the fintech sector, its sudden emergence, its evolution, and its exponential growth potential, etc. So I really don't want to delve into those issues which have been adequately covered. But I'll put it in a slightly broader perspective, if you permit me. We'll have to look at this entire thing in the larger context of a revolution. I mean, we are all aware that we had the first industrial revolution in the 1760s. We had the second industrial revolution. In this century, in 1950s or 60s, we had the third industrial revolution with IT and electronics. And now we are in the fourth industrial revolution. And if you look at the distance between the third and fourth industrial revolution, it has all got compressed because technology is compressing everything. It is transcending the limitations of time, space, and cost. And by nature, it is democratic because there's no use of a technology if it is not easily accessible and if it is not affordable. So mere availability of a technology is not of much consequence. I mean, if a technology is only focused for, the rich people, it doesn't have the potential to grow. It will remain a premium service and it cannot grow. But the beauty is that we are at the epicenter of making technology available, accessible, and affordable. And the beauty of finance is it is the lifeblood of an economy. It cross-cuts every activity, and it was very clearly brought out that all verticals whether it is health or whether it is education or insurance or travel, anything you think about, technology and finance will be common to all. So I think this is the backdrop in which we'll have to look at this entire thing. India did not play a very large role in the first three revolutions, but India can be the front runner in the fourth industrial revolution. We already have with us all the ingredients to actually lead the way and make it accessible to the 7 billion people. Now, being an international financial services centers authority, I really don't want to talk too much about the potential in the domestic area. Potential is enormous. We are already the third largest, market. And as you said, the concentration of fintech companies, 2,200, 400, whatever it is, that again, we are, among the top three. And that is also growing exponentially. And it was very well put that now, if India really has to become a 5 trillion economy or even go beyond that, there has to be a huge externalization. And that is the real purpose, I think, of holding this conference, where we can have the partnerships, where we can have the networking, where we can market effectively our capacity. Now coming to the budget announcement, where where the Honorable Finance Minister announced that government intends to create a world-class fintech hub in the IFSC in India. The reason is the IFSC can act as the second engine of the Indian economy. It can be the external engine which will not only channelize global capital flows into India, but it will also make the external face of India available in this center, which is actually like onshoring offshore conditions. This is like an international jurisdiction, because when you do business, export oriented business or export from India, you still have the capital account convertibility and other issues, and you may have different sectoral regulators. But if you walk over to the IFSC here, you have a unified regulator who regulates all the 4 segments of the financial sector, and you have full capital account convertibility. You are treated as an international jurisdiction. So if you want to have an international presence, this is another viable option. From what my friend from BCG articulated in his presentation, I found that overwhelming number of the startups, the fintech startups, have expressed their desire to have an export, to work in the area of exports. But some of them feel that they may be too small and uncertainties may be too large in a foreign jurisdiction. Then you have an Indian jurisdiction, which is international. The IFSCA, I would like to emphasize, attaches huge importance to developing a fintech hub here. We want to be the front runners in this. I would like to just share with you a very remote experience I had. I'll just take a minute on that and say how an opportunity was lost then, but we should not lose that opportunity here. You see, way back in early 90s, when India was expanding its telephony to all the 7 lakh villages, we found that that was not possible because the switching systems which were being imported were of a minimum size of 5,000. And if you want to have a switching system in a village, you can't have 5,000, you may want 100. So that is the time the CDOT worked and developed an indigenous product, which was 110 switch capacity and modular. It could be added on, stacked and made 5,000. So beyond 5,000, you already had enough choice in the market. We developed it, and that actually enabled us to reach out to all the 7 lakh villages and have telephone connectivity. It was a telecom revolution. Now, at that point in time, the whole of Africa and the whole of Latin America was desperately in the need of a similar technology. And had we exported the C-dot switching systems to these countries, they would have been totally within the, plugged in with the Indian technology system. And we could have had a complete sort of, partnership with these 2 continents. We missed that opportunity. Now again, there is an enormous potential in India. I was reading in some of the literature which I came across that current worth of the digital transactions is 65 billion, and it can become 150 billion, or it can become 300 billion. Obviously, it's going to become, because even now, only a fraction of the economic transactions are happening digitally. A lot more will happen. It will also scale up a lot. There's no doubt about that. Government's direct benefit transfer has been a great trigger to this whole process and to the entire process of democratization. So one thing which is established beyond doubt is the proactiveness of the government and the proactiveness of the regulators. I think they have, for once, you can without doubt say and give the credit that the Digital India, the Startup India, the DBT, the UPI, these initiatives actually have created this entire opportunity, and thereafter the talent at the grassroots level has made use of this opportunity. Again, I would also like to share another view because they're all relevant. You see, when mobile telephony, I was in late 90s looking after Foreign Investment Promotion Board. And at that time, I remember as the director there, we used to have test marketing permission given to the mobile manufacturers. So I remember at that time, Motorola manager used to keep coming, or I think it was Nokia manager, for every year to extend the test marketing permission. So I asked him, why are you coming every year to extend the test marketing permission and just importing your mobile phones and selling it here? Why can't you manufacture? You should manufacture. The issue was that the demand just was not there. And it was not affordable. And at that time, when the government in power took the decision of revenue sharing, people didn't have upfront capital to put. When the revenue sharing decision was taken by the government, there was exponential growth of telephony. And every month, 5 million subscribers were being added on. And today you have 1 billion subscribers. So the issue is that if an appropriate ecosystem is created, appropriate opportunity is created, and if the traction is there, it is exponential. There's nothing else. I am seriously of the view that in the IFSCA also, some such opportunity is begging, it is waiting, that you can make use of this opportunity and there'll be exponential growth. So there can be one to raise capital. You can raise capital from here. We are also soon coming up with the SPAC regulatory framework, because that is the flavor of the day, that when it comes to startups and all, they are not very well-known entities. If they themselves come to an IPO, there may not be many takers. So some established players with a blank check company, they will come and they will, with their credibility, they will take money and then identify a proper target company and merge with that in a 2-year or a 3-year time span. So out of these 2,100 or 2,200, 1,800 are early startups. They will require some such facilities. And finally, we can act as the financial laboratory, not only for India, but for the globe. And I'm serious about it. We have all the 4 segments here. So whatever interplay is there between insurance and, lending or anything else, all those things are available here. And as we go along, there'll be a huge concentration of financial institutions here. There is no reason why this will not grow. into prominence and grow exponentially. So I feel that it is a right time that this opportunity which the government's announcement and IFSC is sort of proactive initiative. Many of our participants, companies, etc., who are looking at this should look at this opportunity. I will soon set up a global advisory board for IFSCA. I'll request Jyoti to sort of also work on this. We should have some prominent people who can be on this board so that this dream is made a reality. And this dream, I don't think it's an empty dream. Everything is there for this to be successful. It's only the question of seeing this opportunity and having the tenacity and having the will to work hard for it, because nothing is going to come easy. So I thank FICCI for giving me this opportunity. I am very happy that so many international players are participating. I think I have no doubt that the fourth industrial revolution will be shaped by India. Absolutely no doubt about that. And I'm sure these are all important pieces in making that a reality. I once again compliment FICCI and other associations for coming up with such initiatives, and look forward to having a fruitful and meaningful partnership with all of you. Thank you once again.
Thank you so much, sir, for reaffirming your support, and we stand with you in promoting IFSCA and India. We are very confident that this will become a way for us to look at the globe, and definitely work with you also in putting together the board as you have asked us. So we'll work with you. Thank you so much once again for your very passionate and thought-provoking address as always. So with these words, I now move to Mr. Govindarajan. He's also the co-chair of FICCI Fintech Committee, apart from, of course, being the founder of Perfios. So over to you, Govi, for your concluding remarks.
Thank you, Jyoti. Once again, a warm welcome to all the dignitaries here and the participants. So as Sudhakar mentioned, this is a fantastic time to have a symposium expo like this, right? And Mr. Shah kind of set the right context. Being a veteran in this and a pioneer in this financial services space, he was able to trace eloquently and talk about the evolution of financial services, how digital and fintechs have been playing a wonderful role, right? So he was talking about the APIification and how COVID, interestingly, has been a big accelerator for this fintech adoption. And as others also pointed out, one of the biggest things that fintechs have done is the democratization of access to data as well as the financial services. And then Sudhakar kind of built upon that theme and talked about the trends in India and set the ground for why fintechs are in a fantastic position now to go global. After having kind of set the ground in India and having demonstrated their core capability. And which is what Ruchin talked about. He said, once you set the core capabilities and demonstrate the scale in the kind of complexity that India offers, then it is the right time for it to move global. And it was a wonderful presentation with all the data points that typically BCG comes out in their knowledge report. And so what he was talking about, interestingly, were the challenges that are faced by fintech, which we will talk about in subsequent panels during the day. And he was talking about also how different arms, the stakeholders, whether policy, government, and other functions, can also help these fintechs to go global. And then we heard a wonderful speech from Shumeta talking about the fintech evolution in the context of the banks in India and how they have been collaborating. And one interesting point that he made, which I think is very, very relevant when we talk about all this growth, is how privacy has to be baked into any architecture that we talk about. It cannot be just growth for the sake of growth or growth just ignoring everything else, especially in the context of all this cybercrime, cybersecurity, all that. It becomes extremely important to have privacy baked into every aspect of fintechs, or for that matter, any industry. And thank you, sir, for bringing out that key aspect in your talk. And we have been interacting with Sri Rajaram in multiple forums. And as usual, it was a very enlightening talk. He talked about quite a few initiatives of the government that has gone a long way in enabling the fintechs. So without this kind of support of various digital initiatives from the government, it would have been very, very difficult for fintechs to scale these challenges. And one of the things that he talked about, which I think is very relevant moving forward, is this whole credit enablement through OCAN and AA infrastructure, because that is going to completely democratize and the whole credit and bring so much of microfinance / people who are not in the credit system already bring into the main fold. So it is important that some of these initiatives, fortunately, both the regulator and the government has been fully behind it. And we are hoping that the fintech ecosystem will leverage this and then build some unique capabilities and applications on top of it, so that, as Sri Rajaraman was emphasizing, we can bring the bottom of the pyramid also into the mainstream. And then Sri Srinivas was talking about eloquently about how IFSCA is kind of going to help in some of these initiatives, the hub for the fintechs. And he was talking about how, with the leadership already or demonstrated leadership in technology and fintech, India as a country is ripe to scale this fourth revolution and can be the leader taking all these initiatives to the globe. Sir, in this context, as a practitioner and as a fintech, and having seen a lot of the problems that some of us have, sir, a couple of suggestions. So one of the things that most of the fintechs face is when we try to get into a new geography, the whole regulations compliance is a big minefield that each one of us have to navigate on our own. And with the kind of limited resources we have, it's a challenge, to put it mildly. So it would be really helpful if there is some initiative where there is a repository available or some arm of the regulator / government / IFSCA or some form where there is some kind of a repository available for us, either through a FICCI kind of or a fintech committee in FICCI, where this is made available to the fintech so that each one of us need not have to reinvent whenever we try to go to a new geography. If there is some kind of an authenticated handholding that is available, that will be extremely helpful for this fintechs and cut short their time to go to market. Similarly, in that same context, one of the biggest challenges we face, in fact, maybe the first challenge we face is, how do I even know whether the product that I'm taking to that market is relevant? So in order to kind of assess that market readiness and market fitment, all that. So there again, each one of us basically reinvent the wheel and trying to figure it out. And obviously, as a smaller fintech, we don't have the resources to go and buy those expensive reports. So if, again, there is some kind of a handholding and help that is available through IFSCA or through other arms, Sri Rajaraman also can look into this, that will be extremely helpful. But it was great to hear from all these dignitaries that we are ripe and there is so much of support from the government and the other arms. And I'm positive that the rest of the day will be extremely helpful and fruitful for all the participants. And thanks again for taking time to come to this conference. Thank you to all of you, and over to you, Jyoti.
Thank you so much, Govi. May I now move to our Secretary General, Mr. Dilip Chenoy, for the vote of thanks, please.
Thank you, Jyoti. First of all, Mr. Injeti Srinivas, Chairman, IFSCA, Mr. K. Rajaraman, Additional Secretary, Department of Economic Affairs, Mr. Sunil Mehta, Mr. Ashish Shah, Past President FICCI, Mr. Sudhakar Ramasubramaniam, Mr. Ruchin Goel, Mr. Govindarajan, Jyoti, all colleagues. I think Mr. Govindarajan has adequately summed it up. I just want to leave you with a few word of thanks. First, Mr. Srinivas, thank you very much for being with us here this morning. Thank you for actually suggesting what we could do, but most importantly saying that we need to take it international. So, we have a strong domestic thing, and the sessions in the afternoon with Singapore, Philippines, and Germany actually is taking it international. FICCI does also have a bilateral working group on fintech with Japan. So thank you for your presence, for your inspiring address, and for being with us this morning. Mr. Rajaraman, thank you very much for being here. And I just take away one I from you, which is inclusion. Fintech actually gets everybody included. It can, I think Mr. Rashesh Shah and I think Mr. Govindarajan also talked about democratization and empowerment. So thank you very much for sharing your thoughts with us. Thank you, Mr. Mehta, for being with us. you talked about the banking system integrating the whole fintech into existing, and Susha actually gave the example of the app by SBI. Guess in all fairness, I am also a user, so I just want to disclose that to everybody there. Thank you really for that. Ruchin, thank you for your excellent presentation there, being with us. Mr. Bavankora, thank you for joining the inaugural session. And, even in a listening mode, it's a very important role that you have actually played. To Mr. Sudhakar Ramasubramaniam, thank you for leading this initiative along with Mr. Govindarajan and the other members of the FinTech committee. Thank you, Jyoti and team, for putting this together. So the eyes that I've gone about the FinTech startups are taking initiative, they're innovating, they're looking at integrating it into the financial system. It is all focused at the individual. We have to enable inclusion and take it international. So thank you, everybody, for being here in the opening session. And we do hope that some of you will get the time to visit the Expo. And also, I just want to actually share with you the Expo is being hosted on the FICCI Bike platform, which is actually being developed in-house. Our in-house IT team actually developed this, and it is now an international product. So thank you, everybody, and back to you, Jyoti.
Thank you so much, Mr. Chinoy. And we now come to the close of the session. I would like to add my word of thanks to everybody for joining in this morning. And to all the participants, stay tuned in. We'll be shortly back with you with the next session. Thank you.
IT?
Yes, ma'am, we can go live.
Okay, Prateek, over to you now.
Hi, good morning, and welcome to the first panel discussion for the day. We are going to talk about the opportunities for fintechs in India to go abroad, what could be success factors and what could be challenges. Before we get started, let me introduce the panel that we have for this discussion today, and then I'll use a few pages to set context before we get started with the panel discussion, popularly known as Govi. He is the co-founder and director of Perfios. He's had 30 years experience in the technology domain in India and the US. And prior to co-founding Perfios, Govi was co-founder and board member at Aztec Soft, which is a software engineering company. Perfios, many of you would be aware, is the market leader in real-time credit decisioning and helps clients with automated decisioning processes through structured and unstructured data. We also have on the panel Mr. Nitish Asthana. Nitish is currently president and CEO of Mind Labs. Prior to Labs is one of the fastest growing unicorn fintechs in the country, expanding footprint across the region, both in India and outside of India. And we look forward to hearing some of the Pine Lab experiences from Nitish. We have Mr. Srinivas Nidungondi. Srini, as I call him, he's EVP and COO at Comviva. He just informed us that he's completed 10 years with Comviva just this month, and he currently leads the digital financial solutions business, payment solutions. Prior to being at Comviva, he's also worked at ICICI and ACG. Comviva, as you might be aware, is part of the Tech Mahindra Group, has customers in more than 50 countries. So clearly, Srini and his company have been leading the pack in terms of taking the Indian footprint, Indian fintech footprint outside, and would be very interesting to learn from Srini his experiences and what advice you would give to other fintechs who are attending the event today. We have Mr. Shailesh Deshpande. Shailesh is Vice President Growth at Jokata. He has been with Jokata since 2016, and prior to that has had a startup journey of his own and was a co-founder of a hyperlocal marketplace. Jokata specializes in financial services software for digital lending, financial fraud in AML, and has many leading banks in India as their client. And finally, we have Mr. Saurabh Tomar from NPCI. He's currently product head for UPI and IMPS at NPCI. Prior to this, he was leading business development across NPCI for UPI and RuPay. And he has 15 years of experience working with NPCI and prior to that with banks in the country.
So very exciting and diverse panel. I'm really looking forward to the discussion this afternoon. But before I get started and pose some questions to the panel, let me take a few minutes to just play back some of the findings from the report that was released in our back and what we heard when we spoke to Fintechs in the run-up to this event to set context for this discussion. Allow me to share my screen and pull out a presentation. I'm guessing my screen is still not visible, right?
That is correct, Pratik. Not yet.
So I'm hoping you can see my screen now. Just quickly flipping through a few pages. Today we are going to talk about taking India's fintech expertise outside India and exploring internationalization or globalization as a potential way for fintechs to scale up. As we see around the world, many fintechs over the last few years have really taken the path to expand beyond their home country and explore markets outside their domicile. A few examples listed on this page, but clearly by no means comprehensive. Plate, which was founded in the US, which provides data network platform that allows customers to connect their bank accounts to fintech apps, now has expanded from the US to 40 plus countries outside the US. TransferWise, which was founded in the UK as a multi-currency borderless account for individuals and businesses, today operates across Europe and Asia and has expanded their footprint quite vastly. Airwallex, which was founded in Australia to provide business accounts for merchants to enable cross-country transactions, today has expanded to US, UK, China, and Europe. And finally, Klarna, which is a Swedish company which provides buy now, pay later BNPL services, has now expanded their footprint to 15 plus countries and is targeting e-commerce merchants in each of these countries. So many precedents of fintechs going outside their home country and trying to tap into the market available worldwide. In the run-up to this event, and as part of the report that we've jointly published with FICCI released this morning, we surveyed several fintechs in India to understand what their current footprint is in terms of presence in international markets and what's their aspiration. So if you look on the left-hand side of this page, about 4 out of 10 or 40% respondents said that they already have some international presence. 27% said they have a small international presence and 12% said they have a significant international presence. So we are already seeing signs of fintechs trying to go outside India and capture the market or markets which are relevant to the product proposition that they offer. But more importantly, 7 out of 10 respondents said that they would like to explore or are currently exploring moving international or going international. So it's not just the 39%, but an additional 30-35% on top of that, who may not be present abroad today, would like to explore going beyond the India's frontiers. We further asked fintechs on which regions do they think they would look at as they think about going abroad. And no surprises probably, but Southeast Asia comes out as number one, where with 70% fintechs who said they would like to explore opportunities outside India, saying they would first knock the doors of Southeast Asia, followed by North America and Middle East, which are the other markets that fintechs would like to explore. My sense is North America is more from a SaaS platform as companies look at offering tech solutions to clients in North America. But we'll hear more on this from the panel during the discussion today. We also asked fintechs on all those who tried to make forays outside India, some successful, some not so successful. What have been key challenges that they've faced in their endeavors to go international? So 76% of the fintechs who responded said that they found that accessing customers and partners in target markets is a key challenge. And that's something that they would like to get some advice from our panelists today on how to explore it. It came out in the survey as well as it came out in our conversations with fintechs that they find something as basic as information access to the new markets difficult. They have no means of understanding what the opportunities are, what's the customer segment, what's the target market size. And so they would like better information access to markets that they would like to target. 67% of early stage fintechs seek financial incentives to invest in proof of concept exercises. And another, or 65% fintechs believe establishing credentials with relevant financial institution customers is a challenge. And these are exactly the themes that we would like to discuss with the panel when we speak to them today about their experiences. Also, what came out in our discussion is what are the themes or what are the pillars on which fintechs are thinking about international expansion. And there are three broad themes that come out. First, the business model, which is core to the fintech in India. Is it portable? Can it be taken to another market? And this has three sub-elements to it. One is the regulatory environment in the target market such that the current proposition can be exported. Does the proposition itself lend to be exported or extended to different markets outside India? And is the proposition independent of country infra, and therefore what's been built in India can easily be taken to another market outside of India? So portable business model is one aspect. Product readiness is the other aspect, which probably indicates more to timing. What's the right time? When are they ready to go abroad? And the third is how do they get access to new market enablers? So access to capital, access to regulatory approvals, access to local partnerships are very important. And again, this is something that we'll delve a little bit more during the panel today. If I just take the first element of the previous page, which is to understand, is the proposition portable to be taken to other markets? We've tried to look at different fintech archetypes and tried to assess on which archetypes might be more suitable to being exported outside India versus some of the others which may be more difficult. There are three dimensions that we've evaluated for this. First, is the proposition or is the business model or the product that the fintech offers, can that be transported regulatorily? Are there any regulations that would either enable or restrict the export of this business model to international markets? Second, is the proposition itself something which would be relevant to countries outside of India? And third, does the proposition or the current business model rely on any infra which is available only in India and may not be available in target markets? And this is our stake at trying to assess these different archetypes on these parameters, and we feel that SaaS plays would probably be more relevant. We also feel payment platforms could be more exportable. Payment regulations are quite similar across many markets, and if you pick the right markets, then you should be able to take payment platforms. And even marketplaces, which are more platforms which have been created, the platform can be exported. Obviously, the relationships on the platform will need to be built from scratch, whichever market we go to. So again, some themes that we would probe a little bit more with our panelists, but this is what we want to discuss today. So what's the right to win of the Indian fintech industry? What have been some value pools that the companies that we are speaking to today have targeted? What are the challenges? We discussed some that have come out in the survey, but would like to hear more from the panelists. And what support, therefore, would be required from stakeholders, both policymakers as well as financial institutions, to make this dream a reality for many fintechs who are listening to us today. So with that, I'll move into the panel discussion and start the discussion on some of these questions. Let me start with Govi. Govi, I think you've been running a stable fintech in India for now quite some time, and you've also been exploring markets outside of India. Some successes. As you thought about taking Orpheus international, what are some of the challenges that you faced, or what are some learnings, some things that you would do differently if you would all over again?
Thanks, Pratik. So the flippant answer to that is every day we discover new challenges. So, but let me summarize it. I'm sure every other panelist will echo the same thought. Say I would kind of put it in 3 or 4 buckets. The first is actually the report also talked about it. Access to the market data, although it looks trivial for a lot of people that may be listening to this, access to market data is a key thing, because before I enter a geography, I want to know whether that product itself is relevant. What is the available market? All that stuff today, every fintech unfortunately has to do the groundwork from let's say whether it is the consulate in those countries or the IFCG that we talked about earlier in the day, if there are some kind of an organization, like there's some support that gives a repository. Like a couple of weeks back, I was reading Government of India is trying to subscribe to all the research reports for educational institutions, so that the smaller educational institutions need not have to be feeling that they are left behind. They will get access to all of those, right? So likewise, if there are some of these reports authenticated regulated entities, that will go a long way, because access to market data is a key thing before I even decide which country to go to. Second thing, of course, is the whole regulation and compliance. It varies from country to country, and it's a deep minefield. And here also some kind of a help in terms of if there are some repository that is available which says data residency is required here, data cannot leave the shores. I mean, various other things of this compliance and regulation is a big challenge. Other thing that people overlook is the cultural preference. As we get into that market, we realize that, for example, in certain countries, pure professional relationship is what is encouraged. You have to go try to pitch your value proposition and then get out, right? And then you sell or don't sell. Whereas in certain other countries, it's completely based on relationship, trust. It takes a lot of effort to kind of do business development in those kind of things. And this requires completely different skills. In one, it is purely professional relationship. In the other, it's more of other kind of business relationship, establishing trust, all that kind of stuff, right? And there are a lot of other cultural preferences that are baked into it. And unless, which is the next part, unless you have a local presence or a local partner that can help you in navigating all this, doing a suitcase kind of a culture, sitting in a Bangalore or a Mumbai and trying to do this is almost ruled out. So it is imperative that you work with a local partner that understands all of this and can help you in navigating this. So I think these are 3 or 4 specific challenges we found. And absolutely, there is no solution. It's not like I can read a ready reckoner and next day I'm prepared for this. You have to navigate all of this and then understand and try to react to all of this.
Thanks, Govi. I think very nicely set up for further discussion. I think you've very clearly articulated the 3-4 things, being information access, regulatory, cultural access, partnerships. Let me build a little bit more on that thought. Shailesh, let me come to you. You've also had experiences with partnerships and you have a point of view. How important is to have the right partner as you look at a new market? And what are some tips or tricks that have worked for you as you looked at entering new geographies?
Sure. Thanks, Prateek. So I would tend to echo a lot of what Govi just said. You do need to study the market that you're targeting very, very closely. At Jakarta, we look at the macros and micros. We look at demographic, socioeconomic indicators, the standard macro indicators, maturity of the banking system, but we also look very closely at the digital readiness of a market that we're targeting, which is the ecosystem data availability. Is there enough API readiness in that market where you can take a base use case for lending, which is a focus area, and take it to different markets? Is there enough of a mature digital payments infrastructure in that country? Is there eKYC, e-sign regulation and infrastructure that enables a lot of the use cases that we support on our platform, right? So understanding a lot of these nuances is absolutely critical. You can't just lift and shift a product that is made for the Indian market and take it to a Singapore and a Malaysia and an Indonesia and expect it will work. So which brings to my second point, which is that we all as fintechs need to really contextualize a product and services offerings for the markets in which we are looking to enter. And that's where partnerships help. That's where building a understanding of that market, about the customers, their preferences, cloud versus on-prem, enterprise SaaS versus license models, all of those things come to play. We obviously, another critical thing from a fintech product company perspective is to build very adaptable IP. It's important that the IP you're building is not something which is very specific to a geography. The core offering does not fall apart when you go to a different market if it has different regulation, right? It's important to build IP that can adapt to a local industry or local market. And partnerships are extremely key, extremely important. As Govi said again earlier, in some markets, it is preferred that you go through strong, either consulting partnerships or systems integrators who have a strong foothold in that market, and you pitch jointly and build a go-to-market around that. But partnerships are also product partnerships, which I think are equally important, where We've seen when we implemented a product in Hong Kong, for example, we partnered with a local KYC provider. We didn't go out and try to build those pipes into their infrastructure because that would have delayed our launch. So we partner in those markets for alternate data providers, for KYC providers, etc. And it's important that your partners and you are completely aligned. You have a clear go-to-market strategy. You're very, very numbers-driven, and you're transparent with each other in terms of what you're trying to build together. And also you're flexible because your global partnerships may not work in each market. And in our own example for if I take my recent example, we partner with a global cloud service providers for a SaaS offering, but they don't have presence in Indonesia. And based on the data localization rules in Indonesia, as per OJK, you can't really host data outside of the country. So it's a non-starter as a market strategy. I have to necessarily go out and look at alternate partners to operate in that market. So these are some of the learnings we've had. I think as Indian fintechs grow and mature and build up products and expand globally, I think all of these key factors they're very relevant and everyone should look at that, in my opinion.
Thanks, Shailesh. I think very useful. Very useful to get your perspective. And yes, clearly partnerships would be the key to get into these markets, and building those would be important for fintech aspiring to go abroad. Nitish, let me come to you and let me flip the axis a little bit. You talked about it's attractive and what do fintechs need to do. But I wanted to get your sense from your experience on what are some of the strengths or rights to win that you think Indian fintechs have acquired, which make them suitable to explore geographies beyond India?
Hey, thanks, Pratik. Thanks for having me on the panel. I hope you can hear me well.
Very well. Yes.
Yeah, look, I think the first thing, it's very interesting to see that more than 70% are considering expanding, and it's no surprise that they want to get to Southeast Asian markets, right? In my mind, my experience, I've been in the Asia Pacific market in the payment space, and then now in a fintech, which is India going outside. I think it's a lot more about kind of going to the basics and saying, is it the right thing to do, right? So when you think about that, going international is so much about prioritizing resources, capital, attention, and then having some sort of a very meaningful reward associated with that. So there's always going to be a kind of give and get. I think that, if you're purpose built for India and you still haven't won the Indian market and, expanding overseas is definitely a question that you should ask yourself as to whether it's the right thing to do. Diversification, to my mind, is not a strategy for anyone, right? Diversification may be an objective, but getting there is a very, very difficult path. Also, giving you some examples in the payment space, let's look at which kind of companies went global, right? So if you look at 4 themes that happened, one theme was very clearly that there was similarity in customer segments. That's a very, very important theme in my experience. Look at Square. There is a reason Square is in Australia, Canada, UK, and Japan, because the customer segments, which is the retailers, behave similarly across these markets in terms of adoption to technology. If you look at someone like Adyen or Stripe, they went into markets where very, very credit card focused, right? Which gave them a standard plug and play, because credit cards is the most standardized payment offering. And the third use case was very clearly about cross-border, right? So a lot of the things which are on your slide are around use cases where remittances or travel or trade is where examples like, WeChat are there, or TransferWise, or even some of the remittance companies, right? So there are specific use cases how people have expanded. I think right to win, if you ask me, you got to find a market where there is a very deep problem which is similar to what you faced and solved in your home market, right? And when I look at markets similar to India in terms of financial inclusion, payment penetration, insurance penetration, credit access, markets like Indonesia, Philippines, Vietnam, Malaysia to some extent are very similar. And therefore, I'm not surprised that 70% want to go to Southeast Asia. Second one, you got to play a little left field, right? So my experience, our experience as companies also has been that when you try to disrupt and you're trying to compete with local financial institutions, it's a very, very difficult ball game to play. And what we have found is that the best way to do this is to make your solution complementary to the ecosystem out there while you're doing a left field play. So there has to be some sort of a complementarity. And the third one, dealing with entry barriers. right? When you're dealing with entry barriers, there's a whole, I think Govi's mentioned, Shailesh has mentioned as well, information, licensing, on-soil processing, credibility, do you have a seat on the table, and the resistance that you face from competitors as you get in, right? So I think you've got to look at complementary plays. That's very, very important. And final criteria, I would say, right to win is your growth and expansion a distraction from the core or a expansion of the core, right? And that's a very, very big, huge distinction. And expansion can never be a sideshow. There is a minimum cost of compliance as you get into even a small country like Sri Lanka, right? You have to make that. You have to make that. Apologies. You have to make that commitment. You got to do the data research. You got to get your partnerships in place. So I think expansion does need to be a little thoughtful and purposeful rather than an experimentation in my mind. And I think there is a good staging of when you want to expand at what stage. That's pretty much what at least I have seen here in Pine Labs and prior to that as well.
Thanks, Nidhi. I think good to hear quite consistent views coming across from all three of you. And I think that's making it quite clear to the fintechs listening to us today that there is a clear agenda in front of them as they think about taking their services outside India. I want to pick up on one element, Nitish, that you spoke about on identifying the right customer segment or the markets which have a similar customer segment and go there. And on that point, I want to invite Srini to talk about his experiences. Comviva has, for the last several years, built or focused on a few customer segments on deep there. So, Srini, what's been your experience of understanding a customer segment deeply and that giving an advantage to take your product to markets which have similar customer segments?
Absolutely. So probably I'm one of those one of those companies where 12% of our business comes. I mean, I'm part of this 12% segment where most of our business comes from outside of India and pretty much focused in the fintech space. So the one thing which I look at India, and I think to what Nitish also was mentioning briefly, there's enough and more market that we have in India and across segments, to briefly what you also mentioned. So, and India gives you that unique ability to play across segments. I mean, if you look at the pyramid from a consumer perspective, right from the bottom of the pyramid, that which is the underserved and the underbanked, all the way to the digitally evolved consumers, we get a decently significant size where we could kind of introduce products, be it in the direct to market or direct to consumer play, or in the B2B plays where you're working with other fintechs or banks, etc. So you have the ability to kind of provide different solutions and really sharpen and then look at going abroad, is what I would say. And from our perspective, probably a bit of a digression here. I was surprised that I didn't see Africa at all. And because we are present probably in 35 plus African countries, and probably that's one thing that we really probably found out a white space, if I may, and we really tried to capitalize on it, and I guess it really worked, which is we looked at the emergence of the overall financial inclusion thought process in the country, starting from 2006-7, the introduction of business correspondence, and at the same time you saw the mobile penetration happening, and the financially excluded, what they had in common was the mobile phone. Everybody started having the mobile phone. So a combination of the mobile phone, the distribution touch points, which in India was the business correspondent model. But outside of India, we're talking about the distribution network of the telecom operators. So we kind of figured out the ability to kind of reach out and suddenly get a lot of customers or people into the banking or financial services fold. We thought it was a huge opportunity to work with service providers outside. And the experience that we saw in India from 2006, 7, 8, 9, 10, we could really build a product that was quite relevant. And what kind of happened is that, as I said, we're probably present in 35 plus countries in Africa and made a real impact where we're now talking about, if you look at what's called the mobile money market world over, which is where you really get the financial inclusion objectives and the SDG objectives as defined by the UN, suddenly we kind of see that a lot of people have come into the financial services fold to the extent, I'm thinking around more than a third of all mobile money users in the world are in sub-Saharan Africa. Probably we identified that white space and really been able to capitalize is what I would say. So that's one example that I would look at. Similarly, we would have the examples of saying the digitally evolved consumers, mobile banking, internet banking. India was, I think, clearly leapfrogged into adopting what was really emerging, and we really didn't have a lot of infrastructure, be it ATMs, POS machines, etc. But when the internet and mobile revolution started off, I guess we could really capitalize. And a lot of digital banking solutions that we kind of look at worldwide. Now we're talking about the developed world, and that's what I was talking about. India really gives you both the or multiple segments which we could really play with, and that's the other opportunity that I kind of clearly look at. The other thing, probably, to what Govi was talking about, and I just wanted to highlight this for people who want to go out. Apart from cultures and a lot of things that you look at, language is an interesting and an important thing to look at. Probably sitting in India, that's one thing we probably tend to miss out. Pretty much most of the financial services play happens to be in English. Obviously, we now see a vernacular languages being promoted, but that's still quite negligible. But if you go out of India, while we do business in English, when you deliver products, it needs to be in the local language. And there are small nuances like right to left, which is in Arabic, for example. So those nuances need to be kind of looked at, and probably those aspects need to be given importance to. But outside of that, I believe India gives enough and more ability for people to learn and sharpen their products to go out, is what I would say.
Thanks, Srini. I think very useful input. Some of these sound small and trivial, but I can imagine very well that these can be very important as you're thinking about entering a new market, and clearly something critical for fintechs to keep in mind. Saurabh, let me come to you. You built a fantastic product which has become the poster child of India's payment industry in the last couple of years. I'm sure there is a lot of demand for something like UPI from international markets. How is NPCI thinking about taking UPI outside India, if NPCI is thinking about that at all?
Hey, thanks, Prateek, and thanks, everyone. Good morning, everyone. So, a couple of things. I think, most of the points is already been covered. So, and I fully agree with the Govi and the Nitesh and Salesh and everyone that there are, international markets are very expensive market in terms of, we going outside. The only couple of things which I want to start with, because it's, and I'll confine my thoughts to the payment side. Payment is a very, very sensitive, area, and plus it is regulated area, right? So, and with this new things coming like PI and all those things, there are a lot of, action happening around these action points, right? So, what we believe in, that I think we at NPCI, we truly believe that once you have the not one strategy or a tactical thing, once you have the proper plan in place, and that's what we did. What we did in India, that we started with the cards and ATM, and then we try our on the Aadhaar side, and then we hook ourselves onto the mobile first approach. So the three things: cards, the biometric stuff. That is the three things which always remain in some other form. So same thing which we are looking at. So our thought process is very simple. That first of all, whatever services which we have created in India, Indians can use that thing, these services outside. So acceptance is going to be our, our agenda and our priority. Along with this, since very long, we've been consulting to various central banks and the countries, to understand and to develop their, countries, or to understand roadmap. So we are, working with, and we have, aligning our thoughts that how can we take our RuPay and UPI outside. So already some work is on, and in this regard, we have already established our international wing and our, NPCI subsidy, which is, clearly focusing on the, taking these products to outside India.
Okay, fantastic. Thanks a lot. So we are all waiting to see the action that you guys are able to generate, or even Rupee for that matter, by taking this to markets outside India. Before I start my next round of questions, I just want to encourage the audience who are listening to us. If you have any questions, you can post it on the chat window, and we'd be happy to take them and pose them to the panelists during the course of the discussion. Govi, I want to come back to you with a specific question. I remember the survey that I flashed up front. One of the points there is that 65% of the fintechs felt that they face challenges in establishing credibility when they go to a new market. Now, you had the chance to work with several leading banks in India before you started national expansion. How did that play out for you? How important were those credentials? Could you really use it to your advantage?
Actually, this is an important point, and I think that is one of the reasons why you find 70% say they're going to Southeast Asia, or 50% say they go to Middle East. Because if you see, at least in the financial services space, bulk of the decision makers or mid-level managers will be of Indian origin. So to that extent, any experience you do, so let's say when I go and tell a brand new customer in Indonesia saying bulk of HDFC or SBI or an ICICI is going through our platform, that establishes instant credibility. Right? Yes, we may be a very small entity. We would not have done business before in Jakarta or whatever it is. But the fact that an HDFC or an ICICI or an SBI is using this platform for the last 5 years and so much of volume is flowing through that for critical applications definitely establishes credibility. And I think that's one of the reasons why a lot of the fintechs are looking at adjacent markets like Southeast Asia or Middle East. So yes, credibility is an issue because they don't know us. And by definition, most of the fintechs will be small entities with very little resources. So the best way to establish credibility is by your track record. And that is why actually, even in the earlier session, when Ruchin was saying, you can go there only after you establish your credibility and you have demonstrated your core in India. It cannot be just as Dish also mentioned, diversification strategy. It has to be like after you establish your presence, demonstrated your capability, use that as a credibility factor when you go to the new market.
Yeah, I think that's obviously very important because you need some in. We've been saying that it's very difficult to just go to a market and establish yourself. So having these references clearly, I think, is very important for you to get the first break.
And Pratik, if I may just add one there, I mean, this is more like a impassioned plea to if there are PSU banks out there in the audience. So one of the things that would help some of these fledgling fintechs is if they're already working with some of the larger banks, like let's say a BOB or SBA and all that, if they can provide some kind of a bootstrapping to this, saying in these markets also we'll work with you, or you can do a quick POC with our data or our solutions in that market. That can be a quick POC for them in that region. Yes, they may not be the biggest customers there, but at least these fintechs can go and say, we already work with one customer in this region. Right?
Yeah, I think that makes a lot of sense. Nitish, I want to ask you one question building on what you were saying earlier about the fact that this should not be perceived just as a diversification strategy, but needs to be core to your core strategy and needs to be built upon that. I think Pine Labs was quite stable, mature, well established in India before you really started foraying and set up presence in Indonesia, Vietnam, etc. So how do you think being mature of a certain size and scale in India helped you? And is that an advice you would give to most fintechs that maybe early stage fintechs should first focus on establishing themselves in India, similar to what Govi just said? Does that really help?
Yeah, look, I'll take 3 instances of what we did consciously against just copying and pasting business models and products into another market, right? So one, and it goes back to my point that, do you have a left field advantage and is there a real need, right? So first one is the network of pay later that we built in India, right? So that's a network which is basically essentially bringing together OEMs and brands, merchants and financial institutions to deliver credit at the point of transaction. It's a very, very simple concept. But if you think about it, only 50 million customers in India have got credit cards, right? And there is obviously a growing market for credit, but it has to be properly managed, right? So we built this network and we said that we'll bring all these people together. And this business is now a 3 billion business. So we delivered the credibility of scale in India. And we found that there are many similar markets in Southeast Asia where a similar gap exists, that consumers want affordability, brands want to sell more with more affordable products by splitting it into EMIs, right? And financial institutions would love it as well. So we didn't go and just paste our payment system there. We said that we'll enter with a pay later value proposition because that makes it very complementary to developing the credit model at the point of purchase. And the whole reason our MasterCard partnership is helping us get into these markets because building a network for authorization and converting it into an EMI transaction across a range of banks, you need an interoperable system and you need a set of partnerships. So that's number one. Second one we found is that, on the payment side, again, we didn't want to go and, just go put a system which competes with the banks or the GHLs of the world or the MolPays of the world or the Ocean Payments, right? So we said like, look, let's solve a problem where merchants can actually continue to deal with their financial institutions for acquiring, but we provide the payment technology. It's a very simple thing. If you go to a Senheng in Malaysia, you will find that there are like 8 terminals out there for different banks which the merchant wants to deal with. We converged that into one POS device and said you can deal with 10 financial institutions on one device. And in Malaysia, our base has grown to 25,000 customers now. We got 4 acquirers and about 9 issuers on the pay later system. And the third one is the prepaid stored value, right? We've got 90% market share in stored value through the Quicksilver business that we acquired. That's a business we didn't look at international expansion, rather said that, look, if we've got clear use cases in India, right? Let's go in and take those use cases to merchant categories and corporate categories across the region, right? So in that we were able to build our credibility because we have an Amazon in India, we've got all the major online brands and LFRs in India. We were able to have a good conversation with the top retail chain in Australia, IATA, which is airline aggregation in Europe, and some of the largest LFRs in Southeast Asia as well. So my view is that I don't think that we have ever looked at supplanting our business model. It has to be complementary to the ecosystem. It has to solve that gap. And that's what we've done with these 3 concepts going out into the various markets.
All right. That's very, very useful, Nitish. I think that's obviously food for thought for many of the fintechs who are here today listening to us. Shailesh, I want to come to you with one specific question. We've heard a lot about what it takes to succeed in a market when you enter there. But even before you decide about which markets to enter into or how to enter, what implications have on your core business model or the product or the proposition that you're building? Is there something you need to keep in mind even while you're building your core business, such that you build it maybe modular and you're able to take it to different markets? Has there been any experience that you had?
Yeah, absolutely. In fact, at Jakarta, we always knew that we were building in India for the world, right? We always knew that we would go after our home market first, but we always had global ambitions, and we knew that we were going to be building. So our platform, Jakarta Grid, right? The name Grid itself comes from that sort of Lego-like modularity that we built into the platform. The idea was that we wanted to separate the intelligence and the analytics within the platform on the credit side from the data aggregation and the pipes into the local data ecosystem, the local payments ecosystem. So we wanted to always keep those two separate. We understood that as we went to foreign markets, we would have to either partner or build those rails separately. That is baked into the way our technology architecture was built ground up. So you do have to take these early design calls, because if you end up building a monolith, it's hard to deconstruct that and then try and make an elephant dance, as they say. So we always built for modularity, for scale, and for that adaptability into multiple markets. And from a business model perspective, see, it has evolved for us over the years, right? The Indian market behaves a certain way, and there are local nuances you would have to take into account. There are certain preferences where we work with large banks, fintechs, NBFCs, e-commerce players in India, enabling BNPL for some of the same merchants that Nitish also works with. There is a certain set of preferences, there's a certain dynamic that exists, and you have to play ball with all of that, right? But you can't, when we look at ASEAN as a target market, right? While everyone thinks of it as a homogeneous block of 500 million people, it's not really that homogeneous. And if you dive deeper, the way an Indonesia behaves versus the way a Vietnam behaves is completely different. And you really have to while you may have an overarching strategy for the region that you want to maybe have a base in Singapore and enter those markets, you will have to evolve your business models guided by the local gaps in the market. We also have to understand that these markets are served by some of the largest, not just Indian, but Chinese fintechs and global fintechs who are now based in Singapore, and they have access to some of the best fintech products, right? And so you really have to build world-class products, and your business models have to adapt to that, to each geography, and somewhat play ball with the prevailing situation in that market. So we're very much cognizant of that, and we always try and find that gap in the market and find partnerships, and like Nitesh said, find value in providing complementary products and services so that you're not trying to rock the ecosystem, but you're trying to enhance the overall value in that ecosystem when we go and launch there.
Thanks, Shailesh. I think very important. Think about it right from the beginning, and I really like the Lego example, and the company should think about building it modular. One more question, Shailesh. I think Govi talked about culture upfront also being very important as you think about going into a new market. What have your experiences been with culture, and how have you adapted to the target culture of markets you've been?
Oh, it's extremely important, actually, a very pertinent point, often overlooked by technology companies. Typically, we are all obsessive about our customer experience and building world-class tech products, but sometimes it's the softer aspects of doing business that really, that go a long way. And to that, I mean, there is no easy pill to it. You have to get involved in that market. You have to understand the cultural nuances of how a particular market operates, how do you do business in that market, what is acceptable, what's not acceptable. And you can only get that level of familiarity by being in the market, by being visible. And that's where, for early fintechs who don't have a lot of resources, I encourage that you engage through fintech festivals, you engage through trade shows and industry associations that can help you engage with that overall ecosystem, understand the culture, understand how enterprise sales is done, understand how business is done in that market. So these softer aspects, I think, are extremely important when you go to a GCC and how the Arab world does business versus when you go to ASEAN and how each of those markets behave. It's extremely critical for your success to understand that.
I completely agree. Culture is often an element that we don't really think about actively, but can we really make or break and drive our success and new market? Srini, I want to ask you one question. We've been talking a lot about Southeast Asia, Indonesia, Malaysia, Vietnam. We spoke about maybe North Africa where you are present. But do we believe that whatever is being built in India by fintechs is only meant for developing markets? Or are there opportunities that you see in developed markets as well?
Oh, absolutely. So while I talked about the emerging markets and probably focused a bit on Africa, because the other panelists talked about the other regions. But by the way, it's not just North Africa. We're there pretty much north to south, east to west. And it's a very interesting medley of cultures is what I would say. But if you ask me, for the level of maturity that we have in our financial services, I think we're one of the best in the world. If you look at digital banking, if you look at lending, the kind of innovation, the kind of thought processes, and more importantly, the way customers are adopting and reacting to that, I think is very interesting. And I kind of had done a research around 2 to 3 months back of the US market in the digital banking sector. And I must tell you that a lot of banks are far behind. I'm leaving the top 3, 4, 5, or 10 banks because I'm sure that they're kind of focusing a lot on the digitalness or digitalization. And I must tell you that I mean, both the products and what India has already kind of achieved is significantly beyond imagination is what I can say. So it's really about putting a packaging and getting to the white spaces is what I would say. So US, which I believe is a huge market to look at, and typically the US market also is quite receptive when we talk about the Indian companies. Earlier it used to be the services market, but I don't see a reason why it can't be for the product thought process also. The other point I just wanted to talk about, I remember when we launched mobile banking in India probably a decade back, in the US it used to be SMS banking, and that was an innovation. So that's the kind of distance that we seem to have covered. So I think if we really focus on with the experience that we have, we can easily go to the developed world. The only point to kind of probably look at would be the cultural thought processes, and I think that's something we have to look at. And how do we enter the markets? It's not so easy as we would think it is. So the market entry thought process should be really thought out. But from a maturity and a readiness perspective, I would believe that we're pretty much there.
Perfect. I think that's why probably in the survey, almost 60% fintech said that they would indeed want to explore opportunities in the US as well. So there are opportunities in developed markets to identify the right white spaces and then go after them. We have some questions that are beginning to come in from the audience on chat. Let me try and take those. The first one is more about payments. So Nitish, let me direct this question to you. How do you see Indian fintechs competing with likes of Amazon Lending and Google Pay, who already have scale and presence in the markets?
I think, look, on the payment side, of course, Google is a great example about how it can expand. But the core behind any payment front end or an app is basically the way that KYC happens at the back of it, and the payment rails that exist at the back of it. And this is where I think what NPCI has done is really commendable, right? Which is the entry point for a lot of payment fintechs is get in on the UPI rails, get into and create a customer base both on the consumer side and the merchant side, and that creates an infrastructure where I think a lot of services will get layered on top of that, and of course it will get facilitated by the ecosystem coming together. So that question, whether it is for international markets, I think there are different markets that are at different stages of evolution when it comes to immediate payment system, faster payment system between account to accounts, and the KYC infrastructure and the identity infrastructure that exists. So it's not a very, very simple thing. If that question is about India, then I would think that a lot of fintechs are in a great position to build out services, starting with core payments and then bringing a lot of other things on the value system. Look, our story is very simple. It's a reality that the margins on payments will continue to go down and keep going down. So this is going to be a market where margins are thin, but scale is very high, right? And you got to think of it as a little bit of an infrastructure play and add value through adjacencies. And that's the way we operate. I think it is overall, lifetime value of the customer that you're boarding.
Pratik, I want to add to just what Nitish said. I completely agree with that because in addition to payment, what we see, our experience is practically every one of these large B2C payment companies are getting into lending to Woken, and some of the rails that we have built here will be, far, far superior to what we find in the international market. So to that extent, if I take India, if this question is relevant to India, I feel that the Indian fintechs in this space have a huge, huge opportunity. In addition to the core payment that they are addressing, some of these value-added services can be a phenomenal opportunity.
Right. And Saurabh, I just want to check with you if there's anything you would like to add, given a lot of it is about UPI and fintechs building on top of UPI. Any experiences that you've had which give Indian fintechs some teeth to fight the big tech?
I think India is a very big country and a very diverse country. And our India is to give the best of the uptime and to our users and our partners. That's what we are looking at, and we will continue to do so. In terms of getting more values on UPI and more value additions and enhancement, a lot of things are in process. So I think we will see in coming months. So we are adding a lot of value additions there for our partners and our banks. Definitely. So a lot of things are in the regulatory approval. So that's how it is.
I think all the bankers present here would also be looking forward to that, and so would the fintechs. Maybe I'll take one last question from the audience. Govi, maybe I'll direct this to you, but others may feel free to chip in. One of the main challenges when expanding business abroad is the restriction that some markets have about local partnerships. For example, a bank in Thailand might not work with an Indian fintech directly unless it comes with a local Thai partner. How should fintechs think about it?
So as I mentioned earlier, this is a problem that we have faced in many countries. In fact, there are things like agreements and invoicing and all that has to be done only through a local partner. It cannot be through a foreign entity, right? So that is why, as Shailesh also mentioned, it becomes important to initially itself identify who are the kind of local partners you want to team up with, because there has to be a complete trust. Because if they are going to front-end your customers, hold the customer relationship, it's important to identify that partner. It is not just for business development, but it is like you are in it together, right? For the complete life cycle. And in some markets, we have even found, as I said, agreements and invoices and all that has to be routed through those partners. So we don't find a way out of it. It's not possible to go and establish our own offices in every one of this geography. It's so we need to identify the partner.
Absolutely. Probably if I could add on that, Pratik.
Yeah.
Yeah, sure. So I think that's a big issue. And well, we do have offices in 40, 50 countries, but the compliances and the like, apart from working and getting the agreement sorted, is a very onerous task. So there are two ways to look at it. If you're a B2B player, one of the ways to look at it is that you tie up with a channel partner or work with large SIs. Sometimes it gets very easy because all these system integration companies, and a lot of them are from India too, would already have contracts with a lot of these banks and payment service providers. It'll be far easier if you're able to convince about your capabilities. So that's one thing to kind of look at. But if you're a direct to market, then probably the choice would be that you have to open an office, is the way I would look at it.
Perfect. Shailesh, anything you want to add? You've spoken about partnerships upfront.
No, I think I echo the sentiments of what everyone has been saying. I think what we were in some sense fortunate because we were taken to global markets by some of the MNC banks that we were working with, and their regional leadership out of Singapore and Hong Kong said, here are other markets, would you like to work in these markets? So in that sense, we were a little fortunate. We didn't have to face some of these struggles, but these are real struggles in terms of the legal agreements, structuring the legal agreements, structuring the payments. We're just working with we just signed up a bank that underwent a coup recently, and that has presented its own set of new challenges in terms of what happens to that agreement and the payments that could get stuck potentially because of sanctions, etc. So you do have to wisen up to all of these complications of doing business globally. And I think partners help. Having trusted partners, large trusted partners in local markets certainly helps for a smaller fintech when you go global.
Perfect. Thanks a lot. I think we are now probably at the end of the time allotted for this session. My sense is we've got very useful inputs from the panel on how should fintechs think about looking at the opportunity, assessing the opportunity, and building their business outside India. I'll end on a phrase that I just borrowed from what Shailesh spoke a little while back. Build local, think global. So there is a lot of opportunity out there for the right proposition and the right play. And we have to just organize ourselves so that we make the most of that opportunity. Thank you very much, panelists, for your time. It was indeed a privilege and an honor listening to you for me, as I'm sure for the audience as well. Thank you for your time, and thank you, audience, for attending. With that, we close this session.
Thanks, Pratik.
Thank you.
Thank you. Thanks, everyone. Thanks, Pratik.
Good afternoon, everyone. This is Chiku here from FICCI. Just wanted to inform that Mr. Kunal Prasad is just about to join. We've just spoken with him. As soon as he joins, we'll start the session.
Okay, thanks, Chiku.
Yeah. Chandan?
Yes.
Yes, I think everybody has joined now. We can start the
You
session.
can start. Yeah, we are live. You can start.
Okay. Mr. Sinha, over to you.
Thanks, Chiku. So let me just anyway flash the slides. Thanks everyone for joining in. Just to kickstart this, obviously as a part of the larger Expo, we have assembled the whole panel together, and there is a hopefully very interesting discussion coming up, which is largely focused more on the B2B fintech space. And I think broad themes you want to talk about is largely what are we seeing in the B2B fintech side, what are the main trends, how are companies looking at them, and how are they looking at, more importantly, the future as it comes in, and what are the different levers they're going to exploit to kind of get to that. We're a very eminent panel today. So what I want to do is just spend a couple of minutes on setting the context and then introducing the panel and then getting on the discussion. So very quickly, from just a snapshot of where India is, right? And these are just some numbers which are there on the B2B fintech funding. So it includes B2B and B2B SMB companies in which we have seen funding trends over the last 3-4 years. 2020 has been a bit of an anomaly because of COVID, and therefore we have taken that off. But what's very clear is that the trend of investment in India, which is the first bar you see on green, is an increasing trend. Close to around $2 billion got invested in 2019. 2020 was a little more than 1.5. What's also interesting is that the B2B fintech as a percentage of total fintech is actually a fairly significant 50% plus number. So while there is a lot of buzz around a lot of B2C companies, the interesting part is that a lot of money is actually being poured into the B2B side. And that's an increasing trend we are seeing across different sectors and segments. And conversely, obviously, we're seeing now interesting large companies being built up, which was not the trend earlier. And if you would compare it to countries like China, UK, US, I think we are in a good stead. Obviously, these countries have had a little bit of a leap ahead of us. China, while the numbers look comparable at $2.9 billion, the reality is a lot of money has already flown in the history, and therefore you see almost 16, 17 unicorns sitting there. And of course, UK and US are larger markets as well. But what's promising is that the trend is there. We are seeing very interesting companies and different business models emerging, and it seems to be an exciting time ahead for us. And just reflecting on what we would call, key successes and wins and challenges we see them. Talking to a bunch of and working along with a lot of fintechs in the space. One is, I think India is clearly becoming a large ecosystem. So there are clear spaces being built. We have had the first avalanche of players coming in, and now very quickly being followed by second and third. And what's interesting is the companies are finding scale much more cleanly and quickly. And there is a set of tailwinds behind this. Obviously, you have founders, you have almost second generation founders coming in. There's a talent pool which is emerging there, which is very clearly from the space. And investors who are very deep into this. So obviously lubricates the system very well. I think there's also an element about just the digital infrastructure and regulatory framework in India, which is starting from the UPI system to OSAN. I think a lot of those elements are coming in place where companies are leveraging them to take that forward. And interestingly, we are seeing a couple of interesting trends within fintech. One is a lot of spaces where companies are looking at international expansion across SaaS, across payment, a couple of insurtech companies. We are seeing, increasing trend of companies using India as a test bed and launching themselves abroad. And I think we'll use some of the discussion today to talk about that. And also more ubiquitous use of technologies. I mean, AI ML obviously is almost like a base case, though we do see a spectrum of usage across. But also interesting technologies like blockchain, drone technology, and so on. And companies are doing very interesting experiments to take that forward. So I think the picture is fairly good from an overall fintech point of view, and we are seeing good positive trends. I do think there are challenges. Also very clearly, I think from the depth and the scale of Indian enterprise market, there is still more to be done there. From willingness to readiness, I think there is a set of things which can need to be happening at the enterprise side for largely the B2B and even B2 SMB fintechs to scale up. There is a distinct challenge on new product and vertical expansion. We'll talk about that again in the panel. And in our minds, it's a bit of an art and science issue because it's not so straightforward to get into enterprise setting and understand the real pain points at the other end and be able to kind of innovate and create products which find an early BMF. So how do companies grapple with that? And I think we are seeing again a spectrum of companies around that and how they're thinking about it. Again, international expansion we talked about as a key win. The reality is that we have formed the early kernel, but we need to really amp that up. And India has to be known as a real hub for sectors and segments from which interesting companies are coming in. So while we have the first launch, if you will, but we need to see some more scale up. And then again, I think what we pick up across a lot of founder community is, while the initial talent pool is there is an issue on depth. So as they scale up, especially on managerial level and so on, are there enough number of people to carry that forward? I think that also comes in. That's the summary picture. The reason we put this up is to just set the context for the panel itself. And today what we wanted to discuss was broadly, I would say, two buckets of issues. One is on what we call the core growth, and where we wanted to talk a little bit about not only the opportunities, but the challenges, and hear a little bit more from the people across the panel. What are the real-time challenges they're seeing today in life? How are they thinking about it? How are they grappling with it? What are the key learnings from that? And the second is around the technology itself, as to how they're deploying the technologies to create new business models, new products, new verticals. And those are two themes from the core growth, if you will call it, which you want to talk about. And then do a shift and talk a little bit about new growth itself, which is again talking about new products, verticals, and geographies, and how are companies, creating a path for themselves on that. So those are the broad themes as we wanted to cover in the panel. And today what we have is a very eminent panel today. So we have Ashish, who is the co-founder and CEO of Crystal.ai, which is a digital-first private wealth platform. Prior to that, he co-founded Chris Capital, which is a Singapore-based global macro hedge fund. And before that, Ashish headed fixed income and currency solution for JP Morgan in South and Southeast Asia, and served as vice president for institutional sales and structuring at BNP Paribas. We have Kunal, who is the co-founder and CEO of Cropin. Founded in 2010, Cropin is a farm management SaaS-based service to agribusiness globally, enabling clients to analyze, interpret, and gain real-time insight on standing crop. And they also have fairly interesting play on the agri-fintech side. The country actually operates in 50 plus countries today, with almost helping 2 million farmers with a fairly sizable scale. We have Narsimhan, who is the mentor and principal advisor at Jokata. Jokata specializes in financial services software for digital lending, financial fraud, and AML. And clients pretty much include leading banks and credit card institutions across India. Prior to Jokata, Narsi was Group Chief Operating Officer for Dun & Bradstreet South Asia and Middle East. We have Srinivasu MN. He's the co-founder and director of BillDesk, which started just over 2 decades back. The company has the largest roster of business clients in India using the online payment gateway, and pretty much powers the majority of India's online bill payments and payment gateway transactions. Prior to BillDesk, Srinivasu worked at Arthur Andersen and ITC. And then we have Tobias, who leads innovation, product solutions, and user experience across Asia Pacific for MasterCard. Focus spans ideation through prototyping, through go-to-market for all key partnerships and propositions. And over the years, Tobias has been active in Asia's fintech scene, and most recently serving as a strategic council member for APIX, a fintech sandbox initiative, founded by the Monetary Authority of Singapore, IFC, and the ASEAN Association of Banks. So very eminent roster of panelists today to kind of discuss this. As a quick introduction, I lead the growth tech practice within BCG, which largely works with digital companies and startups. And that's how we have been part of the FinTech Expo as well here. So a very warm welcome to all the panelists. And what I'll do is just possibly start the discussion with the first question, which is talking more about the core growth, which is largely about the challenges. And maybe I'll lob that to Kunal to start with in terms of, when you look at today's big challenges as you see them for your company and the sector at large, what are the key trends as you see them? Maybe you can start with that.
Thanks, Ali. Well, I think it's a wonderful opportunity right now to talk about the agri-fintech space. It's a space that has been evolving and at a much more accelerated pace in the recent years. Now, looking at it from a holistic perspective, and if you talk about from India and then from other developing countries, so let's start off with India first. So I think from a framework perspective, there are so many initiatives that has been taken, including the Aadhaar, the JAM, and all of these things, which has really built that first infrastructure where the transactions can happen digitally. Talking about the financial transaction that we want to enable. The next layer comes is that when we go and talk to banks and insurance companies to do these transactions, then we come to understand the challenges which is inherent right now, and slowly how we can solve that. So first, fundamentally, if we talk about the agri-fintech space, and when we talk about agri-fintech, we talk about farmers, and these are like 140 million farmers spread across the different parts of the country. And if you see the categorization within these farmers as well, you see that almost 86% of the farmers are smallholder farmers. These are less than 2 hectares of land. And another around 16% of the farmers are, 13% of the farmers are like mid-sized farmers between 2 to 10 hectares. And there is 0.6% of the farmers which are large farmers above 10 hectares of land. And if you run the statistics around the distribution of finance and what loans these farmers are getting, you see majority of the inclination of the loans going towards the larger farmers than the mid-sized farmers. The smaller farmers are left out, which is at least 86% of the overall base that we have. Now the challenge when we go and talk to the banks, that what is a challenge which is basically being the bottlenecks for you to reach out to them. There are two challenges primarily. One is in terms of access to information and access to data, which is not available right now. And second is obviously the cost of operations. So if you're going and lending to a larger farmer, obviously when you charge 3,000, 5,000 rupees for a loan processing, he's happy to pay that because he's taking a larger loan between 3 to 10 lakhs. But if you go to a smaller farmer which is looking for a 20,000, 50,000 loan, and you charge him 3 to 5,000, then the cost is very high, and it's also not economical for a bank to lend in that case, right? And that is where is a large opportunity where a lot of agri-fintechs are playing, that how we can democratize and access the data which is available in the government infrastructure and build insights on top of that to make this accessible to the bank. And the bank can just on a click of a button can see the worthiness of that particular farmer, transfer the loan to that particular farmer, monitor the loan also, and then also do the transaction at the time of recovery, right? So from our side as an agri-fintech, what we have done is in a couple of states where the land records are digitized, this solution that we are building is that over the land records, we are overlaying the satellite data and then fundamentally telling the bank that within your branch, these are the farmers which are available. This is the crops that the farmer had taken historically. This is the credit worthiness of that particular farmer, and this could have been the income potential of these farmers, right? Now, a bank within his geography can actually now look at the potential areas to start lending to these farmers without sending their field team on the ground. Now, if this starts happening at each and every branches of different banks, the scale at which the agri-financing can happen can accelerate and become exponential. So I think that is what we are seeing as an opportunity. But when you see from a challenge perspective, there are around 5 to 6 states where they have digitized the land records, and that is a fundamental source of truth for any bank to lend to a farmer. But other states are picking up, and hopefully, like in the coming 1 or 2 years, once all of the land records are digitized, we then have a base infrastructure on which a lot of these services will emerge. So I see a very bright future for the agri-fintech space in the coming time in this particular sector.
And Kunal, if I just double click for a moment, I mean, at least one of the key challenges we see, maybe it's not there so much for you, but is how do you convince banks, especially for the first proof of concept, right? Especially when you're taking a complete new product. And I understand maybe in your case, you get digitized land records in some places, but I'm sure that other places there is a bit of a leap of faith, which you have to take. So do you find that in some of your journeys as well, and how do you actually try and overcome that? Would be great to have some insights there.
Yeah, so basically, like, you run your models on top of their historical data, right? So the banks would give you historical data, say that what is the model giving as an output, and when you correlate and showcase that, this is the output is actually correlated to what you have actually done physically, sending a field team on the ground. That's where the bank starts believing in your data, right? And fundamentally, right now, what's happening is a lot of banks are doing these POCs. Right? They want to see that how their physical data can be replaced by an alternate AI data, and still is that credible enough for them to believe on that, invest, and as a loan product, reduce their NPA and recover it back for them for that particular transaction. So that's how the banks are also investing. They're also saying this is the future, because they can't just keep on increasing the field team on the ground. They have to depend on technology. And that's a positive movement that I see that the banks are taking forward.
Makes sense. Vasu, maybe just redirect that question to you as well, right? Very different flavor. I mean, you have built this company over 2 decades, seen massive success with it. So it would be just good to maybe introspect and look back a little bit historically as well, and the kind of challenges you saw and how you overcome them, and what do you see the current state being? In the current state, what are the big challenges that you see today?
Actually, I think there were some very interesting points that were made when you put up the initial slides. So I'll maybe pick up some aspects from there and start. Let me talk about what are the key changes we've seen in terms of challenges. Working in the B2B space, right? Anybody who's building a business or anybody who's building a solution for that obviously sees an opportunity, sizes it in some format, and starts working towards it. Thereafter, it boils down to specifically the attractiveness of the specific segment or solution people are working on. And I would say in the initial years, if I start from the 2000 kind of a period, right? I would say the first 10 years, the challenge for India in specific for fintech B2B solutions was how external capital perceived attractiveness of the space, right? One thing to understand from the way capital is an extremely important ingredient in building a business or in whatever one is trying to do. A lot of how digital technology-led companies are viewed or have been viewed historically is driven by learnings from the West and in some extent China. So B2C has always been the sexier game from a capital perspective, right? So, and therefore, in the initial years, building a business B2B space, the biggest challenge one would run into would be capital. There are obviously challenges linked to building the business. Kunal has pointed out there could be specific instances depending on each vertical. But at a macro level, the first challenge was to deal with capital. And that starts driving how you're building a company, what solutions you're focusing, how broad do you go, how narrow do you go, how much time do you have. Interestingly, that has changed. And I would say beginning close to about 5-6 years ago, that started changing from a very unique perspective, right? I think the capital that came in discovered that India has a large population. Therefore, the metrics from a B2C business are always attractive to build in terms of how users can come in. But commercial viability and building a scale B2C model, even in the fintech sector, is yet to be a proven thing in India, right? People haven't yet managed to build a hugely successful cash flow businesses in these. There people have built in large businesses with large customer traction and enrollments and downloads, but it's yet to be proven that you can build a very large sustainable profitable business. So that's when capital started changing. I would say mid around 2014-15 to say that maybe B2B is the way to go in India. And I think it coincides with some of the data points that you had in the slide. So that, in some sense, I think that challenge has been sorted for. It's not as capital for B2B is not as freely and easily available as for a B2C, but it's there for a good proposition. I think the key challenge, if I were to think of, is in the very nature of B2B. You're dealing with large businesses or institutions, whichever you would call it, incumbents with certain legacies. So that's the first challenge to overcome. It's not so much the challenge of what you're doing, but the challenge lies a lot outside of you in terms of what you're trying to do. right from convincing them to working on a model to taking care of incumbent interests to what does it do when you suddenly digitize all land records? What does it do to the local office, the people, their incomes? All these play up, may not be directly, but all of these crop up. The other aspect I want to draw with respect to India and B2B business is slight variant to what you made. India, it's relatively easy to do a POC. Right? If you have a new concept in B2B, and I'm just taking the fintech sector, and you went, let's say, to a foreign bank, an HSBC or a city, right, and said, I want to run this as a proof, it's not going to go anywhere as much as it's you go to an Indian bank. So POCs are relatively easier to do, and somewhere it's got to do with organization structures, processes, who's empowered, lots of other stuff. What's a real challenge thereafter is how do you convert the POC to full-scale business case, right? That's where it's typically easier to do with a
Saran, is this me or we lost Vasu for a sec?
I think we just lost them for a second.
With Indian businesses, implementing it as a full-scale business is perhaps slightly more challenging with Indian entities. And to me, that's a core thing to be solved for anybody building a business in the B2B space. Purely cultural aspects of the ecosystem you're dealing with, the impact on them, and therefore how does it facilitate or become a hindrance for you? And second, the commercial aspects. There are multiple challenges, but I would pick these as being the two significant things because these make a difference on two parameters. You're not able to address the cultural issues or the legacy issues to the space that you're dealing with. Your time to market and your time to scaling gets significantly impacted, right? Taking a cue from bill payment space, it took us 5 years to convince an entity like BSNL to consider accepting digital payments. 5 years, right? And this was at a point in time when BSNL had near monopoly on the telecom situation in India. This was prior to the Airtel Vodafone becoming large. And that largely, that challenge came, as I said, largely from knowledge to culture. That is one aspect. The second aspect I would think of is commercial, from building B2B businesses. Again, drawing a distinction between maybe India context to the remaining markets, which is why people tend to look out. One of the big things about Indians, which is normally a big plus, is the entrepreneurial nature, the jugaad nature that is spoken of. Now, translate this into a business context. What happens is even the largest of institutions, even if you take just as a name, not a specific example, it is the largest banks in India, whether private or public sector. One of the key instincts that the employees there have is, okay, this looks good too, and it's going to help improve our business, but why can't we do it ourselves by employing 2 more people?
Correct.
This is a very huge thing in India, right? Whereas when we talk to global multinationals, right, they're only concerned, will it work? Will it stick to the overall quality that they expect? If it's doable and if you thought of it, great, go ahead and implement and scale it up and we can kind of share the benefits. The Indian approach is saying, I am capable as an institution to do this myself, forget all the rest of the problem, finally leads to a commercial use case. So what will they pay? And that trade-off is what becomes a big challenge for people building business, saying, how big a business are we able to build before Indian companies start saying, I can do this myself, and start kind of rethinking how they pay for it. Multiple other challenges, but I would pick out these as being two large challenges that entrepreneurs, anybody that's building businesses need to look out for.
No, that's super insightful. I think it kind of corroborates what you also keep on hearing across founders. I think India being an interesting test bed, but there's an element about how do you scale this to a significant level. I mean, in your case, obviously, you had to create the local market. I think some places it is slightly easier to move internationally after a point. But this whole element of understanding the cultural nuance and getting that right, super critical. So if there are any other comments on the panel, great to have them. Or maybe I'll shift gears a little bit around the second question on the growth and technologies. Okay. So let me just maybe shift the gear a little bit. I think the second question, and this is something which came up across when we were doing discussion with a lot of fintechs, even when we were discussing about the core growth, was this whole element about leveraging technologies, right? And there is obviously a lot of hype around AI and ML, and pretty much everything starting from basic analytics to true ML gets deeply embedded there. But what we are seeing is there is a clear crop of players who are coming and deploying these technologies in relevant manner. And the implications could be in terms of either enhanced offerings or new products and offerings, or sometimes even a fundamental change in terms of how they're thinking about their business model, right? So what I wanted to do was actually put that across, a couple of analysts here and get, perspectives on how they are seeing this at one more macro sectoral point of view and also within their companies. And maybe I'll start with, Ashish on that particular topic, just in seeing, how he looks at the overall technology trends and specifically the relevance within his sector and the company.
Thanks for that, Shaleen. So, on the technology side, at Crystal, we chose to anchor our organization around AI and hence ML also. And the reason for choosing that, I would say, was looking at the core use case. And I think it's important for any company, any startup to look at what is the use case they're solving for and what's the right technology fit. So, there were discussions I remember I had with a lot of people who were saying that, why don't we do something in blockchain technology? I said, I don't want to do anything in blockchain technology because I don't have anything to do over there right now. Right? So we are in the asset wealth management space where we are trying to deliver personalized portfolios at a mass scale to hundreds of thousands and millions of end customers. And the right technology for that is AI or ML. And hence AI or ML becomes the mainstay where we try to understand the customer a lot better and make sure that our B2B partners are able to understand their customers a lot better. So that was a choice. So the choice of technology should not be because the technology is cool and in the newspapers and is raising dollars. It should be what your actual use case is, because some of these vanity metrics or a bad fit of technology can actually drive companies to the ground and burn too much of VC money for getting no effect. So there has to be a very genuine use case there. And over there also, whenever you choose a technology, I can tell you it's like at the MVP stage, there's pretty much nothing. It's only a concept. You cannot have AI or ML for a startup who is working with limited data points. And you just have to make sure that you're building the blocks such that you build the whole organization in a data-driven manner. And capitalize on what you've built and use those technologies. So any new product, new innovation that you look at has to come up with the right use case there. So we started 5 years ago and building the whole organization on AI ML. Today, when we found a right use case, which is app, and by today I mean let's say a few months ago, that's when we have introduced blockchain into our tech stack. Because we are doing it, a transaction matching kind of a system which needs independent auditability. So that's when we said, okay, now this is the right thing to do with this tech. So let's build that capability and make it happen. And there also, you start with databases first and migrate to a blockchain later once you've done your MVP or a minimum viable product. So I think it's always good to look at what the new business line or new product is likely to be. How good are you in capturing that niche? Because you always have to capture a niche. You can't go very broad. Whatever you do, it has to be, I would say, a very small TAM or a target addressable market, a very small one, but you have a high probability of success in that because nobody else is looking at it. Because it's too small for the big guys. So that's the only way to match the new product and the new technology fit in any growing organization.
Super helpful. Honestly, I agree. I mean, levers cannot be means cannot be the end, right? What you're trying to get to is a clear product. But actually, just also double clicking there. I mean, what has been the challenges in building something like this? And some of the patterns we have heard consistently across. If you look at a B2B set, one is just access to clean data. The point that there are data privacy issues and a lot of enterprises are not very willing to, and depends on the archetype you're catering to, right? In terms of sharing the data. Because there is a whole element about where does the data go, does it go to my competition, etc., right? So some challenges around that. Third, I see is, as you said, MVP is only an MVP. So you need a little bit of trust from the enterprise side to say, look, the first version is going to be maybe 30% there or 40% there. It's not going to be the game changer, right? And over a period of time, you will start seeing results, which needs that trust to be covered, right? So just good to get some sense on that. I mean, did you face these challenges? How did you navigate through it, especially when you're starting early on that piece?
Oh, you're absolutely right. So these are some of the big challenges, right? And it's I always say that in a startup you're living a dog's life, right? So 1 year feels like 7 years. So when Vasu says he spent 5 years convincing BSNL, it looks like he's spent 35 years actually doing that. So, that because that's the way things work out. And sometimes, companies are in such a phase that you can't live a dog's life for too long. So you start looking at different things and so on. So tremendous challenges, especially in wealth management. Oh, you won't believe it. It's not just the PDPA, data protection. Is it an Amazon service in India, in Singapore or Sydney or God knows where? It's not just that. It is like, this is my client. This is my client's data. It's my AUM. I don't want to part with that data. Huge, just huge, right? So the way we, in a way, did it was, and I would say we got a little bit lucky also, because being in having part of the business in Singapore. So we are completely B2B in India, but we are actually B2C in Singapore, which is quite a unique model, because we see Singapore as like a test bed, where we say that, okay, this is the wealth capital of the world. Crystal has done something over here. We've been doing it for 3-4 years. And now we are taking the same thing to India, which actually is where we wanted to start off with. But I was sure nobody's going to listen to us and say, prove something to me, right? And in a B2B life, you don't have that daily sign up, that daily trickling happening. So I really have hats off to you guys, Vasu, Kunal, everyone. I don't know how you live without having any success in the first 4-5 years. But I was like, dude, I'm going to die. So you know what? I may as well have a B2C, have 10, 20, 50, 100 clients, 200 clients, whatever it is, right? Go from a small island, look at one small condo, get some 10 guys who are my neighbors, get started. And then you build the whole thing, show that as a POC. So Singapore was a POC for us to show to the partners in other parts of the world, whether it's Dubai, India, or anywhere, how this thing can work. And of course, as you show that you are regulated, licensed, and so on, it then builds the credibility in an institution to say that, yes, okay, I can trust these guys because there are a number of regulators, auditors, everyone looking at it. So that helped bridge that gap. And while we still didn't have to live with a completely dry, let's say, 4-5 years.
Super helpful. Kunal, it would also good to get your reactions on that piece. Also, maybe when you're thinking about it, one thing which we keep hearing from a lot of B2B setups which have data as their premise is how potentially it could create a defensive mode later, right? Because there's a whole element of over a period of time you capture more and more data. So theoretically, let's say in your case, just a better and more sophisticated underwriting model, right? Which is what you would want to have to go and pitch to the bank. So it'll be good to get a sense of how you are looking at AI, ML. I know you're also using drone, etc. in your setups. One is from a technology point of view, but also specifically to the point Ashish was talking about. How you're thinking about scaling them? What are the key challenges there?
Yeah. So coming back to the fundamental business use case, so the use case for us is that we have to monitor 140 million farmers, and these are all spread across in different parts of the country, right? Now, physically, sending a field team, checking their status, what they are doing, what crop they are growing, are they right or wrong, and things like that. It's not possible, right? And banks have learned that no, this is not fundamentally they are going to continue for a much longer time, right? And I think that's the premise on which there are technologies which want to enable these banks to do this transaction by bringing all the important data that they need for the transaction, right? AI ML is basically doing that particular job for these banks and for any institution for that matter, right? They have a lot of data and they want to make sense of the data. That's first thing. They also want to use a lot of data which they have not used earlier, like satellite data, weather data, and other such data, which would actually help them in terms of building a better scoring model for their either lending or for monitoring or for recovery and things like that. So technically, what we have seen is that when you really want to make lending as a business use case, right? We are seeing a lot of fintechs which are coming and making that as a real business use case. But a lot of banks are seeing it as a liability that I have to do a priority sector lending for 8%, 9% of the portfolio size, and I have to give it to someone rather let me give it to a large farmer so that my risk is lower. But why it can't be a business opportunity? Now, with a lot of fintech coming and really making that a business opportunity, the banks are now also looking that, no, if that's an opportunity where I can reduce my NPA and increase my portfolio size, then it's a real fundamental business for me, right? They can also go rural and do these transactions. AI and ML basically is helping them to build and look at the future model that with less of their cost of operations, with using other alternative technologies, mostly remote sensing, predictive. So what we do from our technology, let me explain that. We normally, we integrate the land record of a certain state into our database. Then we overlay that particular land record of a farmer over the last 3 years with satellite-based data. And once we overlay that data of satellite, we basically give 4 fundamental things. First is the crop, what crop the farmer was growing. What is the estimated yield of the crop? What is the stress that the farmer would have got? And what is the overall income that the farmer would have got in that particular plot? So typically the bank will see that in the last 3 years, the farmer was growing cotton in this particular farm, and he has been doing fairly well, and the average income of the farmer would be 1.5 lakhs. So he can then look at that farmer from that perspective and say, okay, let me just start transacting. I will not give you a loan for 60,000. Maybe I'll start with 20,000, see how this works. And later then they can go deeper in this account and start scaling at a zero recovery. So this model is really supported by alternative technologies like AI and ML. And that's what will be the future. The other thing is that fundamentally, there will always be a person who will be having a head start in this, right? Because the models will be also localized to your business needs, right? When you embed this model, you bring in these predictive capabilities, it will actually strengthen your model. And when you talk about AI, ML, it's not a generic model. If I do a potato prediction, it will not be across the country, right? It will be for Ludhiana. I'm building this particular model because the specific weather conditions, soil conditions, crop conditions are vary between Ludhiana and Jalandhar. So it will be very specific for your use case. And the earlier you start, the better you have headway, you can actually reach markets and service the farmers much better. So I think that's the opportunity which this alternative AI and technology brings for institutions across in this sector.
No, makes a lot of sense. And maybe I'll get Narsi also in. I mean, from a Jakarta perspective, obviously you are very deeply working within the bank stacks, doing a lot of work around this space. What has your experience been in terms of just deploying these, thinking about new product offering, as also getting real ROI for your enterprise client, and therefore getting more traction for yourself? And Narsi, I think you are on mute, or at least I'm not able to hear you clearly. Yeah, I think you're
yeah, sorry. We've been fairly successful with many of our offerings in the sense that our client base is largely banking and financial institutions, NBFCs. And through them, we essentially help them serve the needs of the businesses as well as the consumers on the other side. So it's a B2B to a C as well. And very specific use cases of application of ML has been in several segments. I'm breaking it into 2 parts. One is the digital transformation in the lending segment, and one in the AML or suspicious transactions reporting segment. In the first case, we have had excellent success in deploying ML, especially when it comes to the use of computer vision from the perspective of capturing images and to make sense out of it, especially the passbooks, for example. And this is all operating at scale, as well as the use of NLP in actually then understanding the data in order to make sense out of it. This is very, very useful in the case of small ticket lending, where the customer base, be it that of a Kirana merchant or simple rural customers, all of them actually have just passbooks and their Aadhaar to apply with. And the decisions that are required are rapid, and you'll have to get back within a few minutes or at best an hour. And this is where the application of ML has been very, very successful. We have done POCs and we are starting to scale there. There is another very significant area where we are now able to leverage ML big time, along with the traditional standard statistical based analytics. And this is because now a large amount of data is becoming digitally available. So the first, when I talked about computer vision, was more from non-ready digital data and the NLP associated with it. But when I come to a segment like, let us say, GST-led data, for the first time, you're able to get continuous information of business behavior simply because of the GST filings, and the entire mass of data that comes in allows us to interpret the business behavior in terms of what pattern is there. Is it seasonal? Are the customer base stable? Is it that there is some anomalous behavior of suddenly new sales to entities that have very recent vintages, but which is showing a major anomalous spike in sales, which could be accommodation invoices. So we are able to look at entity-specific data, and when a large volume of data gets thrown into this huge pool, we are now able to relate the entity's behavior to the larger homogeneous pool of the industry to look at whether the entity is playing within the boundaries of the industry or is it exhibiting outlier characteristics. Now, this is very relevant to understand what is the level of risk associated with that behavior and what is the level of opportunity associated with the behavior. Because if we were to look only at a point in time data, which was always available through financial statements, of course, decisions were being made. But when you're looking at through the cycle data, a lot more dynamism comes into the understanding, and therefore your decision making is very precise and more informed. When you start looking at this data, I looked at it from one dimension. But what Jocada does, for example, is to allow institutions to leverage multiple layers of information. It could come from a PF data, which talks about the hiring pattern of an industry or an entity. It could come from the GST, which I just talked about. It could come from the tax deduction statement data, which is a 26AS, where the pattern of advanced tax payment correlated to the sales behavior tells me whether there is an upward trajectory that the entity is witnessing, or is that a downward trajectory? And all this information is available every month or every quarter, which allows institution to start monitoring. And that is where ML really plays a very major role, because we deploy multiple techniques to spot the patterns. And through the supervised learning approaches, what we do is to enable interpretation of these patterns in order to identify opportunities and risk, because these are two sides of the coin. You can't have one without the other. And we are able to immediately allow the institution to actually sense and offer, or be a mentor to a borrower, as opposed to reacting for a loan application and approving or rejecting. The third area where we are doing some serious work is in looking at exceptions, where during loan approval stages, based on what the human being sees beyond the data, certain decisions get taken to override a recommendation. Now, this we are now translating into a pattern of recommendations by the human being, which in a way is the supervision part of the learning, and blending it into an automated process so that those repetitive pattern-based decisions do not get to be human actioned any further. So that's the next area. What is all this creating is, number one, the speed of decisioning. Number two, the quality of the decision. Number three, the decision itself is allowing a better, what I would call as a discovery in terms of how much to lend, so that you're not playing too much within your capacities, but pushing the envelope to lend better and more. That's another area. And most of all, monitoring for risk mitigation. We're also deploying ML in the collections models, where we're looking at the patterns of, let's say, standing instruction bounces.
Makes sense.
This allows us to basically anticipate the SI bounce and to chase the customer, as opposed to waiting for the event to happen and then running for the collection. And all of this, what happens is there is a cost to collection, just like there is a cost of acquisition of the customer. So the moment you start leveraging ML, you start crunching it from both sides to make sure that the the margin starts going up. So that's the area. And in the AML space, what we are doing is deploying a huge amount of ML. Again, this is also supervised learning currently, and we are hoping that we will move further on. And here, I mean, we work with millions of transactions on a daily basis on a batch mode. And you will acknowledge that the STR forms a minuscule percentage of the observed transactions. It's less than 0.2%. That being the case, you'll have to crunch tremendous amount of information, and you should be able to come up with the true positives or the STR records vis-a-vis mitigating the risk of what I would call as the false negatives. I mean, the false negative is the biggest danger in the suspicious transaction.
To interject, because I think just from a timing point of view, we just have to wrap up quickly. But I think for meta themes, I think it's a fairly clean trends, and I think what is very clear also is how you're deploying. It's almost like a ubiquitous application of ML across different suite of products, if you will, right? I think it's a consistent journey which I see across Jogata.
Yeah, and we're seeing more of it happening because the institutions that we work with are readily adopting it. They're allowing large-scale POCs to happen. So we're demonstrating both the efficacy and the scale, and that's very, very encouraging.
Yeah. So maybe shifting the gears a little bit on the same line, right? Because I think if I look at the discussion you were having as also what Ashish was talking about, is almost thinking about newer variants of products, newer products as such, right? And one of the key things we see, especially talking to a lot of B2B companies, is little bit of a challenge about how to get the new products in. And I think the panelists have talked about in nuances of that, because you have to go and figure out an enterprise, what are the main pain points, where do I think my product will have a PMF versus not. And that's not so straightforward. If I look at a B2C company, that's relatively easier. You launch out an alpha version, beta version, you start, basis the consumer input, you start iterating and you're moving ahead. Not so much for enterprise, where you have to at least get a good version of product in before, because they cannot experiment so much on the enterprise side. And maybe let me get Tobias in, just talking a little bit about how do companies think about, and I think advantage Tobias has also looking on the both sides, right? As MasterCard's partners, as also MasterCard, what they're doing is how do you think about innovation, new products and verticals within the B2B space?
Yeah, absolutely. And I think in many ways, it doesn't actually differ that much to how we think about consumer journeys, right? In the end of the day, I always think about, are we optimizing something? So when we think about customer acquisition, right, that's about $25 in India. Can we bring that down to $15 to include more customers? Can we use eKYC? Can we use different type of solutions in that space? So in many ways, that's an optimization journey, a product evolution journey. Now, the other one would be actually turning what I would think about cost centers into profit centers, right? So when we think about monetization of payments or different services, we know in India, especially like with zero MDR, a lot of B2B fintechs are actually thinking about like, how do I actually now think about deriving some value from this interaction I have with the customer? Do I build a financial marketplace? Do I create new loyalty solutions? I always kind of say water finds its way, right? So if certain profit pools are prohibitive or regulated, other areas will open up, right? And you kind of have the creativity to say like, okay, like long-term sustainability, and Vasu was kind of mentioned that, like has to be there. At some point, we got to find long-term viability for enterprises to operate. And there's opportunity there. So if you see someone struggling because regulation is changing or monetization opportunities are shifting quickly in the market, how do you open up new opportunities for those businesses? So that's a second opportunity. Ultimately, I think when it comes down to what I kind of think about a lot is like, how do I inspire the ecosystem and my partners, but provide a clear path to execution? And how do I do that, right? Well, I have to kind of paint the North Star, the picture, and be very clear about what I'm actually out there to do. But in many ways, I think about all of these things as payment experiences or fintech experiences versus just technology. So what if, for example, like, can we do about the fact that consumers are shopping online more often, right? I mean, this is a behavior change. This is a different way of transacting. How do we make sure people participate? And these are kind of signals, trends that we just observe, right? And we have to have solution and experiences in response to that. Otherwise, other people will come in and take that out. And in our case, for example, we'd be like, okay, with that behavior, how do we create tokenization? How do we encrypt and create better cyber security technology? How do we get rid of pesky OTP codes, right? And use actually more data and AML and machine learning and AI and all of this type of activities to ultimately better score a user, right? And I always saying like security is a great topic, right? Like, and we just talked a little bit about machine learning. But we have so much data that we generate on our devices. Why don't we use that instead of passwords, instead of OTPs, and improve the experience as an ecosystem? But that's where you have to start with the inspiration, because we are always in a regulated environment as fintechs, right? We'd have to think about what is the risk-reward equation. We have to think about what are the impacts to the constituents that we serve, right? Which are businesses, governments, and consumers. And so you have to kind of balance kind of the inspiration with a clear path of execution, drive that transparency, and drive ultimately to a point where the ecosystem can together win. And this is actually maybe one thing that I see, especially in the B2B fintech space. It's not as much about competing, but more about collaboration in many ways. So it's a fintech plus a bank. Maybe it's even a band of fintechs coming together to say, like, you know what, you have a certain thing that I really need in my toolkit. Why don't we come together and build a stack and replace something? Right? Like it's a one-stop shop for many of the banking core technologies. But even there are still pockets of fintech technology that could be integrated. Maybe if it's a core banking system, how do you integrate investment tools? How do you integrate loyalty? How do you create different bill payment, right? For example. And so there's opportunities for this kind of collaboration, that space to come in. And the other, I think, piece that we always need to think about too, you start with a market or do you start with a problem? Why do I say that? Because I think there is opportunity, obviously, to look at what is a problem the market is facing as a whole and how do we solve for that, versus how do we think about that from a kind of global standpoint? Am I solving a problem for something that is a globally unique problem? And there's, I think, a lot of opportunity also in that as a fintech to think about where do you want to play, especially when you think about internationalization, new geographies. If you are trying to solve a problem for a market, you have to always make sure that that market has enough capacity, is a big enough demand base for yourself. Versus if you're thinking about a problem that could be an international problem, how do you deal then with synchronization of regulation? How do you create that configurability into your system from the start to be able to kind of adjust, create different instances, create different ways of dealing with privacy regulation, etc., market by market. And so lots of these kind of nuggets and interesting aspects are kind of things that we really think about to really allow B2B to prosper and create sustainable long-term solutions that bring the market forward. And I think that's ultimately the goal of innovation. Innovation exists to solve problems that exist today. And that's what we're all here for, trying to solve these problems that we all face in terms of financial inclusion, in terms of costs, in terms of making sure that everybody can transact safely and securely. And that, I think, is what we all have been talking about today.
That's very interesting. This whole dimension of one, collaboration, and secondly, just the trade-off between market versus product. I think it's an interesting one. So Tobias, just maybe one double click and quick one. When you think about this, almost seem to be like a problem of plenty, right? So you said there are a lot of opportunities out there. Was curious about when you look at MasterCard. I mean, how do you think about prioritizing them? And B, where you think about going full stack yourself versus actively trying to look for collaboration in the market?
Yeah, and I think that's I think really important when you as a fintech work with a player like MasterCard, or if we as MasterCard work with a bank. I think what we ultimately think about is what is core to us. What do we really want to own and build and develop versus where are we very open to partnering? And that could actually become a business model decision. So when we give an example, like we have a lot of digital first programs today, right? Because nobody likes to go to a bank branch. There's motion control orders all over the world because of our ongoing pandemic. So when we think about the digital issuance of a debit card or credit card or prepaid card, how do we ultimately make sure that that can be done online? There's a process for eKYC. That's a mandatory requirement from regulation. But does MasterCard actually want to do KYC in every single market to every single specification? That's probably not a core to our business, but it's an essential ingredient to kind of the success of these programs. So this is where we then look at partners like Signsy, great Indian fintech, that then provides that video KYC capability tailored for the market that ultimately can then seamlessly connect into our processing and issuing platforms that we provide on our end, and then bring a solution to scale. And then we would repeat and rinse and repeat, so to say, the same cycle for Singapore, where we would maybe use MyInfo, or another market where we use the specific KYC solution that is required there. So that's where there's these symbiotic relationships that are just going to be sustainable. There's never a chance of us really kind of saying, you know what, I'm just going to start taking over this KYC thing. This is something that I want to truly own. So there's an ability to build the trust and the kind of long-term relationship and partnership with these fintechs. And it's all about knowing what does a partner actually want to build versus what do they want to work on together. And I think that's where we started off before, right? The challenge of, do people want to still build everything in-house, and how do you make yourself kind of become that preferred partner and build that trusted relationship to the point where they say, I don't need to build anymore. I feel very comfortable working with you.
Makes a lot of sense. And just one request, is it okay across the panel if we stretch this to 1:30? Would that work?
Yeah.
Yeah. Okay. Thanks so much. So maybe just moving on that here, and Vasu also talking about a new product piece, and we had just connected on that before the panel as well. I mean, how do you think about that piece? I mean, the challenges and opportunities, especially when you're thinking about moving away from the core and looking at new products and verticals.
Yeah, I think Tobias pointed out in B2B, right? We focus on what's core to you, and once that is done in terms of product expansion, given again it's a very fast-changing environment, right? Something like a ripple effect. You might see the changes in terms of customer demand happening more on the B2C side, which slowly translates onto B2B. In fintech, what at least I've seen, given the way India is structured, given the way regulation is, given the leeway that a non-bank fintech B2C play has versus the bank play, a lot of consumer side innovation and customer behavior changes are driven by B2C propositions from a product positioning, where the, so to speak, the rest of the chain is not even prepared for. So just to speak of it, if you think of real-time investments and credits and debits happening to your bank account, you could have apps that facilitate that from the customer's perspective. But at the end of it, you need for this to happen at the bank or at the stock exchanges. Right? So the B2B impact of some of these changes happen later. What we've seen is, again, echo with what Mastercard has just said, that, getting a product acceptance in a B2B and scaling is a huge opportunity. Once you have that, it's best to stick to that core. So we'll think of it as what we are good at is what we do. Anything else that can be built around it, we look through collaborative or acquisition efforts, right? It's not that it's not possible to do it yourself. It's just there's a better way to get there sometimes than wanting to do it. So from a product perspective, that's the approach. There is a second issue which may, as you grow in size, regulation starts playing a role in terms of how you have to prioritize certain things. You may have a market view of what you want to do, but the regulator also has a different view. So if you take India fintech, and as Tobias pointed out, a zero India regime forces you to rethink how you want to do certain aspects of your product. It may not have been priority, may not have been on the list, but it can come up overnight. So for people building in this space, and as you achieve scale, I think kind of you have to keep 25% of the organization bandwidth saying this is going to be unprepared for product changes or requirements that will come in from an environment, not because it's on your roadmap. At scale, I think that's one of the good ways to think of it. Reserve a certain bandwidth for those kind of product enhancements.
Interesting, super helpful. So maybe just we are pretty much on the time. So I think last two questions, and then maybe I'll get Tobias and Ashish to react on that. One is this whole element of, and maybe we'll get Ashish to him, this whole element of internationalization, if you will, right? And the part which Tobias is talking about, product versus market. Is that relevant? I mean, how do you think about that piece? Because I mean, that's a consistent theme we hear across, that every market has its own nuance. How do you think about, can you maintain a core product stack, or you actually think about a very market different? So how have you thought about it when you looked at your international journey?
I think so. It's customizations are a lot of there's a lot of importance given to that, because just the user flow, like what we see, how our product works in India versus how it works in Hong Kong versus how it works in let's say Dubai, is quite different, and that poses a very different level of challenge, especially in Asia, where you have 10, 12 different target markets which you kind of go to. Versus US, it's a lot easier. Whereas US, Canada, it's a lot easier. You have big markets, very similar kind of profiles. So here, what you basically have to do is that when you're doing a POCs itself, that's a time to discover and maybe work with the first B2B players who are small or medium size. Maybe they are startups in themselves. The probability that they look at your product as their non-core is higher. So to Tobias's point, that when you go to a very big organization, there'll be always a build versus buy and bureaucracy, taking decisions, etc., etc. Always we try to go into a new market, start with a friendly, more relationship-driven, smaller player, and use that to build a product together effectively. So they get it first, and they get an edge in some sense to others. But you also are able to adapt that product to that geography, which is quite important, especially in some of the fintech players, like in the wealth and that asset domain.
Makes sense. And Tobias, maybe concluding thoughts from you, because I think you have had the vantage point on in looking at this, right, from MasterCard. So maybe double clicking on that piece, right? When you look at this product versus market piece, larger international strategy, if you will, how do you think about it?
Yeah, I think you can really, as a fintech, you would kind of need to look at, like, does that market represent itself as enough demand for you long term, right? I mean, we have obviously seen many unicorns around the world that are just exclusively focused on India or just exclusively focused on China, etc. Right? And these markets are huge. So the potential of growth and the potential to focus on them, I think, is okay, like in many ways. Now, that leaves also an opportunity for other types of fintechs that may focus more on what I call the small market disadvantage, right? Small markets like in Southeast Asia, if you look at like a Cambodia, Laos, like those are not going to be markets that are going to be lead markets for many of the big tech companies. And so similar maybe to what we've seen with Rocket Internet companies that tend to look at like what was really successful in large markets, there is an opportunity actually for clever and fast moving fintechs to kind of, so to say, copy this business models and bring them to the smaller markets, create that localization, etc., and make that an advantage for them, where they will not face maybe quite as much competition from big players right from day one, and have the ability to experiment and scale. Now, that's the local champion challenge as well, and the synchronization of regulation. That is always a key topic, I think, that people have to think about. How do we think about flow of data? How do we think about flow of funds, etc., which will always be a challenge for anybody that operates in a global environment, to make sure that by default we always compliant with regulation. But that's also probably increasingly going to be a challenge point for many organizations in the future, to think about, like, as a fintech, do I go to markets with the right and the friendly and the open regulation and regulatory environment that makes it easier for me to kind of get a footing, versus markets that make it a little bit more difficult to play domestically. And so that's that interoperability and that scale potential, I think there will be an increasing competition of fintechs and markets to attract these fintechs that I think will also kind of shift and change the shape of our industry going forward.
Makes sense. I mean, I think any such webinar, with such hefty topics, there's always a frustration about how much depth you can get to. So that's, unfortunately, that's where we'll end. But honestly, super interesting discussion. I think from all the themes around, the perseverance of the journey, trying to discover and get to an early MVP, thinking about product versus market dimension, application of AI and ML2 in a place where you can get new products, and nuances of looking at, agri-finance. I think very interesting and very wide range discussion. So I really thank you all for, doing this and, taking out time, and sorry for stretching around for 5 more minutes, but thanks a lot. I hopefully, also the participants and beyond that, other people found this to be useful.
Thanks so much.
Pleasure being on the panel.
Yes, thank you.
Bye-bye.
We can start. Adil, please go ahead and have a good session.
Thank you. So good afternoon, everyone. My name is Adil Shetty. I'm the CEO at bankbazaar.com. I'd like to welcome you to this session on expanding B2C globally. And I have a very distinguished set of panelists and experts who will talk to us on this topic of B2C and taking it global. First, I'd like to start by thanking FICCI and the Department of Economic Affairs. I think good conversations between the industry and government are critical as we take India and bounce back from the troubles of the COVID economy. Now, it's 1:30 right now, so I was asking the panelists earlier, I hope all of you have had lunch. If not, make use of the fact that this is virtual. Grab your lunch and let's begin. So when we talk about taking B2C global, we've decided to do this conversation in 3 parts. So in part 1, we have experts here from banking, from insurance, from stockbroking. So we're going to understand what does it take to make B2C a success? What are the characteristics of B2C offering? So that's going to be part 1 of our discussion. In part 2, we'll talk about the opportunities and challenges in taking this offering global. And in part 3, right, we'll talk about the big upcoming opportunities that we see in B2C over the next 5 years. So to kickstart part 1, I'd like to share my learning, which has been that I think for a B2C offering to scale at Bank Bazaar, we've seen that it really needs to differentiate from the incumbent experience. So it needs to be fast, it needs to be instantaneous, it needs to make use of data better. And a product experience which is far better is a cornerstone of a successful B2C offering. Now, I'd like to invite the first of the 2 panelists. So, Harjeet, you're seeing this both as a B2C franchise as RBL Bank, and RBL Bank is known as a bank of partners. So you tell us what you see as success characteristics. And Nitin, you've seen this by building India's largest stockbroker at Zerodha. What are the characteristics of a successful B2C offering?
Yeah, so maybe I'll go first and share my experiences. So Adil, as you rightly said, I think the cornerstone to this is that what kind of a customer experience are you providing and how disruptive is it? Therefore, that determines the success of your business or model or your venture which you are getting in. And now, banks are typically not considered when you talk about disruptive customer experiences, etc. And therefore, our role is more, I think, to begin with in partnering some of the organizations who are taking up this task. And that's where Fintechs or some of the other B2C companies come in. From our side, what we've always tried to do is, one, try to seamlessly embed ourselves into the customer journey. I think that is critical, and therefore we always try and adapt our own processes and the way we do things to what the consumer is going through when they are going through the B2C journey. I think that to us is very critical. And second is that while we partner some of these companies, we try and see if we can be relevant to the customer. I mean, ultimately, banks are either providing loans or providing savings, which is there. But how is that offering relevant to, let's say, the original B2C company and their offering? And therefore, how do you resonate with the customer as coming from there? It shouldn't be that it's just a loan for somebody where the original relationship has got nothing to do with finance or something to that effect. So yeah, these are some things which we do keep in mind.
Okay. Nitin?
Yeah, thanks, Adil. Yeah, no, I think we cater to different types of customers. We started the business in 2010 trying to build a platform for very active day traders and futures and options traders. And over time, I think around 2014-15 is when we started saying, what we need to focus on the investing audience as well, and we should help in this financialization of the country. So I think the first big challenge for us as a platform was to be able to keep it simple while also be able to cater to all the bells and whistles very active traders look for in a platform, right? And kind of having both of that in one place is actually quite complicated. And so in a business, especially like ours, product is even more important. I mean, just not being up all the time, I can't say all the time, but up as much as possible. And second thing is that in our business we rely on multiple kind of pieces to make our platforms work. So right, we are constantly talking to the exchanges for data feed. We are sending orders to the exchanges via lease lines that connect us to the exchanges. We are relying on the depositories for demat holdings. We are relying on clearing corporations for margins to be so it's actually, if you look at it, I think broking is an extremely complex kind of a business underlying, while the front end looks very simple, but all that's underneath it is quite complex. And risk management is extremely important. So another bit that is not spoken as much about, say in Zerodha's whatever little success is our risk management policies and all of that, because when you have a lot of traders with you, they're also bringing risk on the table, and it's important to not compromise on that just to grow the business. So I mean, I think and a third thing is education, because India is the penetration of capital markets is so low. So education is an important angle. So we started with our education initiative called Varsity again in 2014. And today is probably amongst the top 3-4 in the world in terms of education around capital markets. And I think whatever can be done has to be done to educate more people about financial products in this country. So I think anyone looking to build a business, I think, has to have that core focus of education as well. So.
Fair enough. So Manu, I'm now going to come to you. So Max Life is the largest D2C term life insurer in the country. You spoke about the importance of awareness at Max Life. What I've seen at Bank Bazaar is having access to consumer is critical, right? To have that registered base of 30, 40, 50 million consumers is critical to a B2C business in India. Tell us about what your learning has been in building a successful B2C business.
Thank you, Adil. Thank you for having me, and a very good afternoon to all the panelists. See, it's been an amazing journey for Max Life to really look at a new persona of customers as emerged out of the digital evolution that all of us have had over the last 5-10 years. And this is really a persona of a digital netizen, right? And because traditionally, the insurers always looked at the market from a perspective of either mortality or from a perspective of financial wellness for taking an insurance platform. But then there is another persona that emerged, which is I'm a digital native, and the way I would like to interact in the insurance process is very, very different than the high touch, high person, trust-based model that traditionally exists in the insurance industry. And so I think that is the big change that we have seen, where this model has emerged, where my customer needs to be safe, my customer needs to feel empowered for making all the decisions, should have all the information asymmetry removed in terms of making a choice to a variety of products being evaluated online, and quickly to be able to drive a decision for purchase, right? So if I take the three dimensions that are extremely critical, that we have learned, that are extremely critical from a D2C journey for a customer insurance, is one where I call it the axes of intelligence, efficiency, and experience, right? And when the intelligence is all about what can I really approach the customer with, what sort of data can I extract, what sort of intelligence can I extract and use that in the buying process. The second is more about the efficiency. You said there is the huge desire about instant gratification, right? I need to get myself protected. I feel it today. I need to get protected today. How quickly from the desire of feeling protected to a policy getting in execution, right? What is the time spent? And the D2C channel really challenges the insurers to drive digital as a medium to contract that time. And the third perspective is really around the experience, right? What experience do my customers derive through a D2C interaction? And I think our learning has been that we have worked on all those three dimensions. And it has really helped us position one to the digital netizens, to the people who are more self-service oriented, who would not, quote unquote, want to walk in a bank branch, for example, for brand banking, right? Rather, they would have low touch, but would have the capability for entire end-to-end servicing, right from the onboarding, right on to underwriting, to policy servicing, and if required, claims or maturity, right? So our learning has been this three axis, work required on all those three dimensions to give a superior D2C experience to all our customers.
Okay. Meghna and Abhinav, I want to come to you now. So Meghna and CrediWatch, you help banks, right, grow their business. You're also looking into something on the D2C side. Abhinav, you have a ringside view at BCG, where you're helping both large and small companies scale. Can you share your thoughts on building successful B2C?
Shall I go first, Abhinav?
Go ahead, Meghna, please.
Yeah. So, CrediWatch essentially is an AI-based platform, and we help, companies, banks, and anybody make a very effective decision about any risk they're about to take. We are partners to many financial institutions, RBL Bank being one of them, where we help our partners, in the entire credit management journey, where they can provide seamless services to their end customers. So we're creating a backbone and infrastructure for many of our partners who are essentially very large B2C businesses. And we've been kind of doing this by innovating and creating seamless workflows, journeys, and insights, which all of our bank partners can use to be able to provide seamless, experience to their own customers, right? So that's what we've been doing on the B2B side. We kind of realized in the course of the 3 years of our journey that the same kind of decision making which we're enabling our partners to make, their end customers need to make it too from a different context. So all businesses make business decisions every day, and one of the biggest decisions they make is about how much credit days they need to give to their customers, whether it's 35 days or 45 days, right? Invoice credit. So recently, we've been now working with very small businesses, individuals, small proprietorships who are like B2C customers, and helping them make decisions in terms of whether to give invoice credit or not, and how to tackle delayed invoices. So imagine a small shop in Crawford market to be able to use the AI ML based to decide whether it needs to give 30 days, 45 days, or no invoice credit to its customer. One of the biggest learnings we had when we had to kind of create this B2C offering was to focus, just like what Nitin said, a very simple platform in the front where, just with a click of a few buttons, the person can understand what he needs to do. While at the back, it's a very complicated, machine learning driven, decision tool that actually enables them to, really reduce risk and create a positive impact on their business. So one of our focus in the past, 8-9 months has been on customer experience and giving B2C kind of customer experience where with one click, right, the customer is able to make an instant decision in a simple and effective way.
Thank you. So Abhinav, I was just saying before, inside view at BCG. So tell us what a successful B2C offering needs to think about.
I would say, Adil, I rather have an outside view because the people who have inside view are actually, people like Nitin and Meghna who are driving it. So look, from my perspective, I think everyone has made the right points. I would just want to categorize that by the life stage of the D2C business that we're talking about, right? So there is an infant stage, there is an adolescence, and then there is an adult, right? When you're in infant stage, you are actually trying to create that USP, and that USP can be across all the dimensions that people have talked about: efficiency, customer experience, personalization, speed, cost arbitrage. It can be any one axis on which you can say that I have a killer product or I have a killer service and I'm just going to crack the market, right? That helps you sail through that infancy stage when you're just trying to, grow on a CAGR of 100,000% month on month and just attracting customers in bulk, right? The moment you get over that stage, I think the adolescence is when you start figuring out that, okay, the hook product was good enough for the initial stage. What is the ecosystem that I can provide my customers to stick around for longer? Because then I start having an issue of churn, I start having an issue of retention, and I also start having an issue of what else. As Nitin said, that in 2014-15 we started figuring out that, what, day traders and FNO was good, but can we expand the pie by creating an offering for the investing janta as well, right? So that's the stage when you start figuring out how do you expand the offering. And I think the test of the pudding is when you get into the adult stage, and that's where you start running into issues like cybersecurity. You start running issues like regulatory compliance. You are under a very heavy scrutiny and lens for everything that you do. You have to manage the social media narrative. You have to manage your downtime. The point that Nitin was making, even if you're down for 1 second, there'll be like Twitter going, boom with all the messages, right? So I think that's where you start figuring out what's the business resilience that can help me, just deliver on the promise that I made during the infancy. So I think that's the journey in my mind, and that's what it takes in my mind, comprehensively.
So Harjeet, you've partnered and seen at RBL Bank a decade of B2C fintechs, right? I think I can speak from my personal experience. RBL Bank's a great partner to work with, but have the maturity levels and the scalability of the B2C companies you partner with changed over the last decade?
Yes, and I think and I like the analogy which Abhinav was giving. I think we come across even today companies in infancy stage, and we've also come across companies which we partnered with in infancy stage have kind of matured over a period of time, and that is something which, from our point of view, as I said earlier, I mean, one, to put ourselves in the partner's shoes and therefore be seamlessly embedded is one key piece which we do. But I think there are a couple of other things which I would like to kind of point out. One is, and we being a bank, so therefore, whenever we partner, it's a financial services, highly regulated product offering, which we are talking about. It is important that people have a full knowledge of the regulatory guidelines and restrictions. And often what happens is when you are in the infancy stage, you think you can get away with some stuff, or you are in that stage where you are willing to challenge regulations. This is not written, this is gray, and therefore, I can do it. And you may find a partner or two also who will be able to kind of go along with that. But the reality is, as you become bigger, there are no shortcuts. And if a fundamental model was built around some of the grays in the regulatory side, then it is bound to face serious challenges. So that's one piece which at least we've also learned over a period of time, is to be completely transparent in what is kosher and what is not, and err on the side of caution, so that you don't make fundamental mistakes while building the business, both from the B2C side and in our partnership. The second piece was, we started with a bang. We had a lot of partners. I think at one time we could boast that we met over 200 fintechs in a very short period of time. But the realization was that starting a partnership is easy. But then to work with it, to scale it up, and for it to become relevant for both parties is where the difficult part comes in. And it means that there is a very serious and focused involvement both at senior management as well as the working teams, which needs to be there on a day-to-day basis, almost very granular in nature, which I think is easy. A partnership typically doesn't scale because you've got the right ingredients together and hope that BAU would continue. So that's the other piece, and I've seen a lot of partnerships fall by the way, because when the rubber starts hitting the road and you start scaling, you encounter very different kind of challenges, and sometimes we've seen a complete change from the partner side as well, where they say, okay, this is not what we had kind of bargained for, and they change their model itself. And sometimes from our side as well, where we find that there's nothing much is happening, and therefore it may not be a great place to be doing things. So that's the other piece. And the third one is, which is again a learning for us, may differ for different people, but is this entire debate on ownership of customers. Who owns the customer? And often a lot of partnerships don't either take off or land into trouble because of this entire tussle between, is it my customer or your customer? Our experience has been, and that's been the philosophy with which we operate, is I don't think you can own customers. And in today's day and age, customers are free to choose from whatever product they want to buy from wherever they want. I mean, I can say it's an RBL bank customers, but doesn't stop it from buying something from any NBFC, any fintech, or any other bank for that matter. And therefore, our way of coping with this is that, look, let's just agree on who does what with the customer. And as long as that understanding is there, then it is fine. And you're not really worried about, my customer, and therefore how much money did you make off my customer, and that point of view. So these are some things which I would say have been learnings, and maybe for some of the budding fintechs who want to partner with banks or others, maybe this could be some kind of some kind of guidelines.
Good. So Nitin, for a budding B2C fintech, right, you hit on the holy grail model of a profitable, highly profitable, growing B2C business. What can you share with us as to how you did that?
Yeah, I mean, we got lucky, I guess. So, no, but in reality, the thing is, see, the first audience that we went after was profit-generating audience. So, in the sense, the first 4 years of our business, we built a business for very active traders, and they're essentially the ones who are bankrolling the investor crowd today, right? As in, because we have free brokerage, we don't charge a revenue for customers who invest in the markets. But on the other side, we also have the largest pool of active traders in the country who generate revenue for us, right? So in a way, they are subsidizing for the investor crowd. And while we add a lot of investors to the to our business, they don't really generate any revenue as such, So the revenue is still from the very active, very shallow kind of the participation is quite less. I'd fathom, I guess, saying not more than 750,000 people, 750 to 1 million people trade actively in the markets across the country today, right? So whatever business you're building, you're a subset of this very small audience, and this audience requires all the bells and whistles, right? And I think what has helped is, I used to trade the markets for 10, 12 years before Zerodha started, right? So it's almost in the blood of sorts, because like this very active trading crowd is, are like car racing enthusiasts, I mean, in the sense they care about, how much time it took in pit stop. Was it 4 seconds or 3.99 seconds, right? As in, so we've kind of gotten that product right, which is what has helped us kind of grow. And the second thing I think what we did was, there was, I always knew that in this business of investing, people don't decide to get up one day and say, I want to invest in the stock markets, right? I mean, so having an advertisement makes no sense. So until date, we spent 0 rupees on marketing or advertisement, right? Because it never made sense. Because usually in this business, if you decide to invest, it's usually because your friend or family says, I invested in a stock. So you then go ask, hey, how do you do it? And where do I do it? So how do you do it? We have like the largest education initiative in this country. Where do you do it? As and when we grew bigger, the word of mouth started kicking in because we are constantly working on building better products for the customers. And I think one of those things that we did, which worked very well, was in 2016, we started this incubator called Rain Matter, where we started partnering startups, like how RBL does today. But what we did in return for these startups that we partnered with, I mean, of course, we gave them capital, but what we also did was we showcased them to our audience as, as if that is our own product, right? Which is what is typically missing today, right? As in, because a lot of startups might build products, but how do you get users to come to the product, right? So because we started showcasing these products to our customers, a lot of startups came to us because they said, it helps me validate if this product is, this idea is a good idea or not. So today, Rainmatter, the incubator, has around 15, 20 startups, which has also been very key part of our success as a business. And I think finally, it might sound a little weird, but I think not having raised any capital has helped as well, right? Because there has never been this hurry to grow fast, either in terms of revenue or in terms of user growth, right? So we have never chased down any growth. We have said, you build a product and maybe users will come to you if everything else is okay. So that not having a pressure to grow fast has actually ended up building a better product for the users.
Fantastic. So let's move to the second part of our panel, right? We spoke about what it takes to be successful in B2C. Now let's talk about taking that B2C offering global. So Meghna, I'd like to start with you. You've set up a successful enterprise in India. You're thinking about venturing global, right? Can you tell us what your thought process is, both for the industry and fintech as large, and both for yourself, into how does one take these steps into going global on a B2C offering?
So, the first thing is to kind of do a very light touch model, right? When we decided to go into the B2C or B2SME mode, as we call it, we created a platform that can be accessed by anyone in the world. And with, one touch, they could pay for the services and access, information about companies and businesses, which helps them to make decisions. So while we were in an alpha stage itself, we had one of our alpha customers was a trade agency of a foreign government who decided that for any company that comes in to India from their country, they're going to use CreditWatch to evaluate their partners and decide whether they want to do business with them at all. The fact that it was a light touch model, you could just sign up with a simple credit card, and we were able to kind of reach out to them with some effective marketing. That was our first strategy to kind of get attracting global customers, right? Where anybody in the world can just come sign up on our platform and they can get going and they can get the information they want. So that's the first strategy. And as we scale, as we validate the proposition more and more, then we're going to look at a lot of partnerships effectively with different organizations in different countries. Right now, we're contemplating looking at the Middle East and some of these countries where we could look at an effective local partner who would also help us reach out to customers in those regions. So the first strategy, of course, is the light touch model. And as it scales and progressively, we make investments.
So now I want to bring in Abhinav, you and Manu. So Abhinav, you actually advise companies which are globalizing and taking B2C global. What are the pros and cons, opportunities, risks? And Manu, you've spent a majority of your professional life working internationally. So you have hands-on experience on what it takes to globalize. So
yeah.
Would you like?
Yeah.
Go ahead.
Yeah. Okay. So I think, Adil, just to set the record straight, I think in my mind, whenever I have worked with global financial institutions across Middle East, Southeast Asia, ANZ, I think we have ended up evaluating products and offerings of Indian fintechs and services, and hands down, our offerings are either competitive or better than what you would find there in the local market, hands down, right? The products are a lot more cleaner, designed with the correct user experience, and on top of it, the kind of hunger that the Indian startups and fintechs usually display in some of these situations is just way beyond what you would see in the competition in those geographies, right? And I'll give you a live example. So right now we're working with setting up a neobank from scratch in Abu Dhabi. There we ended up evaluating Zoho, Freshdesk, Perfios, all of these solutions, right? Like best in class and amazing experience, right? I think the place where it starts hurting us is the whole regulatory constraint, right? Every country, the moment you get into a zone whereby you are bound by local regulations, you have to take local licenses, you have to figure out a way in which the local protectionism doesn't hurt you. I think that's where it becomes disadvantageous for us to compete. And that's where I think where Meghna was making a very fair suggestion is how do you partner with local entities and then take your solution global, right? I haven't honestly seen any examples of making it big in that kind of a partnership model, but that's a very creative way of thinking around it.
Got it. Manu?
Yeah, I would really agree with a lot that Abhinav said, for example, around regulations and constraints around, for example, data security, right? So one of the biggest learnings that I've had when we apply even to the context of insurance, the biggest difference that I see between India and in more matured economies is around the regulations on data privacy. The whole idea, for example, if I have to go with a European firm and tomorrow I have to start, let's say, even collaborating on any opportunity, GDPR comes into the picture, and then you have to really take care of the data privacy, the localization, as exactly what Abhinav was talking about. The second challenge that I see is the definition of personal data, right? And especially in the context of insurance, I have seen globally people making a significant amalgamation of personalized health data with, and for example, wearables data, a number of steps you take can actually determine your insurance premium, even for a life product, right? But that sort of an integration is only possible abroad because of the regulation paving a platform for cross-sharing, paving a platform for, let's say, the health providers to actually come across together with the life providers, right? So that's definitely a constraint that we see here. But then also that the issue around personalized data, the access of it, the regulations around it also lead to a bigger question around fraud prevention. Because as we take the products globally, how fraud gets measured, how fraud gets managed in the context of India is very different than how fraud gets managed globally, especially because of the lack of adequate quote unquote normalized data available in India. So there are some benefits as well outside, but there are some challenges as well in terms of data privacy. There is also a challenge around in globalization that we see around the whole amount of exposure that a firm has on the last mile of delivery as far as data is concerned, compute is concerned, which in the global context can mean very, very different than if we are operating a business within the confines of a particular country or geography, right? So those considerations, those risks do present themselves very, very differently and actually accentuated in a global context for sure.
Thank you. So Harjit, both Abhinav and Manu spoke about the difficulty in different regulatory regimes as you globalize. Now, you work with regulator very regularly as a bank in India. What advice do you have for fintechs looking to globalize who will hit this barrier of different regulatory regime when they globalize?
Yeah, so I think both Abhinav and Manu did touch upon it for the fact that one, your own knowledge about the regulatory nuances which are prevalent in that domestic country is critical. And while you can try and assess and assimilate that knowledge, I think if you can go along and partner with a strong partner there who therefore brings that expertise to the table could be a big plus. In my mind, I've always seen that regulatory arbitrage never really works, and sometimes it can become extremely serious, and these things are I would say can have disastrous consequences in some of the more matured countries as well. So that is something which there is no other way but to understand the regulations there, and also maybe seek some help and advice from either partners or consultants firms or whatever be the case. So that's one. The second is that is more about and I think Meghna did touch upon it, keeping your platform light. And I would add another word into it to say that keep it flexible, because if you have to factor in these nuances around regulations, then you will require changes, sometimes in your product, sometimes in your processes, sometimes in your risk management techniques, etc., which you will need to bring in. And therefore, you should be able to do that. And that's the other piece which I think one must do. Yeah, for me, I think these two are key, apart from the fact that you need to have a right to be able to play in that market and win, which is basic. Otherwise, just because sometimes your need gaps in the markets and your products are fairly universal, and you believe that if I could do it in this country, you can do it there as well. But what gives you the edge, I think, is something if you can solve for, that's that much better.
Fair enough. I think on that note, this is really this event is put together by FICCI and the Department of Economic Affairs. FICCI interacts regularly with regulators like RBI, like SEBI, and I think it's good that these kind of conversations are going between industry and the regulators, and we really appreciate the interaction. So Nitin, tell me, how do you think about globalization or internationalization in terms of your business?
Over types. And no, I mean, see, as fintechs, we always blame our regulations, most of the times. But I kind of realized, the time spent there, that at least in India, we have regulations that says what you can do, what you cannot, right? Whereas in the US, I just realized it was all quite gray, as in, I mean, you just have to make a mistake and then get fined to death to realize that you shouldn't have done this, right? And yeah, so I mean, we did spend some time while the trading like a platform. If you look at, say, Zerodha, or you say look at some international platform like a Charles Schwab or a Robinhood, while the front end might seem very similar, so it might seem that you can very easily replicate across different markets, but it hardly is like that, right? Because the underlying structure of the capital market ecosystem in India and the US is completely different. Just to give you an example, in India, if you place an order on our platform, the orders have to go to the exchange, right? You're not allowed, to interfere in that order path. But in the US, when you place an order on the platform, the order can go to 12 different venues, and including, high frequency trading desks. Or if you're a broker, you can potentially, just fill the order for your customer, in the sense you could just be a counter to the customer. So as that itself is like a big fundamental change in the way the ecosystems work, right? And so yeah, so while a lot of front end can be copied, but none of the back end, we realize, can really be replicated. So, and then the decision we took was India is probably where the opportunity is, and we shouldn't be wasting time looking at other markets. And maybe a better problem to solve is help Indians go global versus go global and try to solve for global problems.
Fair enough. So with that, right, I think we move to the last section of this panel, which is about what are going to be the big B2C opportunities both in India and globally over the next 5 years. I want to start it out with Manu and Harjeet. So in insurance and in retail banking, please tell us, what do you see as the big opportunities in the next 5 years in B2C?
Sure, Adil. I can go first. See, looking at the current level of penetration of insurance, especially protection in India, right? If I look at the penetrations as low as 2.7, 2.8%, there is anyway a significant opportunity for a D2C ramp up overall as a business model. The profile, as I said, of the digital netizens, the pie is growing, the education levels are growing, access to networks, access to internet, technology, penetration in the rural segments, that is growing. And hence, equally, there is a need that is getting evolved that, hey, if I can do things digitally, if I can do things remotely, then why not, right? So that itself is leading to a significant momentum around the D2C model. That's one. The second part is that COVID was a big discontinuity in insurance thinking and mindset as well. A model that traditionally was a very in-person, trust-driven sort of a model got challenged one fine day that you can't meet the agent in person because of COVID, and that certainly it opened gates for significant transformation on the selling end in terms of, for example, how do you do completely contactless onboarding? How do you do online verification, fraud analytics, take videos of people, do telemedical calling instead of people having to go necessarily for medicals for every single policy. That entire innovation is leading to a belief in the sector that there is more option to go to D2C, right? And the regulator has been extremely proactive and extremely helpful in terms of providing those digital opportunities, moving from physical signatures, from wet signatures to digital forms. The insurer even the regulator has been very, very proactive in terms of providing those opportunities for changing the regulations accordingly. So I do see a huge momentum there. I also see a huge momentum around integration of wellness platforms along with insurance, especially in the D2C space, right? Where if I'm a customer getting onboarded, I not only get served for the protection, but I also get served and advised on how do I remain healthy for me not to ultimately cause any event of life, right? So a lot of amalgamation of wellness platforms with protection insurance platforms. I see that happening with the D2C channel. And finally, it's also going to make the D2C channel extremely competitive because my ability now to compare, my ability to look at a very wide variety of products, a very wide variety of offerings that can be customized to my life stage. I think that becomes extremely fluid, extremely transparent, and extremely agile with a D2C model. And that I believe will create a lot of technology innovation, product innovation, right? How can I seamlessly add riders to my product on the fly, right? How can I add additional risk management capability while onboarding my customers on the fly? I think those segments will become extremely important. So I definitely see amazing days for D2C as far as insurance is concerned ahead of us.
Okay, Harjeet.
Yeah, I personally believe that a lot of work has got done in India on the urban side of the market, both for individual customers as well as for MSMEs. I think one of the markets which is kind of not yet seen that kind of fintech participation has been the rural markets. So we have a few fintechs operating in that space, but I think there is a lot which can be done. And I do understand the challenge. The challenge there is that market can never be purely digital, at least not for the next 5 years. And therefore, you need to be in a position to be able to club your digital customer experience along with a physical infrastructure. And that's where I think the big dichotomy comes between, let's say, a fintech or a startup as to how do they leverage a huge physical presence to be able to get their offering across. And I think there is therefore a lot of potential which can come across from a partnership between them and some of the people who run these physical infrastructures. Banks are one of them. There are NBFCs, MFIs, which are all having huge infrastructures right into very, very small villages, which can be partnered. Now, a lot of these NBFCs, MFIs, and banks are also trying to see that they usually end up operating very simple single product relationships with their customers there, but there are millions of customers there. Now, if you want to penetrate into the household and therefore provide them, let's say, the full banking suite of products and services which an urban customer enjoys, I think the financial institutions today are struggling because for each one of those, they end up either putting a different infrastructure in terms of people, processes, etc., which therefore then doesn't become economically viable. And I think fintechs can therefore help in there, but it'll have to be a bolt-on onto the existing infrastructure. Now, whether you do home loans, home extension loans, or individual small micro SME loans, or you do two-wheelers, even when you do BNPL or buy now pay later is a big rage now in urban markets. I mean, there is enough demand for small products in rural markets as well. How do you provide these there? I think those are some of the things that market is actually ripe for such kind of an intervention to happen. So in my mind, that's a very, very lucrative market for some of the fintechs, B2C players to get in.
Right, Harjeet. I think you and Manu spoke very well. Just double clicking on it, right? I think there's a common view that digital delivery is going to scale rapidly. I think we see this in all the work we do at Bank Bazaar, that this is a channel that's growing disproportionately fast. I think what's exciting is that both in banking and in protection, right? There's a significant profit margin to be created by accessing new customers who might be outside the traditional pools that everyone's been going after, making better use of data. So Abhinav, I'm going to come to you now. So usually you're advising managing directors and CEOs under contract, but now tell us, right, if someone is thinking of internationalizing opportunity in the next 5 years, where is the opportunity in the next 5 years, Abhinav?
Yeah, I advise even without a contract, Adil. So I'm fairly frivolous in that extent. So look, jokes apart, I think unsecured loans, that Harjeet talked about, be it BNPL or the supply chain financing, be it the payments landscape, be it on the back of UPI, or be it on the back of just the POS-based lending, etc. The whole payments landscape as well as InsurTech, I think all of these are fairly well-established, lucrative spaces which have done extremely well in India, right? And Harjeet added that another dimension of geography. In my mind, one space which I genuinely believe hasn't grown as big as the potential lies is the whole wealth tech space, right? So Nitin talked about, this whole journey from discount brokerage to becoming an investment platform. But I think the adoption, the way digital payments has taken storm, and went and penetrated the bottom of the pyramid, to some extent, the same opportunity lies with the whole wealth investment opportunity, that micro investment. I think the infrastructure is right, the opportunity is there, the regulatory conditions are there. I just hope that we will see some big moves in that space.
Thank you. So Meghna and Nitin, I'm going to come to you now. So in the audience, we have Indian companies wanting to go abroad. We have international fintechs wanting to come to India. We have investors looking at all this. Where do you see the big opportunities over the next 5 years in your industries and your businesses? Meghna, if you want to go first.
Sure. So in fintech, there are two big opportunities that I'm looking to be greenfield for the next 5 years, right? One is bringing banking to your doorstep, like what Harjeet was just talking about, not just in the urban areas, but also in the rural areas where, you don't have to go to a bank anymore, but because you have a mobile phone and you have internet, which 80% of the country has today, you'd be able to get banking at your doorstep, not just through an app of your bank, but through various other apps or other things that you use in your day-to-day life. So that's going to be one big trend, and that's an opportunity not just for Indian players, but for a lot of global companies offering services to be able to come to India to be able to play in that space. The second big one is embedded finance, kind of like what Simple's doing now in the B2C space. Embedded finance is going and flow-based finance, and I would say beyond flow-based financing, because embedded finance goes beyond flow-based financing. We go look at data beyond just the flow data, right? That, especially in the supply chain context, is going to be really big, where in an actual trade transaction, when things are happening between a buyer and a seller, financing will will happen in real time, almost at the appropriate time when the financing is needed. Because a lot of financing now happens, once the transaction's over and you submit an invoice. But the future is now going to be financing at the right time, maybe at the time that the buyer gets the order itself, or at the appropriate time where the buyer or the seller would really need it. So that you're able to kind of solve the problem and ensure that the transaction happens and the service can be done in a successful manner, right? That's where the choke is right now, that you don't get financing on time, you're not able to fulfill or deliver, and then you get delayed. So that's embedded finance, especially from a supply chain context, I feel is going to be a really big trend.
Okay, Nitin.
Yeah, no, I'd agree with what Abhinav just said around wealth tech. I think, but I have a different take on this. I think it has to be physical and not as much digital, because people allocate small amounts of money to an app, like an app suggesting, right? But then as soon as that becomes a little more significant, so say if someone has to do a SIP of say 500 rupees a month, right? He will do it on an app. But as soon as that corpus becomes say 1 lakh rupees, and now that it makes material difference, people don't act on an app. I mean, they don't still trust an app telling them to do what to do, right? And that's where humans are required. And I think what India has been missing is an advisory ecosystem. Now, this is what has, I think one of the big reasons why US is such a mature market is because there are tens of thousands of advisors, professional advisors who teach their customers the right things to do and in turn turn them professional, right? And in India, that's been missing, as in most of us have picked up, how to save, how to invest from our parents and our friends and family, and so it's a lot of wrong habits, right? So now, I think it's onus on platforms like us to come, build these enablers for advisors to, I mean, regulations wise, there are things in place. I think regulatory, one thing that can help is, allowing advisors to collect their fees from the AUM itself. Because today what happens is if you're an advisor and you have to collect fees, you have to go to the customer and collect it separately, right? And it's very tough to collect an advisory fees quarter on quarter from a customer, right? So in the US, how they've solved for it is that it can actually go from the asset under management itself. So maybe some regulatory enabler like that. And I think so. It can't be completely human, so it has to be humans enabled with tech. And I think one missing piece in all of this was getting access to data. And thanks to Sehmati, hopefully, in the next few months, we should be able to kind of access all the data that's required to kind of deliver the right kind of advice. And so altogether, I think there's like a mega opportunity for this country.
Great. So I think we're almost out of time, but we'll have time for 2 questions. So I'll just put it out there. I think the first question, Harjeet and Manu, when one thinks about accessing new customers digitally, right, or building B2C access, how should one go about doing it for a company?
Sure. I'll go first. I think first is the recruitment from a digital platform perspective is very different from the traditional recruitment that we do from a physical route. Reach awareness, because insurance, especially, the first step towards getting people on a platform is education, is awareness, and that's why you see a far more aggressive outreach towards the market for awareness. The second part is that's where the idea of ecosystem also plays a very important role. For example, you not going only through your own platform, but through other e-commerce partner platforms, right? That gives a lot more visibility, a lot more reach, a lot more scale. So partnerships become very important. Bundling becomes extremely important as well, that when you are putting your digital product out there, is it possible to bundle that product with different offerings, different platforms, different e-commerce platforms, for example. So those 2 or 3 of these routes are extremely critical for driving the penetration as far as D2C is concerned.
Thank you, Harjeet.
Yeah, I kind of echo Manu's thought. I think trying to build large customer franchises purely organically requires one, a lot of money, and second, a lot of time. And if one needs to do it faster, then partnership is of prime importance. You get access to well engaged customers or partners, and if you are a relevant fit, then that strategy could work. But it has to be a relevant fit. Otherwise, it's as good as advertising on their base, which doesn't really work too much. So my advice would be to try and see if you can find relevant fit partners which you could kind of go along with.
Yeah, fantastic fit advice, right? Relevant partnerships, you don't have to build it from the ground up. Last question, right? Meghna, Abhinav, how do you control for risk and fraud as you scale up on digital B2C? Meghna, if you want to go first.
Sure. So at least for me, right, my background being that I'm a lawyer and I spent 15 years, understanding regulations, fraud, due diligence in multiple countries before I started CreditWatch. For us at CreditWatch, we do, compliance by design. We do fraud prevention by design because we focus a lot on understanding the regulations and understanding what are the different scenarios, in terms of risk before we build the product itself, because that kind of comes to us naturally. Understanding risk, understanding fraud, understanding the different kinds of challenges that can come about either from the regulatory environment or for generally because there's a data exchange on the internet, and what are the kind of threats that can come about in terms of security. And how to mitigate that kind of comes naturally to me because that's what I did for 15 years before I started CreditWatch. And we've kind of, from day one, we've always incorporated the principle of data governance by design, security, designing for security, creating the right kind of checks and balances and measures by design from day one. And that's kind of how we've built this business.
Fantastic. Abhinav, no pressure, but final words.
I'll just quickly wrap it up. I think very quickly, Harjeet made this point very early on. There is no regulatory arbitrage. From day one, you have to believe in that, right? So your product and offering has to be attuned to the fact that we are not harping upon some gray area in the regulations from the product perspective. And the second is, as you scale up, we can't be penny wise and pound fool on investments in cybersecurity, in the resilience of your IT security, et cetera, because you eat like a chicken and shit like an elephant when it bursts, right? So you just need to take care of that. Yeah.
Okay, so on that note, I think we're out of time. I want to thank all the distinguished panelists because they shared from their own experiences, their own learning, and that's the best way, right, to help, to I guess help others learn. I found it very informative. Thank you to FICCI for organizing this event, and to the Department of Economic Affairs, right, which has really come together with the industry to build this kind of platform. So thank you, everyone, and I hope the audience enjoyed it. Goodbye.
Thanks. Goodbye.
Thank you.
Sudhakarji, over to you. Thank you.
Thank you, Anshuman. Good afternoon, everybody. Hope you're all having a good day's conference and are visiting all the expo stalls, etc., and having a good understanding of what India and the other countries have to offer. We are now starting the country-specific sessions. The country in focus for this session is Singapore, and we have Mr. Supnendu Mohanty for the Monetary Authority of Singapore, MAS, and he's going to be the keynote speaker for this session. Very happy to have him here. Welcome to this session, Supnendu. To just give a brief of Supnendu, he joined MAS in August 2015 and has been responsible for creating development strategies, public infrastructure, and regulatory policies around technology innovation. And since 2015, as we all know, Singapore has become one of the top global fintech hubs, covering a wide range of financial asset classes, including adjacent technology innovations in areas like insurance, digital assets, blockchains, artificial intelligence, RegTech, and green finance. And I'm sure I can add many more to this. And before MAS, Supnendu spent over 20 years in various leadership roles, technology, finance, and innovation, with most of his career with the Citigroup. And Swapnendu is a member of multiple advisory committees and multilateral global agencies, associations, universities, and governments. He's an avid speaker, global thought leader in fintech, and advocate of accelerated transformation to a digital economy for solving financial inclusion and sustainability challenges. I think we're going to have a very interesting session with Swapnendu, and he's going to talk on a topic of leveraging India and Singapore's complementary strengths in fintech for a winning partnership. That's really the topic that he's chosen to speak on. Look forward to hearing from him. He'll possibly go on for 15 to 20 minutes, and after which we will have a small Q&A. Over to you, Supnendu.
Thank you, Sudhakar. Thanks for having me at the FICCI, this particular event focusing on fintech. I would say one thing, at least for the fintech ecosystem, the COVID crisis came as a blessing in disguise. Whatever inertia was in the market not to go into the space got removed. And if you look at any data point, whether it's India, Singapore, Philippines, Vietnam, everybody are reporting record growth in electronic transfers, electronic asset creation. So I think the market is at a state where anything related to a digital economy is standing to gain a lot. So let me do one thing. Let me put this big question: how Singapore and India can come together to build a much bigger complementary market opportunity for the fintech ecosystem. Let me start giving you a sense of how South Asia, in particular Singapore and the 10 countries around us, have grown dramatically in this space. And I'll also reflect on some of the Singapore growth story, and then come back to this big question around how to connect the dots. Well, to start with Singapore, as I said in the introduction, when in 2015, when we started the journey, the fintech as a sectorial focus in Singapore was hardly existing. While Singapore has been traditionally a large, vibrant financial center, fintech in particular did not take much role here, because the genesis of fintech has been in markets where access to credit, access to account has been a challenge, or poor payment system existed in those markets. Fintech became an answer to those challenges. Singapore was highly banked country. The access to bank account is quite adequate, reasonably good electronic payments infrastructure. So the drivers didn't exist that much to capture this growth of fintech. But the government decided to focus on this sector. It was growing sector. So what we did, and in hindsight looked like perhaps a good move, I would say, is to expand the definition of fintech which suits Singapore. Because the narrow definition of fintech was payments, lending, That's it. And what we did in 2015 is to make a space for ourselves. We expanded the definition, and the expanded definition was anywhere technology comes and changes the business model, makes it cheaper, better, affordable, or it creates a new business value is a fintech for us. We are kind of asset class agnostic. I think that expanded definition opened up a new set of opportunity for Singapore to focus in the world of fintech. Now, when I look at the profile of the companies of fintechs, which is handful in 2015, as I said, because of the history of the world of fintech, which came post global financial crisis, it was primarily either a payment company or a lending company or a platform lending company. So if you look at the numbers now, which is 1,000 plus fintech, almost the share of payment and lending company is now less than 30%, or could be 40%. The rest of 60% are the outcome of a policy direction we took in 2015 that we will focus in this expanded definition, which include insurance, as you rightly said, and a new class of fintechs were actually promoted out of Singapore called the B2B fintech. Fintechs who are in the business of helping banks or financial institutions to digitize faster, and they stay behind the B2C companies to help them to drive digital economy. So that's, I think, a key distinct shift from the traditional fintech construct we saw in 2015, and primarily it came from the constraint we operated. Now, if you look at from a dollar value, the total fintech investment for a country of a 5 million population was close to maybe $20 million. Last year, we are ending the year. Last year, we have crossed close to $1.3 to $4 billion. So in 5 year time, a $20 million investment has grown to $1 billion plus investment, which within 5 years is quite a huge growth, because that was an opportunity that didn't exist. And it existed now, or is existing now, because there is this new definition which drives this new opportunity. Now that construct was driven by, I'll say, 4 key policy choices we made. We decided in 2015 we are going to put a upgraded digital rails in Singapore, which will truly templatize what a bank should look like in a true digital economy. So building the rails, something to India's stack, building the most widely used identity platform, building the most trusted public data rail, which will allow banks to will allow consumer to use that data set to open bank account or do other banking services, build the most comprehensive data gateway where all the financial institution can share, can use that gateway for where consumer can pull this data and see the financial holding in one place. Use our national data infrastructure to build a truly end-to-end KYC infrastructure, know your customer. Then today in Singapore, when you open a bank account, you can get full KYC done instantly using a national data infrastructure called MyInfo. So and on the payment side, as in India case, the UPI rails, we have an equivalent construct here on a faster payment system where I can pay to anybody in Singapore on a bank account, or now recently we went live with non-bank players also connecting to the network by just knowing their mobile phone number, 3 clicks, 0 cost. So this whole set of public rails were built between 2015 and 2020, primarily to create a template how this should look if a nation state achieves a true digital transformation, and always the banking sector will run. Now, it is good for Singapore, but how does it help us to grow our larger hub infrastructure? We'll be the first country in the world in next month, 4th week of April, we'll be the first country in the world where our domestic payment network in Singapore will get connected to a domestic payment network of another country, which will be Thailand. Now, here there's a huge leapfrogging happening. Now you're actually connecting a domestic payment rail, which is in this new construct, to other countries' digital payment rails, and you're creating a cross-border opportunities. One of Singapore's strength has been that our focus to create cross-border linkages, whether to payment linkages or through data linkages or through partnership or through collaboration. And we went over the last 5 years, Singapore went with almost 30, and from a regulatory side, 50 from the ecosystem side, with partnership with different country, where we brought the global connectivity in terms of mind share, talent share, in terms of encouraging them to collaborate in this market to this broad partnership. In fact, our association connected to more than 50 countries in their MOUs. We as regulatory bodies have a central bank collaboration on fintech about 30 central banks. Now, this is critical because you are building a network beyond your domestic market. And again, come back to that whole construct of rails. You have a physical rail, you have a policy rails, we have a market, or at least the sovereign rails connected to different market through MOUs and understanding. Then comes the fourth layer is building the talent pool. And this is where I think Singapore definitely takes a huge pride, is our ability to bring in global talent, to create that multi-country talent base in this market, so that when fintechs grow beyond their domestic bank boundaries, they're actually having a deeper appreciation of the market. So a company in Singapore would most likely have a diverse workforce, and that diverse workforce may be creating a leadership opportunity to the market they're going, and hence your natural transition to other market from your domestic market becomes seamless. When many countries, it becomes a constraint because the DNA and the construct of the company will be largely of that market, and when they go to another market, they're building a new partnership with a completely different cultural setup. So for a company to go beyond the domestic market needs to have the diverse talent pool as they expand. And then the next layer I would say is the regulatory rail, because fintech is a regulated sector in many countries, and going to get more regulated because if you are looking at different regulatory practices, progressively regulators are putting very conducive, thoughtful regulation behind the world of fintech, whether in the payment system or in the digital delivery of different financial instruments. So there's a host of regulatory updates being made. Having a conducive regulation is also a key enabler, because you want a company, a fintech company, to go through the full brunt of a progressive regulatory structure, so that they get ready when they get into a new market on their ability to deal with the regulatory expectation. It is not it's not a great thing to be in operate in a country where the regulatory construct doesn't exist, and then they're trying to go to a country where this regulation exists. So having a much structured, conducive, comprehensive regulation and let the fintech grow under that construct helps the fintech to build that regulatory strength they must have as they get into new market. And as you know, that if your consumer is if you're a big part of clientele are banks themselves, you got to follow certain regulatory expectation on the partnership. And the last piece to wrap up this, that from where I sit, we generate a whole set of what I call as a marquee programs, which creates that ecosystem impact of bringing fintech players, investors, regulators, public policy makers to a lot of pilot projects. And we have two big tools, public policy tools, to drive that. One is the regulatory sandbox, and second is the industry sandbox, what we call as API Exchange, which is a non-profit platform created out of Singapore to promote greater adoption of technology of fintech by the banks. And this tool has given us a huge opportunity to actually build a much diverse and a bigger activity to demonstrate how fintech can truly change the sector to get ready to the most optimal digital economy we want to build. So that's Singapore in a I guess we crossed, let's say. Yeah, we are under 5 minutes. I'll go to the international space here. So that's Singapore in terms of how we have gone about in last 5 years, and the numbers are truly encouraging. In fact, I would expect that by this quarter we should be crossing $500 million in fintech investment itself this year, based on the numbers. And as you know, Singapore also has opened up 4 digital bank licenses, which will again create the next generation of banking platforms or I'll say banks who will define the new template for a digital bank. Now that's Singapore story. Now there is also story beyond Singapore, is which I will stay limited within the ASEAN market here. One of the I would strongly encourage viewers to go and read. There's a report from Asia Partners, which is co-founded by one of the, I would say, most knowledgeable individual in the space of digital economy, Nick Nash, who actually was the president of SCA or the Garina then, which is now one of the most profitable 100 plus billion digital platform. And he has started a company, and he made a recent report where he talks about the opportunity in the South Asian market. In his report, he talks about by 2030, 20 plus billion value companies will be in the ASEAN market. He believes there will be 20 companies who are going to a mega IPOs in this space, and he has taken a huge bet that the growing half a billion people, highly mobile, young, growing economy will be generating the next value, economic value, primarily driven through largely by tech platforms, largely through fintechs powering this opportunity. And if anybody in India looking to expand, I think the market they should immediately get into is the South Asian market, which is is almost 5 to, if you're in Chennai, you'll be like 5 to 6 hours to fly to any of this market. If you're flying from Delhi, perhaps a little more, but still within a day you are there in this market, and that market is growing at a speed which is unprecedented today. And having an opportunity to get in the market, I would strongly believe is the next opportunity for a lot of fintechs in India. Now, a lot of fintechs don't have to land there directly. We have a lovely airport called Changi Airport, and we have a lovely ecosystem called Singapore, where you can get yourself landed and you can get yourself seasoned before you expand to the market, because we have some kind of dry powder called the investment dollar. We have a lot of investors in Singapore who are looking for investing at early stage, late stage, or a Series A stage, where they're willing to put money behind companies who are expanding, successful company in the domestic market, who are looking to expand to the Asian opportunity. And of course, being in Singapore, these investors, they do look for a house in entity in Singapore so that they can govern this better. So huge opportunity in the ASEAN market, and primarily they're driven through the fintech and the digital economy. And Singapore is building its own connectivity pipeline to this market. So transiting to this huge opportunity market will be relatively easier now. Now the last part of my intervention is around the opportunity with India. As you know that we have a joint working group with India between Indian government and Singapore government, which was jointly agreed by the two Prime Minister, Prime Minister Modi and our Prime Minister in Singapore. Which is almost the third year of that agreement. We have 3 to 4 areas for partnership. One is definitely connecting our public rails, which is able to connect. Hopefully, someday we'll connect Aadhaar with our system. Someday we'll connect the payment system with our payment system. In fact, we are working with NPCI to connect our payment system. Hopefully, by end of this year or early part of next year, part of the joint working group progress, and which will be like a big boost to these two countries able to connect each other, having the two rails connected. We're also focusing on cybersecurity, talent development, data connectivity, and how do we build the future economy by building trusted data connectivity between Singapore and India, where we should be able to create that trust corridor and really allow both Singapore and India to expand to play a bigger role in this digital economy globally. So that framework exists. So we have a strong intergovernment construct, and which is a multi-agency construct. So the format exists, the platform exists. I think what we got to do now is to bring the community together and find a path of collaboration so that collectively they can find Singapore as a place to expand to the ASEAN market. And we do regard Singapore's, so India's fintech ecosystem with a lot of respect, because one thing India has, which I think India has to figure out how to use more and more to its advantage, is a large market. And the market size is so huge, which means comes with huge opportunity. And there has to be some mechanism by which India can be not only a test bed for new ideas, also can be a market opportunity. If we can find an elegant way where we can bring the Indian market to the global community, I think the ability to partner and collaborate between multiple market will definitely grow, because uh, greater market level collaboration will create bigger opportunity. There will always some differences, we can sort it out, but I think that's the path in my mind we should go for and find a thoughtful way to build these collaborations. With that, I think I've set you some broad thinking about how we both Singapore and India should collaborate. In fact, we are collaborating at various level while we don't talk about it, but the train has left the station. We just have to find a way to make it more visible and create more opportunities.
Thank you so much, Supnendu. That was very interesting. Your thought process and discussion around the rails, the talent, the sandbox, etc. are really interesting, and I think they've set the stage for success of fintechs in Singapore. My question to you would be, in the context of what we are debating, how have the Singapore fintechs leveraged some of these capabilities and gone beyond the Singapore's borders into Southeast Asia? What have been the few success stories, and what have been the challenges that they have faced as well?
Well, as a regulator, if I take one company, the other company will feel bad, but I will try to keep it as neutral possible so that it doesn't look like a favorite company.
To be honest, I must say you don't come across as a regulator. A chief fintech officer in a regulatory environment. You're talking development all the while. This is the limit.
No, we do. We are very concerned and serious about our regulatory obligations also, and ensure that the market is not doesn't feel get into risk side, so that it doesn't kill all the opportunity. We can spend a lot of time on that, but I thought I can step away from there and focus on opportunity. Look, the reality is that a lot of the and in fact, there's some data, I don't know, I have to go back and refresh my memory there. Some data showed that almost 70 to 80% of fintech success has largely stayed in the domestic market. It has never gone beyond the domestic market. And it perhaps due to the comfort, due to the founder's own thinking of not to go beyond a certain stage, holding on to company, finding a way to sell it or get off and go to the next venture. So that could have created that data set. Or it could be that there's enough opportunity in one country. You don't need to worry about going somewhere else. Like India is a large country. There are enough money to be made. Why to bother and create more regulatory risk and operational risk into some other country? Now, if you choose to do that, if there's a need to go and expand the market to some other country, I think the first, in my experience in the Singapore market, the catalyst behind this are normally investors, because they actually start pushing the founders or the stakeholders, look, time to go to some of the market because we see an opportunity there. Now that's most likely the trigger point which starts with that, and which starts this desire to go to some other country. The second piece of I would say is that if you are in a fintech space, you tend to call your central bank and say that, look, I want to go to the country and I'm going to operate in a regulated space. Can you do something? And if you have a MOU with the central bank on the fintech space, you have some ability to make a call and say, look, these companies are coming, do check out. Well, we don't endorse anybody. We don't, let me be very clear. The agreements don't allow us to like say, endorse them to go to some other country and we give a stamp of approval. We would just share certain information and share that these companies are doing this and this is how they're doing. And I think that's quite harmless in terms of sharing. That's the second piece. And the third piece is around is a talent piece. It's a talent piece, because a lot of this fintechs, when they go to another market, the first thing they'll have is hiring. So I have seen success story where a very smart hire, which allows them to understand the local market, has been highly rewarding. Companies which have been not successful are the companies which have hired people whom they're comfortable with but have no understanding of those market. So one thing I would strongly recommend for any fintech company expanding out of India to any market, do find your leadership construct significantly filled with people who understand the market in and out. If you don't understand, these are complex market. There are optics issues. There are cultural issues, and not understand that can be a detriment to the growth of the company. So, and of course, we do expect that because they have been growing up in Singapore, their ability to respect the rule of the law, ability to or understanding that how important it's to stay within the regulatory perimeter is critical for the success. That cultural value also goes with them when they operate in another country, because first thing the regulator will ask, are you regulated in the home country? If they say that regulated in Singapore, they get some, some sense of credibility in that process.
Yeah, that is an important
point. We have created a platform called API Exchange, which is progressively becoming a platform by which a fintech don't have to find a client in Vietnam by traveling to Vietnam. They can actually go into the platform, call a Vietnamese bank, and find a way to collaborate, show the product, do the POC, do the pilot, and find the first commercial interest before they land in the country. And that platform is getting developed. It'll get better by middle of the year, and we hope that will become the final tool for domestic fintechs expanding to the external market.
So this API exchange will be for all Southeast Asian nations?
It can be anybody. Anybody can participate.
So whoever puts in their APIs into that will become. Very interesting. So one point that you raised, and one point that we keep hearing from our fintechs as well, is the challenge of regulatory differences from one country to the other. While a market differences, segmentation issues, etc., happen to most businesses in this world, and many businesses have gone overseas and been successful. The difference in fintech is the uniqueness of the regulations, and all the fintech businesses are regulated businesses, and hence the regulatory differences from one country to the other is what primarily stops most people from looking at the other country. How do you help them in managing?
I would push back on this hypothesis. I'll tell why. Even we had interesting observation in Singapore itself. The regulatory sandbox all talk about the history of regulatory sandbox, or the perception that regulators are the biggest impediment to innovation. And so the market agreement was regulator told, okay, fine, I'm going to put a regulatory sandbox. You show your nice, cool idea. I'll look at it. If I find it useful, I will allow you to operate, right? In Singapore, the regulatory sandbox was by design is quite different from India's regulatory sandbox. And the sandbox design we have does help to address the question you are talking here. So in our regulatory sandbox, the way it is designed, the first entry or the first qualifying criteria to enter our regulatory sandbox is for the fintech to clearly articulate that here are the policy barriers which stops them to launch this product. Sudhakar, you'll be absolutely surprising that almost 85% of the fintech who applied to the regulatory sandbox could not articulate what policy barrier they had to get into the market. 85%. Okay. Nice. So I would like to test that hypothesis. If there's a fintech which want to operate in the market, articulate for us what are the policy barrier which stops them to get in the market. There could be somebody, but not as much as we think. So I'm not sure about this hypothesis. What India can do, India can simulate by different countries' regulatory construct and find a way to test against that hypothesis. That is that a real constraint? And even if there's a gap, it will be not that material for them to have a discussion with regulators to find a way out.
Very nice. Yeah, it's not so much about being a barrier, but it's about being a different regulation from what it is in India, and the fintechs having to adjust to the new regulations of that country.
For the defense of the regulator, I must say one thing. Every regulator has three principles. They are worried about consumer protection. They are worried about AML, CFT, money laundering and terrorism financing, and they are worried about stability. Right. And I think most of the regulations will have can be bucketed in the three area. If the fintech has thought through in the three area that they're not building a product which will create consumer protection issues, no problem. If they're not creating product which will go to create AML and KYC issues, largely will pass through. And the last thing is quite subjective, but I think more or less most fintech don't fall into the category.
No, I think this is very encouraging for all the people who are listening. I guess these are the kind of issues that they would like to see as well. And this is the kind of welcome that I would like to have as well. How have Indian fintechs performed in Singapore, you think, so far? It's early
A lot.
stages.
Well, I think a lot of, I mean, when you say Indian, it could be broad because there could a lot of fintechs founders are from Indian origin here,
Right.
and they're doing. I mean, I see them here. They're doing exceeding well. I think Indian fintechs, the strong tech DNA does help them a lot, and I personally, and I saw in your website, if one market I would put a huge bet on the growth of fintech, it has to be India. I can't see any other market. It just India has to find a way out through their collective effort at a federal level and at the state level to find a common construct where this opportunity can be taken. And by the way, this opportunity not to create value for the fintechs themselves, this opportunity is also create a value for the people themselves, create better
Right.
credit, better financial services, more inclusion, more pension construct. This is good all over the world, all over the place. It's a win-win for everybody. So find a way to expand the opportunity India has within the country, and I think there's only one way up.
No, thank you so much on those encouraging words. I think we are running out of time. Thank you so much, Swapnendu. This was very interesting conversation. The message that I take away is that, regulators and regulatory issues should not be a constraint when we look at any other country. We should consider them as an issue that we need to address, but it's easily addressable and it is manageable, and we should go with confidence
Yes,
into any other
yes,
market.
yes. Agree. Just explain the regulator in three terms. No KYC, no AML, no consumer issues, no stability issue. They'll be okay.
Thank you so much. Thank you so much, Swapnendu.
Thank you. Thanks for having me.
Thank you. Bye-bye. Bye. Bye. Over to you, Anshuman Jyoti. Anshuman Jyoti, are you there? I think we can leave the meeting. Thanks, Swapnendu. Thanks.
Okay.
We are live now. We can start.
All right. So good afternoon, everyone. Welcome to this. Good afternoon, everyone. Welcome to this international session on Philippines. It's my pleasure to introduce to you Amor Maclang. She's the co-founder of Gisa Maclang, one of the leading PR, marketing communication, and market research companies in the Philippines. Amor is a brand architect, but she's also experienced in risk, crisis, and reputation management, and is a marketing and communications innovator. Very interestingly, she's the first communications professional in Philippines to become an ISO 31000 crisis management practitioner, and she is also a certified enterprise risk management professional. Amor serves as executive director for the Fintech Philippines Association, the largest association of its kind in the country. So I'm very excited to now invite her to talk to us about building your brand as a fintech and also collaboration opportunities between India and Philippines. So Amor, the stage is yours.
Yes, Adil, thank you so much. Good afternoon to everyone, and I trust you all are doing very well despite a very colorful 2020 and 2021. I feel extremely honored and grateful to be here representing the Philippines via the Fintech Philippines Association, and more so to be speaking in front of such a highly esteemed audience that was organized by the government of India, made up by no other than board directors, top executives, and decision makers in business. The COVID-19 pandemic undoubtedly put our lives to a grinding halt in one way or another, and our lives are forever changed, especially in the way we conduct our day-to-day. To some degree, it has actually forced us to transform into people that we never thought we could be prior to the pandemic. And if there's one area that I believe we could all agree on, it's that the pandemic has turned almost all of us, through the power of no choice, into tech-savvy, internet-hungry, media-consuming, and even more gadget-obsessed beings. You probably have heard how the Philippines is a social media capital this side of the world. And it has certainly been put to good use, especially during the pandemic. The pandemic has certainly also brought about good things, especially in our industry, fintech, which I would have to say is one of the net beneficiaries of the pandemic. And it has forced us to adapt to the changing times more quickly than we ever could think. Most important to note is that the pandemic radically hastened what we call a Philippine fintech revolution. As a result of this, we from the Fintech Philippines Association foresee a positive long-term growth for the fintech industry in the coming years, due to the acceleration of our digital transactions and the overall digitization of our common behavior. The way we move food, the way we move ourselves, and the way we move our money. The growth from the fintech sector will create even more opportunities for many companies. And this is where our association comes in, to empower these companies to thrive in this new digital normal. At Fintech Philippines Association, we want to empower and enable companies to incorporate financial technologies regardless of whatever their vertical is, and allow their businesses to scale and improve their offerings, thereby providing safer, more secure, and smoother financial experiences to their clientele, and at the same time, strengthening their social impact and create better shared value Now, when I was first extended this invitation, I didn't even know and realize how big it was, but the answer was a resounding no. I've been to India not less than 6 times, not including layovers. And I tell you, I'm absolutely in love with the country, and it's not just for the food. We have a shared fintech and financial inclusion journey. I remember the last time I was there was in Hyderabad in 2019, and it was during the Independence Day, the National Day of India. And it was the day I remember very distinctly when you certified or ratified your national ID system. And I remember speaking to myself, wow, we are going through the same journey. And there's so much that the Philippines can actually learn from the Indian experience. Without a doubt, India remains to be one of the top fintech destinations in the whole Asian region. The 2,000 strong fintech startup industry in India cuts across many industries, including insurance, investment platforms, personal finance, payments, and lending. Based on research made by RBSA Advisors, the leading independent transaction advisory firm in India, the fintech industry of India spurred about 10 billion in the last 4.5 years. In fact, in the first half of 2020 alone, India attracted close to 1.5 billion worth of fintech investments, a huge 60% increase for the same period in 2019, amounting to 919 million. India and definitely China, we look to as the Philippines as our technological antecedents. It truly is the generation of Asian technology for Asians. China, as one of the biggest and highly populated countries in the world, is still the biggest market for fintech, but India is rapidly catching up and showing much potential. In the first 3 months of 2020, India was able to overtake China in terms of fintech funding by attracting a massive amount of investments worth 333 million from 37 deals, while China only raised 270 million worth of fintech investments from 26 deals. In the Philippines, India already has a strong and noticeable presence, not just culturally, but in terms of business. It's very important to note that almost 75% of global multinational corporations in the Philippines, that's 3 out of 4 of every multinational corporation in my country, they're either headed by Indian nationals or of Indian origin. Thanks to the various companies that started off in the BPO and the IT sector. We truly are sharing a very shared journey in technology and innovation that started with a BPO and outsourcing industry that now is extending its legs in the payments and the fintech side. I'm sure some of them are present in the audience today, like Genpact, Tata Consultancy, HCL, Infosys, Wipro, Tech Mahindra, IOPEX, Hinduja, Global Solutions, WNS, SPI Global, Aegis, and XCL. There are also other US and Singapore-owned businesses here that are being run by exceptional management teams of Indian origin. And I'd like to give a special mention to one of our members in FinTech Philippines, one of the biggest supporters in the FinTech movement in the country. And I'd like to cite Grover as a testament to the pioneering excellence and innovative and collaborative spirit of the Indian FinTechs. Grover, which is part of the Nityo Group, created the genius concept of banking from home, or what we call Bank Genie, a digital banking solution which is now the hidden secret sauce of many digital banks in the country. This is especially useful now that the country is still under quarantine and mobility is limited. Bank Genie enables customers to perform their various banking needs from the comfort of their home. Grover is also a firm advocate of financial inclusion and has in fact been delivering innovative and modern digital solutions to future-proof their clients' businesses by leveraging on cloud technology. Making use of the cloud for your businesses helps in optimizing operational costs and processes and truly supports the Philippine government's movement towards a cloud-first government. So many opportunities for you to take part in the cloud movement here in the Philippines. At Fintech Philippines, we are championing the Philippines as an incubator for technology with much to learn and much guidance to receive from our Indian tech antecedents. At the same time, technology is here to serve the underserved, the underbanked, the underinsured, and the undersheltered. Fintech has created opportunities for people who are on the spot. Some examples of Fintech's inclusivity are the renowned Sari Sari stores and online entrepreneurial shops that have turned into banking interfaces. Now, who is Fintech Philippines? Many of you are probably wondering. We are a non-profit association that's the largest in the country with close to 170 members. So when we first started 2 years ago, it was a bunch of straggling coders and developers, a little over 30. And now after 2 years, and with 170 members, we have come to be the voice of not just fintech, but also more importantly, businesses that actually aspire to tech up for both country and industry. Our association came into fruition following 2017, which many know to be the crypto spring in the Philippines. And since then, we have been advocating and valorizing local fintech startups and industries that actually would like to use fintech as an underpinning in many of their businesses. One of our organization's goal is to really develop the Philippines as one of the most known technology and innovation hubs this side of the world. We are working to develop skills to build a fintech ecosystem and develop relationships with like-minded countries like that of India. Aside from our relationships within the community, our organization also builds relationships externally. We have signed an MOU with the Beijing Internet Finance Association. And if it were not for the COVID pandemic, we would have been in China in 2020 of March. But of course, we all know what happened then, which is the start of the longest lockdown in the world. We hope to be able to start a similar relationship with India, with an end view of not just sharing knowledge, not just with an end view of business matching, but also hopefully, God willing, be able to facilitate business exchanges between our two countries. The Philippines can grow and develop from these worldwide relationships, especially given the fact that we're one of the founding members of AFIN. That's the ASEAN FinTech Council. One of the most exciting things happening this year is our partnership with the Bangko Sentral ng Pilipinas to conduct an industry sandbox where we have a very test and learn approach overseen by the Bangko Sentral ng Pilipinas, one of the most progressive regulatory bodies in the world. The purpose of this fintech industry sandbox is to facilitate trial of new fintech-enabled solutions in an environment that's safe and an environment that creates innovation for startups and other stakeholders. Our four main objectives are to support the ability to test new financial products and services, facilitate access to crucial data that will enable the creation of innovative products, reducing the time to deploy new products and services, and lastly, to prioritize support to financial and social institutions. If many of you Indian fintechs are looking into creating these experiments in the country, please contact us and join us in this partnership. Just last year, we staged the World FinTech Festival Philippines in partnership with the Monetary Authority of Singapore. The festival put the spotlight on key executives and decision makers from Asian nations as they discuss how to use fintech to produce societal growth and impact. The Philippines was able to showcase its best fintech practices to an not dissimilar to this one, and thereby cementing, hopefully, the beginnings of our digital footprint over the course of the 5-day festival. Another one of the major highlights in the past year was the launch of the Asian office of the Global Impact Fintech Forum, or GIFT, of which the Philippines is also a founding member. This is led by our founding chair, Malik Kotadia, who is a Singaporean of Indian origin as well. The Global Impact Fintech Forum is a global nonprofit think tank with 1,000 members from 40 countries that converge to come up with solutions to humanity's key challenges by leveraging disruptive tech and fintech. Now, in my last meeting with the Indian embassy, we are also eager to see how we can collaborate with the Indian government and specifically with the Indian ecosystem for fintech. Not only does the Philippines have so many similarities with India in relation to our culture and traditions, but we also share a common ground when it comes to science, technology, and innovation. In 2019, our country hosted the second ASEAN-India InnoTech Summit and the second ASEAN-India Grassroots Innovation Forum in Davao City, proving that collaboration between our countries is very much alive. Also, in the same year, the President of India entered into an agreement with our President Rodrigo Duterte, for the renewed cooperation between India and the Philippines by signing the Program of Cooperation in the fields of science and technology for 2019 to 2022. There is a point of collaboration between countries and across industries here. The country of India will always be about innovation to us and technology, and the Philippines would definitely need the support from industry experts coming from India. The pandemic brought about the need for technology in various verticals, and the Philippine regulatory environment is very supportive of these endeavors. To name a few, many of you Indian fintechs and technology companies might be looking into going into the Philippines. The Bangko Sentral ng Pilipinas, we are so proud to say, is one of the most innovative regulatory Actually, I dare say more an enabling than a regulatory body. I wanted to share with you some of the innovations and also the initiatives that are being undertaken right now by our BSP. Technology-aided KYC that enables Filipinos to open accounts remotely. Our national retail payment system has actually seen an enormous growth that in the country, especially with the pandemic. QR code adoption, creating a more accessible way for online transactions, and the growth of e-commerce has really been truly unprecedented. We have gained in 6 years what usually takes, sorry, we have gained in 6 months what usually takes 6 years to grow. In digital banking, supporting digital banking initiatives, which proved to be essential in the current pandemic. One of our members, Gcash, announced during the World Fintech Festival that it has actually breached the 1 trillion peso mark, right? In less than a year's time. We're also very supportive of virtual currency exchanges in the country. The pipeline for the Banco Central. They're also proposing the creation of an Open Finance Oversight Committee, or OFOC, an industry-led self-governing body as part of the country's open finance framework. The OFOC will set its own standards and procedures and promote non-discriminatory membership by ensuring that key areas of interest of the financial industry are adequately represented and that all members and applicants for membership are treated fairly and consistently. Like I said, one of the things that we really look to expedient approval in 2019 of your national ID system. The national identification will not only provide a foundational ID system in the country, but will also ensure that all Filipinos will be included financially and are given the dignity that they deserve by being recognized in terms of financial transactions. The Bangko Sentral ng Pilipinas also has updated and revised its rules on the exchange of virtual assets by expanding the guidelines covering virtual currency exchanges and the registration and the granting of license of virtual asset service providers. As we tread this new path to progress, we enjoin you to take part in the shaping of our Filipino fintech ecosystem, and we invite all of you to become one of our partners in helping the world move forward in the digital age by joining not just our association, but being part of one of the largest growing fintech communities in ASEAN, and that is the Philippines. I would like to thank all of you for being such an amazing audience, and the people and our partners in India for being such an amazing big brother, not just in terms of fintech, but in business overall. Maraming salamat po, and have a great afternoon to everyone. I turn it back to you, Adhil. Thank you.
Thanks, Amor. I think that was a really nice talk regarding Fintech Philippines Association and what we can do with India. I actually have a few questions for you, and I'm going to more ask these questions from your professional background as a marketing professional and a crisis management professional. So in terms of crisis management, right, and I think a lot of the fintech companies would be interested to hear, is this something that we plan for in advance, or is it something that we need to get to when the crisis starts?
Thank you for that question, Adhil. Now, I'm happy that there's actually a renewed interest in enterprise risk issues and crisis management. Historically, many of the financial institutions look at risk management primarily from a financial and an operational perspective. And we've recently seen that to be a very a short-sighted way of approaching crisis. You know, as you tread into new and nascent technologies, the technology is never ever going to be infallible, right? And it is important that you not only have a risk, issues, and crisis plan in your pocket, but more importantly, you have to be able to update it more agilely and more briskly, right? Um, we've seen some of the leading blockchain crypto players in the country as of late. I mean, a few weeks back, you probably heard of the shutdown in many of the crypto exchanges. There were a few, not just in the Philippines, but also in Hong Kong and all over Asia, right? And this was actually brought about by the unprecedented interest in Bitcoin and by the dramatic rise in transactions that could have very well overwhelmed the system. No, so what do you do in instances like these? So it's very important, first and foremost, that you are a regulated company and that you work very closely with your regulators. It's important that in instances when technology might fail you, and trust me, it would, there is no technology that is infallible. It is important that your public and your stakeholders see you doing the right thing, and that your default is to work closely with your regulators towards an end view of protecting your clients and your stakeholders. So as we thread through all these nascent technologies, it goes without saying that having an enterprise risk crisis plan that goes beyond just operational and technological is critical. So there is the political, there's also the reputational side to things. Because, you know, at the end of the day, the story of cryptocurrency is all about trust and faith, right? And that is the most important currency of all that we need to protect. Adil?
Great answer. I'm only going to have time for one more question.
Sure.
You advise people on how to build a brand as a brand architect. What one advice would you like to give Indian fintechs in terms of building their brand?
All right. Now, I thought this through because I think there is something that India could really give the West a run for its money. You know how the secret sauce of many multinational corporations, not just in the Philippines, but I dare say in the world, is actually Indian talent, right? So many talk about Silicon Valley, and many talk about, for example, technology coming from the West, and very recently, Chinese technology. But I truly, truly believe that India, um, with all of its pioneering work in technology, could truly be a formidable brand when it comes to innovation and technology, right? So I mentioned how I recently visited Hyderabad and Gujarat, and apparently even Bangalore, right? As a tech and innovation hub, I think given the fact that you straddle both the West and Asia quite seamlessly, like no other country can, you could be a standard bearer for Asian technology in general, and in the process, carry many of us, right? Many of us in the region. So we look to an era that hopefully will be led by Indians and Asians in this technological age. And we look forward to being part of that ecosystem that you will build.
Thank you. I'll use that input as we build out at Bank Bazaar, where I work. So, Amor, thank you for being such a compelling speaker. I think we're out of time, but we learned a lot from your talk. I also want to thank the Embassy of India for helping us arrange this video. I think the FICCI team has worked very hard to put together this event with international speakers, and the Department of Economic Affairs has really shown what can if the private sector and the government come together in platforms like this. So thank you, everyone, and this is goodbye from us.
Great. Thank you. Thank you so
you.
much. And
thank you.
We look forward to hopefully connecting with you through the government of India.
Yes.
And is there anyone here from the embassy? We look forward to having that lunch, and hopefully we can plot our 2021 partnership moving forward very soon.
Thank you.
Thank you. May I log off already? Thank you.
The team will give you a cue.
Okay. When I need to start, you should let me know.
Yeah, just give a moment. Anshuman, take it.
Yes, we are live.
Yeah, you're good to go.
Hello, everyone, and welcome once again to yet another international session of this very interesting conference. I'm sure you have enjoyed the conference thus far. As you would agree with me, no cross-border conversation can be complete without talking about UK and India. Given our deep economic and political ties, the two nations should now progress this relationship in the new economy areas such as fintech as well. And therefore, FICCI has very rightly titled this session as India-UK Collaboration in Fintech Sector, Strengthening the Foundation of Digital Economy. Ladies and gentlemen, we could not have had a better person than the Lord Mayor of the City of London to share his views and perspective on this topic. It is my privilege to welcome Mr. William Russell, Lord Mayor of the City of London, at FICCI and at this conference. We are truly honored and deeply grateful to you for being with us here today, this afternoon and morning your time. As some of you may know, Lord Mayor Russell is the 692nd Lord Mayor of the City of London. And important to note that he is the 5th member of his family to be the Lord Mayor in the past 110 years. He has over 3 decades of different business interests, interest in finance, experience in businesses, and in experience in banking. He has held senior positions at First Boston Corporation and Merrill Lynch. Lord Mayor Russell, as we were talking about, I wanted to share with you that I too got trained as an investment banker at First Boston, and that was way back in 1992. Ladies and gentlemen, Lord Mayor Russell has several charitable interests. The one which touched my heart, and I thought I should share that with you, is his association as current deputy chair of a charity called Place to Be, a children's mental health charity. I'm sure you would agree with me, it is a very, very important area. Before I invite Lord Mayor Russell to address us, I would like to say that UK has been a well-established trade and investment partner of India. Several UK corporations, I particularly had a chance to work for some of them as an investment banker, are one of the largest foreign investors in India. We hope to see this partnership grow and growing further in the space of fintech as well. And therefore, this conference is extremely important. Without further ado, may I request Lord Mayor Russell to deliver his keynote address. Lord Mayor Russell, over to you.
Thank you, Sunil, and hello everyone, and greetings from a very wet and windy London. I'm delighted to speak to you today as part of FICCI Fintech Expo 2021. As Sunil said, my name is William Russell, and I'm the 692nd Lord Mayor of the City of London. And I'm in my second year. And despite the fact that that does not normally happen, that's because of COVID. And the last time that did happen was back in 1860, 1861, with a famous Lord Mayor called William Cubitt, who was of the building firm Cubitt, who built Covent Garden. But it's a privilege to do this second year. In my role, I act as an ambassador for UK financial professional services, working with international firms, both at home and abroad, to enhance the sector globally. Just last November, for example, I conducted a virtual visit to India, speaking with Indian firms interested in doing business with the UK. Before I begin, may I thank FICCI for bringing us all together virtually today. Today, I want to discuss the potential for strengthening our UK-India fintech relationship. For years, the UK and India have been important allies on the global stage. Our mutual appreciation for each other's cultures and people has led to a strong bond between our two nations, a bond which has cultivated a robust and flourishing trade and investment relationship, delivering jobs and prosperity across both countries. In 2019, bilateral trade between our two nations increased 10% to over £24 billion. To grow our international partnership further, we must look to the sectors fueling the future of finance, sectors such as fintech. Fintech has been invaluable during COVID-19 pandemic, from contactless cards to online and mobile payments, blockchain to open banking. All these developments have given people unprecedented power to manage their personal finances. This has allowed them to react quickly to the rapidly changing financial picture. We've also seen an increased rate of digitization, with the speed of adoption estimated to have happened 18 months quicker due to the pandemic. As we seek to recover the global economy from the effects of COVID-19, fintech will be one of our most valuable tools. Just as our response to the pandemic has been global in nature, so must our response to its recovery. Collaborating across borders to find new technological solutions to our financial problems, the UK and India are in good positions to make this happen. As the third largest fintech center in the world, India has an excellent fintech ecosystem. The country offers a 29% expected return on fintech projects, one of the highest returns in the world and far higher than the global average of 20%. And the overall transaction value in the Indian fintech market is estimated to jump from approximately $65 billion in 2019 by 20%, in 2019 by 20% to $140 billion by 2023. These impressive statistics are backed by the Indian government's support of fintech. Your government, in collaboration with industry, have built the world's most advanced payment system in the form of unified payments interface. And government has played an important role in enabling the disruption of payments, powering the growth of startups across the country. The Indian government's commitment to fintech was recently reaffirmed in the annual budget announcement. We are very excited to hear of your plans for a world-class fintech hub at GIFT IFSC, as well as potential for increased foreign direct investment in the insurance sector, with a limit increase of 49% to 74%. Your openness to international business, combined with your impressive growth and level of government support, make India one of the most promising global fintech markets. Home to the globe's largest financial center and a world-leading fintech hub, the UK is a natural partner for India. We have a thriving fintech ecosystem thanks to our broad and deep financial services skills base, talented software developers, supportive regulators, and supply of investment. There are now more than 1,600 fintech firms in the UK, a figure expected to double by 2030. And we have an impressive fintech adoption rate of 42%, well above the global average of 33%. Most importantly, our fintech sector has great support from our government and regulators. Just last week, in collaboration with the UK government, we launched the findings of the UK Fintech Strategic Review. The past decade has witnessed the rise of London as the global fintech capital. The review charts an exciting path to the next decade of growth. The review covers 5 topics: skills, investment, national connectivity, policy and regulation, and competitiveness, and has sought to understand how financial technology can better support the global recovery. The key recommendations promise to further accelerate UK and global fintechs. Some of these recommendations include creating a new scale box that supports firms to scale innovative technology, creating a new visa to make it easier for fintechs to access global talent, and reforming the listing rules to make it easier for fintechs to list in London. And Deliveroo was one of the companies that just announced their listing on the UK Stock Exchange. The Fintech Review encapsulates the UK's current fintech offer and where we want to be in the future. And I look forward to fulfilling the aims of the review over the next few years. Alongside the Fintech Review, last year, the City of London also teamed up with the Financial Conduct Authority, known as the FCA, to create a novel digital sandbox. Inspired by the effects of the pandemic, the purpose of the sandbox is to allow innovative firms to introduce and test new financial products and distribution methods in a safe regulatory environment. Teams have already made progress through the pilot, using tech to address key challenges such as improving access to finance for SMEs, improving the financial resilience of vulnerable consumers, and detecting and preventing fraud and scams. To understand more about the UK's fintech offer and the opportunities available to international firms, please do join us for UK Fintech Week 2021. Between Monday the 19th and Friday the 23rd of April, the UK will be hosting a week-long conference to discuss the future of fintech with a host of finance and tech experts, academics, and government representatives. It will be a great networking opportunity, and I do hope to see many Indian representatives there. Ladies and gentlemen, it is clear there is great opportunity for fintech collaboration between India and the UK. Building on the already wonderful work of the UK-India Economic and Financial Dialogue and the UK-India FinTech Awards 2020. As the global economy seeks to recover from the pandemic, fintech will be a hugely valuable tool, particularly in the recovery of small businesses, the hardest hit. They are the engines of our economies, and we need to support them in the digital transformations imperative to survival. This is just one of the many challenges we must transcend borders to resolve, working together to improve market access and share expertise, and ultimately ensuring the success of our global economy for many years to come. Thank you.
Thank you, Lord Mayor Russell. This was absolutely brilliant. You covered right from growth of fintech to the impact of COVID-19 and the regulatory framework. And thank you for your kind invitation to the Fintech Week, which you're going to be celebrating in the month of April. And I'm sure a lot of us locally there, as well as I think people from here would travel if the travel would be possible. Otherwise, if there is a facility, would definitely like to dial into it virtually. The next 15-20 minutes, Lord Mayor Russell, with your permission, we would like to request you to talk through a few things. There are a few topics. The way we have come up with these topics is through the questions we have collected from the audience through the morning and also prior. And then we have summarized them into 4 different categories. And I thought I should request you to just share your perspective on that. Thank you. So no conversation at this point of time would be complete without talking about COVID-19. So one of the things a lot of people in the audience, they wanted to know the impact, and you touched upon some of them in your address, the impact of COVID-19 on the fintechs in UK. Slightly more in detail, how did COVID-19 impact the fintech? It did grow, as you mentioned, that it has grown 18 months ahead of schedule. We would be happy to hear your views on that.
So I mean, it's very interesting because of COVID-19 and because everyone in the City of London, where you know, I'm based. I'm not there at the moment, but the Mansion House based. A lot of people work from home. Work from home, if anything, has become too successful. And because you're working from home, because of lockdowns, and as you know, we're still in very much in lockdown, people have done, digitization has come forward. And so what's happened is fintech has come to the fore. By the way, rather like, you know, climate change has come to the fore as well, but fintech has come to the fore. And you know, green tech and fintech are very much interlinked, as you know, Sunil. But we've seen many companies thrive, and particularly whether it's you know, in digital payments, more and more people, as you know, are buying things online. You know all the figures, and our retail sector in the high street here are shutting stores all the time. So in a way, it's highlighted much more around that. And people haven't been going to the ATMs to get cash. Our society is pretty cashless already. It's become more so. So I think, as you say, it brought things forward by 18 months, and that momentum will continue. And I mean, that's in a way why for India it's so exciting as well, because the financial inclusion element, the size of your population, etc., is a huge opportunity for fintech. But it's just brought everything forward. And by the way, I've seen that with India. Just in my, you know, being in a second term, the conversation I was having just before we went into COVID and what's happening now. It's extraordinary how things have moved very quickly.
Very interesting. If I can share one interesting anecdote from the Indian perspective, Lord Mayor Russell, you talked about financial inclusion. During pandemic, one of the areas which Government of India really used fintech very, very well is to transfer money to the accounts of people who needed it, all electronically. So we had this unique combination of what we have a unique identity number for every individual. It's called Aadhaar card. Aadhaar number is connected with their digital mobile telephony, and along with the bank account. So it's a combination of that trinity. They could directly transfer to over, if my numbers are correct, at least 500 million people, the direct benefit, directly their account could get credited. So that's the big thing during difficult time. People could manage to get, despite the banks were shut, they could manage to get money in their bank account, and they could use it and when they needed it. So
I mean, and the same here. I mean, when it's to come, we call them C-bills and the loans the government are given out. It's all being done digitally. So yes.
Yeah, very interesting. Another area, Lord Mayor Russell, where people were very, very keen and wanted to know your perspective and where you sit, actually, you can give a lot of input there, is what can the UK do to support international firms, the firms from India and other, to expansion plans in UK, in your country? Any specific area, thoughts, plans, which you may want to outline?
No, I mean, look, the City of London Corporation is very much part of that, and the team will help support that. So if Indian fintech firms want to expand internationally, particularly in the UK, then we have the Fintech membership, Innovate Finance, who run the conference. We have the department, DIT. We also have the City of London Corporation. So there are lots of mechanisms of asking advice on how you can come into London. In fact, funnily enough, I was I'm on a virtual trip at the moment to Latin America, and I've just been in Chile, and that similar question. But what's interesting is that many companies, this particular company is doing very well in Latin America, but they want to have a foothold in Europe. They see London as that foothold for fintech, because from there they can see how they want to play it for the rest of Europe. Remember, Europe is 500 million people plus. So look, we have the facilities, we have the ecosystem, and I think we're very collaborative, and we have the regulatory environment as well. So all those things come together. It is an opportunity to test London. But the other thing, which is really important, is we also have the investment firms are now coming. So I was on a trip 18 months ago to San Francisco, and Sequoia have set up an office. A lot of the VCs are here, so because they see what's going on in London and they don't want to miss out. And then there's that whole opportunity to scale globally. So my advice would be, to maybe follow up from here, is that Innovate Finance, very much they're the membership association for fintech, but Department of Investment and Trade and the City of London Corporation are very involved in helping fintech set up in London where we can.
That's very interesting. And
by the way, it's not just London, Sunil, it's the UK. Okay. And this is where it's so exciting, is that, in Scotland, there are 146 fintechs. As I said, there's 1,600 in total. But, we have a great ecosystem in Leeds, in Manchester, in Northern Ireland, in Belfast, and in Cardiff. So it's more than just London. There are so many opportunities at the moment. That's why it's become so exciting for us all in the UK.
Yeah. That's very, very, very interesting. And now, in fact, just to share the Indian part of our understanding in India as well, we have something very similar. All these VCs from you talked about, Sequoias of the world, and they are all there in India as well, funding Indian startups. The regulatory framework has started becoming very similar. So our regulator, the capital market regulator, has launched a new system called Sandbox. Yeah. So if it's a fintech which wants to experiment something which is not within the regulatory framework currently, they would get that time to really experiment. And if the result shows there's something which the regulator should reflect on, then they're open and prepared to do that. And I also wanted to add that your deep capital market, London as a main finance center, that itself is quite attractive for fintech and others over there, right? The other area which is coming up and a lot of discussion happening, and the interest was to really understand what's happening in UK. We in India, like you said, 1,600 fintech firms in UK. We have number of firms in India and growing. And in fact, very interestingly, the trend to become unicorns is very high. I mean, now more companies are they're becoming unicorn faster than what used to be the number of days which they were taking earlier. The fintech, particularly post-COVID area, is on rise. We as advisors, we do now more meetings with the fintech companies, clearly. Do you see the same trend? What is the emerging trends in the fintech area in UK post-COVID?
So we are seeing the trends. I mean, I think it would be fair to say we're a little ahead of India at the moment because of where we've come from. But and the other thing is that it is a very exciting space, and our startup culture is very exciting. But I remember probably 5 or 6 years ago being at a conference, and there were 85 peer-to-peer lenders, and everyone in the room knew that not all of them would make it. So there is this balance on different sectors. So I think probably some of the opportunities are around insurtech, which is a little bit behind some of the other tech areas, and there's lots going on in that sector. Regtech as well is very exciting. I mean, just trying to make things more efficient as people, and that's moving forward dramatically. So there are some interesting ones, and actually some of those companies are making their way to India. So Tide, which you may have heard about, Tide is being into a limited test launch in India, and then Credit Enable as well, AI-driven SME credit marketplace. They're working in India as well. So you're starting to see that trend, but I think also we'll start to see that trend, which I'm sure we are, and you'll probably know more of the companies that are doing that, of Indian companies coming to try out in London as well. And it is an exciting time, and it's definitely, as we said earlier, been driven by the pandemic. It's brought it all forward. But India also, you have a bit of advantages that when it comes to communications and that smartphone, we've still got landlines. Well, we don't. I mean, but we're now spending billions on broadband to make sure the connection is better. Yes, we have the mobile phones like you have, but I think we've got to, we now need to make our broadband more efficient to make us more effective as well.
Yeah. I mean, one big difference between the two countries is just the size, because we've got, of course, almost 500, north of 500 million people using internet. So if you have 500 million people using internet, so you see that those many connectivity. Clearly.
Yeah. No, I mean, it's a great opportunity, and India is in a very good place, I think, to really move this and scale this up over the next number of years.
Yeah, and one area where we have really done well, and I think is growing, is payments. The payments, and particularly during COVID, and prior to that also.
Don't worry. I mean, Sunil, I watch the cricket. I see PayTM all over the shirts of the Indian cricket team. So the message is loud and clear, and we're looking forward to hosting you in August. I'm not convinced we'll win, because India are very special at the moment, but we'll try our best.
We wish you all the best for the. Just the one final point.
Sure.
This is the last part of the question which people had sent across. Is they wanted to know broadly, more specifically, what are some of the specific trends which are emerging in the UK fintech space? Anything additional which you would want to add?
What trends?
Yeah.
That's an interesting question. Well, I mean, it is the different form of payments. There's also, asset management, particularly around climate change. So we've already got something like Nutmeg, and then we've got various other. I met a very interesting company called Crowd Property the other day in Birmingham. And they've been going since 2015, but the people who set it up are actually property experts. And then the tech has followed, but they've had zero defaults. And what's happening is and I think I mentioned it in my speech, and you may have mentioned as well, the SMEs are huge beneficiaries of fintech, particularly in the lending space. And you know, Tide is in that space, is a banking platform as well. But because, you know, in some what we have here in the UK is some of the big incumbent banks just aren't interested in lending to a developer, but there's a huge opportunity for smaller fintechs to do that. We've just had another round for Starling Bank, so that's been great for Anne Bowden and her bank. So I think that that's what's moving. But then the green tech is a trend that's coming along, and I think green finance and the green sector is a huge area of opportunity. As Mark Carney says, when it comes to climate change, you know, this is the investment opportunity of a generation. So I always think fintech should be called TechFin anyway, because it's all about the tech, but we will call it fintech. So I think you'll see those opportunities in climate and the carbon markets, the trading of the carbon markets, what's going to happen there. And I see, you know, the carbon price today is up again. People are beginning to work out what's going to happen around climate change. And that is also another opportunity for fintech and that sector.
That's a brilliant answer. And that's a good segue. As you said, green tech, that's a new terminology I have learned. FICCI actually embraces green in a big way. So we offer what is called green certificate. So in your name, the trees would be planted and a certificate will be given to you. Now we can actually send that across to you electronically. So that's a green.
Well, I mean, it's going to be, so green is, you know, it's going to be very important. There's a whole generation who want to save the world. And the accreditation, London Stock Exchange just got the first stock exchange in the world to get the green accreditation. But there's huge momentum here, and you're right. I think it's a great opportunity for all of us to get involved. I always say we've got it's financing green and greening finance, and that's includes fintech.
Yeah, absolutely, brilliant. I think with that we come to the end of the session. But this was incredible. We couldn't have done, as I said in my beginning, we couldn't have got a better person than you to really enlighten us and really share your views and perspective of what's happening in UK. This was hugely useful for our audience. Thank you once again for sparing your time for this conference and for FICCI. Really, really appreciate it.
So, Sunil, it's a pleasure, and I generally believe that you know, the relationship with India and the UK is getting stronger by the day, and I really look forward to collaborating with my Indian friends. Thank you.
Likewise, thank you very much. Thank you.
Thank you.
We can start now.
Good afternoon. Okay, Nati, over to you, sir. We can start. Thank you. Okay, thank you. Very good afternoon and good evening, ladies and gentlemen. I have pleasure in introducing our guest speaker, from Germany, sorry, Dr. Sebastian Schaffer, the Managing Director of Fintech Community Frankfurt called Tech Quartier. Dr. Schaffer is a founder, business angel, and lecturer who specializes in entrepreneurship and building startups and innovation networks. Dr. Schaffer has worked in the startup industry for more than 10 years. His experience includes heading the incubator at Goethe University and being a co-founder and shareholder of the startup investor platform. Today at Tech Quartier, he is primarily involved in connecting fintechs with established financial institutions and is driving cross-institutional data and platform initiative within the financial big data cluster project. This evening, Dr. Schaffer will share with us his views on creating an ecosystem for fintechs and digital banking, building blocks for a successful partnership. We look forward to your views and guidance, Dr. Schaffer. Over to you, please.
Mr. Tangsali, thank you for the kind introduction. I need to check whether this works. Yeah, you already introduced myself. I just want to add I'm a behavioral economist and studied Japanese studies, maybe not so much related to fintech, but over the last couple of years, I really became acquainted with the whole fintech scene and innovation. And what really has been a common thread throughout my life was building communities in different setups, but most recently at Tech Quartier. And this is just to briefly share our short history of Tech Quartier so that you all know where we come from. Founded in 2016, we experienced it at that time a lively discussion in Frankfurt, but not only in Frankfurt, also other cities in Europe, where it was about how to build an ecosystem, support and grow ventures and foster innovation. Don't misunderstand me. Frankfurt always had great entrepreneurs and companies like 360T. This might be a name, a brand for some of you. It was actually acquired by Deutsche Börse in 2015, and it was one of the early success cases in the fintech sector. But what lacked at that time in Frankfurt, also in other cities, was like the proximity and the connectivity among the fintech actors, but not only the fintechs, also industry, government, and academia. And so Level 39 served as a role model at that time, where we said we need something similar in Frankfurt. And prior to WeWork and other international co-working providers, we started Tech Quartier as a place, as a focal access point to bring the community together. And from there, we started quickly growing a community, adding services that were meant to support and help the different actors to connect and collaborate. As you can see in these on this slide with the different pictures, we managed to onboard various partners, not only from the financial services industry, but also from other industries to have this lively community. And as I said, the main goal was to create innovation formats to support this endeavor. At its core, what we do at Tech Quartier is we serve as, you can call it an innovation broker. So with the main activities around connecting, but also facilitating the collaboration, facilitating partnerships, and in some cases also govern bigger projects. And I will talk about them in a bit. This is our network, and you can see it's not only based on the financial services industry, although this is one of our main like subsectors or sectors where we are active in. You see the who is who of the German financial industry is supporting TechQuartier, but also using TechQuartier as a platform to get in touch with each other, but also with the growing fintech community. That is our startup community, which grew over time to now more than 370 startups. A big chunk is on fintech. It's sometimes depending on how you label and categorize these new ventures, but fintech includes also topics like digital banking, lending, automation, insurance, personal finance and management, and it's our biggest sub-community, if you want. Yeah? But besides that, we have also other areas, other verticals like green tech. We have a lot about data-based like business models. Big data and analytics is an important and very fast-growing part of our community. In total, we have not only seed startups, we have also more mature startups, on average roughly 4.3 years like old. Yeah? So you can see, and this might also explain the number of venture capital which was like invested into our community. It's important to note that even though we have our headquarters in Frankfurt, only 30% of our community are located in Frankfurt, 50% in Hesse, and 30% are outside of Germany. That is important because we, as an innovation broker, we really try to identify the most exciting and most promising solutions on the startup market, on the fintech market, and to connect them to industry. Let me share a few more observations on the fintech scene in Germany. So not only on our community. We have today more than 800 fintechs in Germany. Besides Frankfurt, hotspots are Berlin, Munich, and Hamburg. And we can see that the market is maturing. Today, we have already a few unicorns, so companies that are valued above 1 billion that are not listed yet. With N26, I think many of you know this company. It's a neobank, a mobile smartphone bank, deposit solutions, and recently Mambu joined the group of unicorns. So you can see that the market is maturing, and we can also see that there's a trend towards B2B or B2B2C business models. So really addressing business clients. This whole trend of B2B orientation is also reflected in the number of collaborations between fintechs, but also between fintechs and established financial institutions. Since 2013, the number of reported corporations in the financial services industry has grown to over 2,500. So alone banks have collaborated in the one or the other way with 844 fintechs. These collaborations peaked in 2018 with 527 collaborations that year. Since then, we have a like a reduction, but that might be only due to COVID and temporarily. What is important to mention is that there's an important distinction. If we look at collaborations, we have to distinguish between operational collaborations. So this is when fintechs and banks collaborate, and financial investments, fintech investments. In terms of operative collaborations, we see like the majority, so almost 2/3 of all partnerships are around operational collaborations. Here you can see on this slide some of our corporate partners that have partnered up with fintechs, some of them on an operational basis. These are this is the left side, and more on the investment side, the right side. This is an excerpt. It's not a representative picture of Germany, but as Frankfurt and the financial center is mainly driving the collaboration, most of the activities are taking place here in Frankfurt. In the past, many of these collaborations focused on the following areas. Investments, everything we know around robo-advisory, automated investment schemes, finance, online ID, and more API banking and payments. A similar trend can be seen for the investments. Here we have also InsurTech and PropTech in one of the biggest categories. Maybe a few noteworthy remarks. More digitally advanced banks collaborate more. That's perhaps not so surprising, but you can see that since 2013, 2014, when really banks started opening up, being more open for collaborations, the speed of adoption, the speed of like collaboration hasn't been like a standard or a uniform development. There were some banks that did better than others, and there's quite a diversity also in the banking industry. COVID-19, I guess this was also a big topic of today's sessions, had like two results or two outcomes. In terms of fintech cooperation, so on the operational level, it spurred collaborative efforts. So here we saw more engagement, while on the fintech side, we saw some decline. That is maybe not so surprising because COVID-19 even increased the sense of urgency and the need for more innovative products, for more customer-centric innovations. Third remark, in comparison with the insurance industry, interestingly, German banks are less likely to collaborate with international partners. So only 20% are really open and willing to collaborate with international fintechs and partners, while it's 40% in the insurance industry. But let me maybe ask why we see this increase in collaboration. What are the key factors and the key drivers behind it? And to most of you, this might be not surprising. This development is, of course, driven by different factors. There's one, the innovation gap due to the aftermath of the financial crisis. There was a big lack of innovation over the last 10 to 12 years. We saw low interest rates and eroding business models. We saw an increasing threat through big tech. Technology companies, mostly from the US, but now more and more also from China, putting or entering the financial services industry, adding speed and complexity to the situation. And not surprisingly, Regulation. In regulated markets, it's not so surprising that supervisors and regulators play a key role. And as mentioned before, one of the trends we are seeing since a couple of years is that API banking is becoming more and more relevant. And here, maybe for those who are not so familiar with the term open banking, it's really about using APIs to share data with third parties and developing new apps and financial services. So what open banking does, it enables partnerships and innovative platform business models. And here we really see that regulation is driving not only a fintech evolution, but also a revolution in this sense. When it comes to open banking, Europe indeed holds the leading position in fintech regulation, with the Payment Service Directory 2 being really the most progressive and significant piece of regulation. So it enables embedded finance, one of the buzzwords today, as a service offerings, banking as a service to payments, and a growing variety of fintech variations. Still, and that is noteworthy, still we see big differences among European jurisdictions. While UK, France, Spain, and Netherlands are quite advanced, this is not or hasn't been really the case for Germany, and some figures might explain why this is not the case. Only 20% of users, of German users, would share their data with third parties. Although, and that's the nice thing about the PSD2 and the open banking revolution, is that even though the benefits are pretty clear, more simplicity, and an improved experience, it provides more control and overview when you aggregate accounts, for example, and it allows for greater personalization, and with that also greater experience. However, and that's the good news, Germany is picking up quickly. In particular, in the last 1 to 2 years, we see a great improvement here, and the banks are really catching up. And there are some good examples, even some best practices. One that also includes one of our corporate partners, Deutsche Bank, and one of our fintechs, Finanzguru, which started actually collaborating in 2016 after a hackathon. And what Deutsche Bank did was launch a API program to open up their data to third-party providers. And Finanzguru was actually the first startup to join. Finanzguru is a service, is a personal financial planning service that helps customers to save and forecast better their planning. And they do this through accessing data through the API program from Deutsche Bank. So that's a very good example of how open banking can work in practice. This said, it also shows that open banking is not only a technical challenge, it's much more. And it's what we normally talk about when we refer to digital transformation and the need for revisiting business models. So it's also a organizational and cultural challenge too. So how to become a more agile, how to become a more risk-taking company, and also, and that's maybe the most important, how to rethink value creation and value capture in an open, in a collaborative or platform-based economy. That is one of the key issues for many banks and players in the financial services industry. And it's also one that is driving Another example where TechWords here has been also highly involved. It's a project we started 1.5 years ago, and which now is publicly funded by the federal ministry. It's about building a financial big data cluster, a platform where organizations can share data, can use data to tackle new challenges, to tackle relevant problems like anti-money laundering, like evaluating climate risks and portfolio assets. It's about improving market integrity and a few more topics which require actually the sharing or like the connection of different data sets that are normally not within a company, but are distributed and fragmented across the industry. And here we are now working on a 3-year project together with many other partners, prestigious institutions, where we really try to solve the regulatory, but also the legal issues and challenges when it comes to sharing data. We all know in a regulated market, sensitive data, with all the GDPR issues, this needs a new way to tackle this issue. It needs a new technical approaches, and perhaps also new ways of defining and using regulation. These are maybe, like one example, as we wanted to briefly also touch on the ESG topics and sustainability topics. There's one use case that really tries to close the data gaps which are existing when it comes to developing these kind of more like meaningful predictions. So closing the ESG data gaps and develop new methods for ESG data generation. You all know that the ECB is putting a lot of pressure on the financial services industry to measure and report these risks. And at the moment we either don't have like valid data or even no data. So it's now about like connecting the different data sets and using new methods, ML and AI methods to come up with better evaluations and risk monitoring methods. These two examples from TQ show that open banking and data ecosystems are becoming more relevant as they promise to provide better services and solutions to customers in the industry. And here we as TQ want to support this development. And we do this in our role by identifying, of course, on the one hand, emerging trends and needs from the banking sector. So we are in very close collaboration with our partners, really trying to understand what is relevant for them. So topics like open banking, API banking, or ESG reporting, everything around climate risk assessments are, of course, at the top of the list, but also blockchain applications, digital assets are trending at the moment. And besides identifying these trends and communicating it to our fintech community, we also try to facilitate the interaction and try to minimize the time to partnership with different programs, different specific offerings. For example, we used to run the Compliance Navigator Bootcamp. It's a little program that is meant to educate fintechs about the regulatory landscape in Germany it helps to connect banks and fintechs. And that's just to give you one example. There are many more we offer, and hereby really try to help our banks, our partners, to get in touch with interesting companies, also from the international startup scene. And I hope that this is also interesting to some of the Indian companies, to some of the participants that are also joining us today. Thank you.
Thank you. An exciting presentation by you, Dr. Sebastian Scheffer. Let me tell you that the time allotted for the interaction is going to be too short for me to really quench my thirst for the information which I would like to have from you. I mean, going by the spirit of the presentation on building blocks for a successful partnership, and your thrust on innovation, orchestration, collaboration, broking services, I would really like to hear from you for my fintechs that how can they really look for an opening for looking for having a collaboration with the financial community in Germany.
Yeah, as I said, I'm pretty sure that banks will be more open in the future than they were in the past. Yeah? But as I mentioned, there was this statistics where banks were compared with the insurance industry, right? And there's still a reluctance to really, open up at a very broad level. But I think, and recent developments show this, that the appetite is growing, and when we can support, and I'm not only talking about TechWartier, I'm talking also about other facilitators, other community builders, that this is actually a very good way to start conversations, because in the end it's still very much about trust building. It's about like who is actually behind the solution, who is running the startup. So if we can help with building meaningful relationships, if we can help with building trust, then the likelihood or probability of also getting more engagement from the corporate side will increase. As Mr. Tangsali seems to be disconnected. I can take any other questions if... okay, you're back.
Yeah. I was worried that I lost you. I hope I'm back, correct?
Yes, you're back.
Okay.
I can hear you.
I think FICCI can definitely do this human job to maybe offer you the couple of fintechs who may look for coming to Germany for collaboration, and you as a TIC, you can definitely support that. I come to a very interesting piece of the discussion on the open banking, which you have put up. And to add to that, you also desired that for that, the banks have to be digitally advanced. I mean, on that, while the open banking as a subject has been opened up in the country, I don't think that it has really taken up the shape as it should be. So can you really give some inputs to how exactly the open banking can be leveraged by the fintechs and can make a good collaborative efforts with the banking industry?
I think the Deutsche Bank API program is actually a good example. There was a recent white paper published. I really recommend this for everybody who's interested in how to leverage open banking and the API program. It's actually also compared to other institutions on a global level quite advanced. If you think about the time to like partnership or time to using the data, if you look at this metric, this decreased tremendously. In the beginning, when Deutsche Bank started this program, it was a couple of months until actually fintechs could access the data and deploy their algorithms or their solutions. According to this paper, they are now back to, let's say, 2 or 3 weeks, which is a considerable improvement. Having said that, this is still not representative for the whole industry. We see some other international financial institutions that are quite advanced too. But in Germany, maybe apart from Commerzbank and Deutsche Bank, these were at least those who were featured in the white paper. We still see some more leeway for improvement and action. But as I said, the whole open banking topic is taking up. Now, as some technical issues also open issues were resolved end of 2019, we will see much more in the future.
Okay, I'm very excited to ask you because you said you are a behavioral economist and you also told about the financial big data platform or cluster what you're creating, providing the inputs on the anti-money laundering, maybe integrity monitoring, climate and ESG. So I think it's very, very important area where the lending fintechs, because now fintechs are moving to lending. Payment is probably getting overcrowded. How exactly they should really look at these opportunities and work for a lot of predictive analysis so that the bank should look at the collaborative partnership.
Yeah, I mean, if you look at our anti-money laundering case, it's very much about using really machine learning techniques, perhaps in the field of federated machine learning, which might be the right angle to approach the financial big data cluster. As I said, there are still a lot of open questions around how to connect the data, how to make it accessible. But we and our key role in this financial big data cluster is to keep the funnel open, so that we can see what kind of interesting solutions are emerging on a global scale, and then see to what extent they can support the project with like new AI methods, algorithms, and solutions. Because here we see a big need for collaboration, and that's also the door opener.
Thank you. I think I'll take the last question because we are hitting the timelines given to us. The biggest challenge with the fintech community, besides funding, is meeting the regulatory requirements. And you have a different regulators for different activities. You have a central bank, you have an insurance authority, you have market regulators, you have tech regulators where you are talking about the GDPRs and the data security, cyber security and all. How exactly this multiplicity, of course it is not multiplicity, but different diverse regulators are there and fintech have to meet the expectations of all. How exactly this part you are handling so that the fintechs are at comfort?
Yeah, very good question. And that is also one of the reasons why we started building these formats like Compliance Navigator and other support programs, because we see that it's very hard for international fintechs to navigate through the complex regulatory landscape. We try, so with our programs, we try to bring together the different parties that are relevant for helping fintechs to make up their minds, to validate their readiness or compliance. But apart from our own programs, I think it's always good to have a look at the BaFin's website. They have also documented many of the points that are relevant. So I really recommend to have a look on their website. It's also in English. So here you get a good overview of what is required if you want to launch in Germany.
Yeah. Thanks for those good suggestions. Host, do we have some more time, or we need to say thanks to Dr. Schaefer? I think the platform is available to us. So can I have one more question, which probably is a struggle everywhere. While the fintech industries are growing, India happens to be one of the largest fintech community. I find that there is definitely an overlap. There is definitely some kind of a crowding. And how exactly these issues of overlapping and crowding should get addressed in the system?
Could you please repeat your question?
My question is that, as you know, that India is one of the largest center for growing the fintechs. We got 21 unicorns, almost 2,000 plus fintechs operating in different areas. And what is happening that gradually you find that the fintechs, their area of operation or their identification of the problems have got a lot of overlaps. And thus, at times you feel there is a crowding of the players in the same arena. And thus, I think this issue of overlap and crowding must be there in all other geographies also. So is there any way that it can be really properly addressed and you keep the entrepreneurship alive among the startups?
Yes, also a very good question. I mean, we are always talking about, the growing fintech ecosystem. We have now 800 fintechs in Germany, but it's important to notice that or to note that also 300 had to stop operations that got bankrupt, right, or didn't continue, right? So it's a normal development that there in the beginning a lot of companies emerging, a lot of startups emerging, and then you see maybe one or two will survive and will take the majority of the market share. It's in the payment space we see this. Unfortunately, Germany is not playing the biggest role here. We see it in the investment space, robo-advisory. I remember in 2015, 16, we had a lot of new robo-advisory startups emerging. Now only a few really managed to grow and scale. So it's normal, right? And what we also see is like a growing acquisition activity. So fintechs are collaborating with other fintechs, and also acquiring fintechs. So I think it's a normal development in a maturing market, and it's good.
Thank you. Thanks for your wonderful inputs. With this, I would like to close this session, and my sincere thanks to Dr. Schaefer for all your inputs. And we look forward that it's a beginning of the collaboration, and the TQ will definitely provide all possible knowledge inputs and relationship to the FICCI for supporting the fintech world of this country. Thank you very much, Dr. Schaefer. Thank you.
Thank you, Mr. Tangsani. It was a pleasure.